asking me, okay, when can I travel? I want to go on tourism. When can I travel? I want to go on business.
Ma'am, we are online now. We are live
okay.
now.
Okay, so please.
So good morning, all the delegates who are joining us from different parts of the world. I welcome all of you to the Masterclass for Principal India Aircraft Leasing being organized by Ministry of Civil Aviation, IFSC Authority, GIFT City in association with FICCI. I would also like to place on record our thanks to Airbus and Boeing for this initiative. Now, without wasting any time, I start with the formal proceeding and introduce today's moderator. Today's moderator doesn't need any introduction for the global civil aviation community. Shrimati Vandana Agarwal, she's a senior economic advisor in the Ministry of Civil Aviation, Government of India. Presently serving as a senior economic advisor in the ministry, she is the divisional head for economic regulation, air cargo, competition issues, tax and GST matter, aviation financing, aircraft leasing, aircraft manufacturing and MRO, developing aviation passenger and cargo hubs in India, and data ecosystem development. She has served in various ministry departments of the Government of India, gaining on-the-job knowledge and experience of economic administration, particularly infrastructure development, trade policy, industrial policy, fiscal policy, foreign investment, external debt and capital markets, and central-state financial relations. She has been a trade negotiator for India on the Doha Development Agenda on the World Trade Organization for about 12 years, and also held responsibility for settlement of inter-government dispute under international trade laws. With this, I now hand over the mic to today's administrator, moderator, Vandana Agarwal, madam. Over to you, ma'am.
Thank you so much. Thank you, Vicky, for a wonderful introduction. It always makes me very diffident to speak after such an introduction. But let's get to the heart of the matter straight off. I would recall for our audience that we had on the 26th of February a very important summit on the issue of aircraft leasing. Rupi Raftar is the sobriquet that we have given to our subject and to the theme. And basically the idea is to make India the next aviation hub. And the reasons for that are not far to see. We are one of the top 3 aviation markets. We have the 3rd largest aircraft order book in the world. And if you discount the fact that the 2nd largest order book and India's order book is just 9 aircraft apart. So we are virtually among the 2nd largest, we share the 2nd place in a sense. The revenue potential for all the stakeholders is enormous in this arena. The numbers which have been shared a number of times, whether you look at the annual reports of the stakeholders, whether they are financiers, whether they are lessors, they are quite speaking in terms of where the numbers and the financials lie. Rupi Raftar, the journey has been a really exciting one, and I can say that in all the 35 years of government business that I have been engaged in policy space in particular, I have never seen such a huge amount of activity taken up in such a short space of time. Of course, I would recall that in 1991, when we did the industrial policy reform associated with the indirect and direct tax structures reform as well. I am happy to say that I was intimately associated with that as well from the Ministry of Industry and Ministry of Finance subsequently. So these are in a sense comparable journeys that we have taken. Here we are also learning in terms of regulation by putting in place a unified regulator. There is a complete change in the perspective with which we are looking to engage in this business, looking to ensure that all the entities in India who will be participating are benefited and also facilitated. There are a number of key attractions and incentives for leasing from out of the IFSC in GIFT City that have already been announced. So government has been putting its money where its mouth is in advance of all matters and putting, in a sense, an ecosystem out on a platter for all the intrepid entrepreneurs that we have, not just in India, but across the world. And I'm sure that we're going to see a huge amount of leadership and also, races to who's first across the finishing line, not just in terms of establishing the entities, but also in carrying out transactions which are different. So it's not as though the race is completed in one shot. There are multiple races being taken up. So who handles different types of financing structures, who handles different types of aircraft or engines or any other innovative structure of financing, whether it's bringing in long-term patient capital, whether it's bringing in innovative credit management techniques, whether it is new insurance initiatives and so on and so forth. So I hope that our discussions today will bring those out. The fact of India being a globally competitive aircraft leasing regime is obvious. We had shared all the details in the February 26th discussions where Honorable Finance Minister, Honorable Minister for Civil Aviation and a number of luminaries were there. We had shown how the all-in cost for a particular type of transaction, which is a 12-year leasing transaction, is actually comparable and better than the best in the world out there. The market potential exists. Importantly, we had also tried to show how the COVID-19 contagion pandemic, which has caused a dip in the aviation sector, did not stop the Indian airlines from taking up deliveries. India took more than 56 deliveries in the year 2020, which is again the third largest deliveries that were taken in the world. And we are again it's a very short distance between the second largest and India. So, and if you look at our recovery, I had shown certain charts in that as well, which shows that our recovery has been slow and steady, with all our airlines showing a very steady growth, whereas even if we look at the largest and the second largest, we see a huge wave or a dip creating certain amounts of uncertainties, whereas ours was steady, calibrated, and assured. Of course, we had outlined a way forward, and one of that was today's event, which is that we engage in complete detail with the OEMs, with the financiers, and with all manner of asset managers, with the actual stakeholders who have taken the initiatives to get their entities registered. And I'm happy to now give the floor for to the entity formation in IFSC GIFT City. But before I do that, Remy, who is, I would like to request Fiki, who are our partners in this, and so are GIFT City, IFCA, Airbus, and NIIF and Boeing, who are partners in this initiative. As you can see, I'm much more of a substance person than listing out all the issues for moderation. So let me without any ado, give the floor to Remy to give the welcome address to all our speakers and to our wider audience, and then we will go into setting the tone for today. Remy, over to you.
Thank you very much, Vandana. Respected Senior Economic Advisor Moka, Srimati Vandana Agawalji, my industry colleagues from the finance and aviation worlds. Ladies and gentlemen, good morning or good evening to my colleagues in the US. So on behalf of FICCI, I welcome you to this very important roundtable on India aircraft leasing. The story of the Indian aviation industry needs no elaboration to this audience. If the pace of growth of the last decade surprised the rest of the world, many are now watching with wonder the Indian aviation industry's agility and resilience through the unprecedented challenges of the COVID-19 pandemic. And much of this has been possible because of an enabling policy ecosystem that has allowed the Indian aviation and aerospace sector to develop as a safe, affordable, competitive, and sustainable industry. Today, India offers a stable financial market, a booming aviation industry, resilient airlines. India is also a major talent hub, and it is expanding its infrastructure. Aviation financing was probably the only missing piece of the puzzle that has now fallen into place. The ambition is bold. It is to take India from being a consumer of financial products to a producer of financial products when it comes to aircraft leasing. And I think that the timing could not have been better. India is growing, its people are becoming more aspirational. The Udan scheme is connecting newer towns and cities every other day. Developing a robust indigenous leasing and financing infrastructure is a natural extension of the ecosystem, and that will play a significant role in helping India emerge as an integrated aviation destination, not only in the region, but also in the world. And this is not just aviation. A world of lucrative opportunities awaits finance professionals and accountants and lawyers and other professionals in India who are waiting to provide the necessary supportive ecosystem for the aircraft leasing and financing industry. It is well known, I think, that the center of gravity for the aircraft leasing industry has been steadily moving from the west to the east. Today, 5 out of the 12 biggest lessors belong to Asia. They have grown in size because of frequent acquisitions and collaborations and partnerships. India, too, has the right ingredients to succeed as a base for aircraft leasing, sustain high demand for aircraft from airlines, strong passenger traffic growth, and aircraft leasing value as the most profitable segment in the aviation supply chain. And add to that liquid credit markets, low interest rates, and competitive taxation. But I'm sure India as a base for aircraft leasing and financing is a new subject that will raise many questions in your mind, and we will collectively educate ourselves, we will handhold each other, and I'm sure that together we can make it possible. So today's roundtable is a follow-up to the Aircraft Leasing Summit Mocha and FICCI organized in February, as reminded by Vandana. And today we have some of the best minds in the business to talk to us on a range of topics, to tell us how the rest of the world does the business of aircraft leasing, how the risks are managed, assets selected and deployed, and what India can learn from all this. So I think we can look forward to very detailed and incisive discussions on these topics over the next hours. And once again, I welcome all the dignitaries, speakers, and delegates to the event. And I hope that when we wind up for the day, we will be convinced more than ever about putting our money into aircraft leasing in India. Thank you very much.
Thank you, Remy. Remy, as all of you know, is responsible for commercial aircraft sales and business development, besides the management of Airbus's regional footprint, which covers engineering, innovation, customer support and services, as well as training. And he also helps progress Airbus's defense campaigns and boost the company's Make in India program. I can share that we have been working closely on this latter part with Airbus as well. Now, Remy holds degrees in engineering and Master of Business Administration from the École Nationale des Ponts et Chaussées in Paris. And so when he tells us that India is ready to go and make its footprint as a consumer and producer of aviation financing and leasing, I, for one, would certainly pay heed to that. Now I move on to the next segment, which is setting the tone. And we thought that when we were crafting this masterclass for principals, that, and all of you are principals in the speakers as well as in the audience in this business, that we would share with you first the expectations as well as the experiences of all those who are engaged in the entity formation in IFSC GIFT City, and to hear from them what for them have been the business enablers. So we have a panel of 4 speakers. Mr. Sandeep Shah is the Deputy General Manager of IFSC department in GIFT City. He's the head of this department, and he is working to developing the International Financial Services Hub in Gandhinagar. He has over 11 years of professional experience in international finance, policy matters, securities markets, and most importantly, he's been involved from the very beginning with the International Financial Services Center at GIFT City. He works closely with the IFSC authority and also Ministry of Finance, RBI, SEBI, IRDAI, the insurance regulator, and promotes IFSC globally. He holds a degree in Bachelor of Commerce and Master of Business Administration with specialization in international finance. He also holds a diploma in foreign exchange and risk management, besides being a company secretary, intermediate from the Institute of Company Secretaries of India. It is my great pleasure to hand over the floor to the first speaker, Sandeep Shah. Over to you, Sandeep. Sandeep? Sandeep, do we have a problem? Sandeep Shah?
Hello, can you hear me, ma'am, now?
Yeah.
Yeah, okay. Yeah. Oh, sorry. Sorry. Look, just a minute. Yeah, so journey has been very exciting from the in project Rupi Raftar to this stage, and most of the times we have seen the committee report remains in the cupboard, and but this time the chairman of the committee, Vanna Madam, has ensured that all the recommendations of the report have been implemented, and now I think we are all set to launch the aircraft leasing business from the IFSC in India. While we will discuss much in detail about the India gift, basically in terms of the regulation and tax aspect to the aviation industry, I'll take this opportunity to introduce the center which is going to host the aircraft leasing business. And the location, I think if you go to the next slide, which gives a clear direction in terms of where the International Financial Center is now progressing. A request to go to the next slide, please. The International Financial Center basically has been by the Global Financial Center Index as one of the centers which can grow significantly. And it is important to note that it has been ranked first among the other financial centers where this center can actually go very fast. This shows that India is kind of very excited to be a part of the leading global financial centers. And today, city, if we talk about, if we can go to the next slide, please. I'm not sure whether the slide is getting named. Yeah, next slide, please. GIFT City basically is a integrated government of Gujarat has been working in this for many years. Today, it has already allotted close to 11 million square feet. The idea is to develop global financial IT services hub in the state. It is well located between Ahmedabad and Gandhinagar, and just 20 minutes drive from the domestic and the international airport. The city has also been benchmarked with one of the leading globally, and this is how some of the developments, if you have seen in the last 3-4 years, tend to be going very fast. The GIFT City has created some of the state-of-the-art infrastructure in terms of discuss much in detail, but this of the infrastructure what it there is district plant within the TV supplied to the each building. There is underground utility cable connections. There is no need to there is a city command control and center within the city which
Sandeep, we are having some. Sandeep, we are having some audio issues.
Just go to the next slide. The city has grown.
Sandeep, we are facing some audio issues. When we check it out, that seems it's from your end.
Next slide, please. On the social facilities. Slide number.
Go ahead now. Sandeep, undo your video. Maybe we will hear you better. Sandeep, अपना video बंद करें, please. Maybe we'll hear you better.
A 5-star hotel within the city. There is a school. Work from money buildings available in the European however, SEZ zone there are 3 get power and power from the ITS. That is one more of area.
When I requested his colleague Meg to pass on the message to Sandeep that the voice is breaking at the speaker's end.
Yeah. So we're going to request that Dipesh, we start with your PPT and then my apologies to Sandeep. We will try to see how he can participate in the question answers because there is a problem at his end on the strength of the Wi-Fi and connectivity. So I'm going to request Dipesh Shah to move on to his version. I do know that he can also cover. May I request others to keep their mics off, please? And so Dipesh Shah, as we all know, is the head of development and international relations in IFSC Authority. He joined in December 2020, but that's not where the Dipesh's association with the project at hand, which is making India an aircraft leasing hub, starts. He was a valuable member, core member of my committee, in which we worked out all the issues that need to be put in place. Prior to that, prior to joining IFSC Authority, Dipesh for 12 years was in the GIFT City, in which under his beat, it made substantial progress in getting recognition as India's model smart city, starting India's first multi-services SEZ, and the only approved IFSC center in India. He also brought in many regulatory and business changes, roped in banks, which are now transacting more than US $50 billion worth, international exchanges, which now have a daily turnover of more than US $15 billion, as well as insurance and reinsurance companies for undertaking offshore transactions. Overall, he has more than 20 years of experience, and in terms of his academic qualifications, which are excellent, he is studying for his doctoral program in IFSCs. He is already a Bachelor of Commerce and a Chartered Secretary, not just from the Indian Institute of Company Secretaries of India, but also of the Institute of Chartered Secretaries and Administrators of UK. He's a postgraduate PGDM MBA with specialization in industrial business and finance. So now, as the head of IFSC development, over to you, Dipesh, as to what is different about the IFSC's approach to regulation of aircraft leasing business from India. Over to you.
Thank you, Vandana ma'am, and to all my co-speaker and panelist of today's aircraft masterclass. Before I venture into today's small PPT, I'd like to remind to the audience my first meeting when the under the chairmanship of Vandana Agarwal, which was for setting up the aircraft leasing business in India. I remember the first sentence in the first meeting. She asked all the participants was, "Why can't India do aircraft leasing from onshore?" And believe me, at that time we never thought that it can come to this stage where we are, because during that first meeting, what turned out was that there will be a 360-degree review required to enable the aircraft leasing. And when we started venturing into it, it did not stop only in income tax. It was direct taxes, indirect taxes, company law. It required changes in RBI, some changes in securities law, certain changes in insurance law, new regulations to be brought in to make the aircraft leasing a possibility. And those with a previous experience of the way the regulations roll out in India would have lost sight that it can happen in such a time-bound way. So my full credit, I think, to the madam for driving the whole agenda from the day that she took up this assignment of Rupee Raftar to the day that we are now closer to the first real transaction happening onshore or from IFFC in few months from now, which is a reality. And I rarely seen that this type of speed and dedication and focus has been brought in, and it has been brought in by at all levels. I think Ministry of Finance, Ministry of Revenue, you pick up the ministry, you pick up the regulators, everybody got together to make India one of the center for aircraft leasing. To this end, let me quickly run with you what the International Financial Services Center Authority is trying to achieve and how its role is going to be important to enable the whole ecosystem for aircraft leasing. As you are aware that we are a new regulator, we are a unified regulator. We just came into existence in the December 2019. The act was passed by the Indian Parliament. In July 2020, the authority got established in Gandhinagar, GIFT City, and 1st October 2020, We got all the powers of the domestic regulators, RBI, SEBI, IRD, and PFRDA for international financial services. So that's a brief on where we are as an IFSC authority. We deal into financial products, financial services, and financial institutions for this zone, which is notified as an international financial services center. Next slide, please. Our vision has been very clear. We want to be a leading global financial center connected to global markets with very focus on India's economic development. What is unique for us is known to us that we have a huge demand, which other smaller global financial centers don't have. So our advantage is that we have an unmet demand of international financial services, which can be served from the international financial center, which is just next door to the Indian demand. Next slide, please. I already said about hinterland demand, but also very strong Indian diaspora of 30 million plus globally have now a platform to connect. And we always knew that, everyone from outside wanted to connect, but there was no platform made available. And with the IFFC coming in, it becomes a very important gateway for inbound and outbound investments to emerge from this center. It provides a great opportunity for global investors to make an easy entry and exit, which otherwise could be a time and tax painful exercise for some of the global investors. Next slide, please. International Financial Services Center mainly deals into 5-6 major areas: banks, insurance, capital market, emerging activities like aircraft leasing, global fintech, global in-house centers, bullion exchange, and asset management. So in a way, the whole ecosystem and the ecosystem players are all part of this zone, which makes it easier for the aircraft leasing activities to pick up. So, for example, a few days back, we had a development commissioner meeting where these aircraft leasing proposals were taken up. Along with that, the proposal to set up a law firm was there. The proposal to set up a fund was there. A proposal to set up international trustee asset management business was there, which means that all the ecosystem players are coming together in the same zone, making life easier for players to interact closely with each other and get going without wasting much time of availing those support services from other agencies. Next slide, please. Very important, I think, on the tax front, and maybe this could be the question in the minds of some of the panel, some of the participants also. This is a very competitive tax zone now. It has a 100% tax exemption from business profits. So out of 10 year, you choose, out of 15 year, you choose any 10 year. There are no tax on your business profits. Minimum alternate tax has been brought down to 9%. However, if you choose the new regime, even that 9% does not apply. There is no commodity tax, security transaction tax, no GST, goods and service tax, and no stamp duty when you are transacting from the zone. Also, there's no capital gain tax for the aircraft leasing when the asset has been redeployed or resold. There's no capital gain tax. And it provides the right platform. So this was one of the major reasons why people were saying India may not be able to achieve aircraft leasing business if it does not align its tax law. And great efforts from the Ministry of Finance, Department of Revenue to align the tax regime, which is now hard coded into the Indian income tax, which gives much more comfort to the foreign investors that this is something very much part of the black and white into amended and brought in the act itself to give this incentives to the players coming in. Next slide. Our business has been growing rapidly. We've been close to 158 IFFC entities now in the zone. We have 15 banks, foreign banks like Standard Chartered, HSBC, Barclays, Citibank is coming in. So all these foreign banks are there. Indian banks all are operational there. And the business has been quite expanding quite fast. Similarly, on the stock exchange, insurance also. So for aircraft leasing, you will be able to avail external commercial borrowing within the zone itself. You will be able to get dollar insurance within the zone itself. And you will be able to place your business transactions much smoothly within the market players available in the zone itself. Next slide. some of the businesses which we are working very closely with various agencies and the government. Obviously, aircraft leasing is on top of our agenda. We started this journey with the rupee Raftar. The government then brought in the change of notifying the IFFC authority, and then we could bring in the aircraft leasing as a financial product. Post that, we went to the market to take their views, and after those views were incorporated, and we came out with the aircraft leasing framework on 19 February 2021. And since then, we have seen no stopping. We have close to 12 aircraft leasing proposals on which we as an authority are working. We are glad that
Dipesh, we may hasten a bit, please.
Yeah, this is my
Thank you.
after this is my last slide.
Thank you.
And with this, there are two agencies which have already come on board, and I'm glad both of them today are part of this this particular conference. Next slide, please. Go ahead. Go ahead. Yeah, please go ahead. Yeah, this is my last slide. The framework which has came out from the IFFC authority is quite facilitative. It is not too burdensome. It places a minimum obligations on the aircraft leasing players. Operating lease has been notified, so you can do sale and lease back transactions, different models there, lease in, lease out, whatever the structures that players want has been able to be brought in. You can form company, LLP, trust, any form that you find reasonable from which you want to operate. You come from a FATF compliant jurisdiction, which is a standard norm, and you can deploy resources based on your business operations. So there's no obligation in terms of minimum number of staffing as far as your operations are concerned. Capital requirement has been brought to minimum $200,000, which can be utilized for the purchase of the aircraft. And it can be brought in 12 months from the date of the grant of the registration. So you don't have to deploy the capital upfront, and you can deal in any foreign convertible currency. And that is, I think, brings a lot of flexibility for the players to do free convertible transactions from this zone. I'll stop here and I'll take more questions when the time permits, but I will be happy to answer the questions which comes to the participants. Thank you, ma'am.
Thank you so much, Dipesh. And I'm sure that a number of questions are tearing in the minds of a number of people regarding the framework that you have already put in place for aircraft operating leases. In my mind, it's also there as to when you would be bringing in the framework for other types of leases, including hybrids of operating and financial leases. So we will revert to you. Now, our next speaker is Ashish Jagrawat. He's the CEO of Moon SEZ Consultants. He brings, in a sense, the perspective of actually facilitating the establishment of leasing entities in the GIFT City under the framework that has been outlined by Dipesh Shah and by Sandeep Shah prior to Dipesh. Now, Ashish has been actively involved in policy formulation in the SEZ with both the state government as well as the Development Commissioner's office. He looks after overall business operations and management, including new business development and special initiatives. In a sense, he provides clients with a one-stop solutions in all matters concerning the IFSC SEZ. I'm not going to go more into details, but pass on the baton to Moon SEZ Consultants for sharing their experiences in implementing and setting up entities. Over to you, Ashish.
Thank you, ma'am. Thanks all the dignitaries available. Thanks, Vicky, for giving this an opportunity. I'll just take half minute of yours, everybody present here, to just explain one incident. In fact, Vanna ma'am might not be aware about that incident, but it's a classic incident wherein how she worked and what is the speed at which she execute the things. In fact, in 2016-17, when some SEZ rules were changed actually, and Air India has an MRO in Nagpur, so there were certain rules due to which the entire MRO concept was getting nullified. I, along with Air India finance director, went to meet Vandana ma'am, and directly she called from their commerce secretary, and within a span of 1.5 months, the rules were changed accordingly to the MRO sector, and that's how again the Nagpur MRO of Air India is still functioning after 3 or 4 years. So the entire essence of telling this is the way she work. I have seen her working since that time, and now this regulations which Dipesh Bhai was telling, in fact, in a very short span of time, it has evolved to this stage. So the proverb which says that wherever there is a will, there is a way, and which perfectly fits on Vanda ma'am. With this, I'll start with my presentation. Now you have seen the infrastructure, you have seen what are the regulations being evolved, what is the present situation right now. Now it comes to the fact how, what, and in what manner entities or organizations who are into leasing business and who are into asset management business for aircraft can set up their operations into GIFT City IFSC. So what I have done is I have summarized the entire presentation flow into 2 to 3 slides. I'll not take more than 5 minutes. Next slide, ma'am. Okay. So first, whatever entities, be it an Indian entity, be it Indian investors under LRS scheme, that is liberalized remittance scheme, be it a foreign company, be it a foreign investor, be it a foreign resident and foreign non-resident Indian also. All these people can set up an entity in the form of either a company, limited liability partnership firm, or a trust in IFSC, wherein the minimum capital requirement is $200,000. When this unit in IFSC is being set up, this entity can function both ways. One is, of course, a procurement of aircraft, helicopter, or any other assets from outside India, lease it to again third country or to any of the scheduled operator or non-scheduled operators in India. Second is the big business opportunity is those assets which are already leased in India can also be procured and then can release to any other occupant. At the same time, these entities would also be in a position to provide asset management services and other connected services related to aircraft, which is a big business available in the market currently. At present, 3 business opportunities are there. One is it is an operating lease for aircraft, and over a period of time, as ma'am said, it would be financial lease, it would be hybrid lease model, whatever comes through. This activities are defined. One is operating lease, second is aircraft asset management and other related services. And the best part is any other activity can also be permitted by IFSC authority as and when some opportunity or business requirement comes into. The most important point here, wherein government is also ensuring regulations at the same time, is the investment should flow from the FATF compliant jurisdiction. That is the most important factor to be taken into consideration here whenever anybody is interested in setting up unit in IFSC. Now, this is what the structure, activities, the flow is all about. I'll now just take you through what is the step-by-step guide as to what is to be done first, what is to be done second. Can you put on the next slide, please? Okay. So this is the roadmap. I have tried to summarize this in like 6-7 steps. So one is, of course, you need to identify the space and get the allotment of space, just like you get an office space allotment done. On the similar manner, you need to get the space in GIFT City. Thereafter, we need to apply for name availability with the registrar of companies here in India, along with obtaining director identification number or designated partner identification number. Subsequent to that, once the name approval is done, we need to apply for incorporation of the entity or LLP or trust. And nowadays in India, all other approvals are also given at the same time in the same company incorporation form, which is PAN number, which is an income tax identification number actually. TAN number is a tax deduction number, and other labor related approvals like provident fund and related to those. Once company incorporation is done, we need to apply for IFSC unit approval with the ACZ authorities as of now. So there's a specific form called Form F. Based on that, a unit approval committee meeting will happen, which Dipesh Bhai was referring to day before yesterday, and 2 units have already got the approval for. And based on this letter of approval, IFSC authority will also give you a registration under the IFSC law, stating that so-and-so activities are permitted to be carried out by an entity from IFSC. Now, having said that, since there are various tax exemptions available in SEZ for IFSC units, so in order to avail those tax benefits, there is a requirement of bond cum legal undertaking, which is just on a stamp paper without any bank guarantee or so. But this gives you eligibility to procure goods, services from within India, outside India, without payment of taxes and duties. And there are some few minor approvals which are required, is like GST, import export codes, but with this entire transaction flow, and in fact there are deliberations being going on where to curtail down the time limit of all these approvals to 10 to 15 days is what the target is. And but as of now, with the current regulations also, all this can be closed in 15 to 20 days time. And that's where the entire IFSC authority, MOCA, Vanda ma'am, all other authorities are also working together to streamline this process. And so far, so good. 12 companies are in the process of setting up, out of which 2 have already got the approval, and balance will get the approval soon. Yeah, next slide. Next slide, please. Yeah. So these 3 are the major, I would say, conditions, eligibility, whatever you call it as. So first is the eligibility of applicant. I mentioned that any entity can be set up in a manner of limited liability partnership firm, company, or trust. And the most important part is promoter should be located in an FATF compliant jurisdiction. Minimum capital requirement is $200,000 in convertible foreign currency to be maintained at all the times. And to introduce this capital, there's a time limit being provided is of 12 months from the date of IFSC registration or before executing the first transaction. That is what the time limit is granted. And permissible activity wise, it is already indicated that you can carry out operating lease related to including buyback, leaseback, sellback, purchase, novation. And the lease transaction can be executed not only in terms of aircraft, but helicopters, engines, or any other parts thereof in the model of an operating lease as of now. That's all, I think, from my side.
Thank you so much, Ashish. It was such a compelling presentation of all the steps. You literally provided a complete step-by-step guide, and it's also very heartening to hear that for the 12 applicants that are already there, 2 have been approved. I think that's really great going, considering that it's only on 19th of February that we brought out the regulations. I'm sure there'll be thousands of questions for you going ahead. Now we come to Vishok Mansingh. He's the CEO of VMAN Aero Services, and you could ask as to why do we have Vishok Mansingh here? Multiple reasons. He's one of the intrepid entrepreneurs that I spoke of, and I'm sure he will indicate to you as to why I call him the intrepid entrepreneur. Not only is he one of the 2 who has got the approval, but I know him from before because give him any new task and he handles it. And he in the course of it, he tells me, okay, now this regulation needs to be set right. Can you please do it? Because my project is going to get over in the next month. So that's how he and I work. We have worked for the last few years. He is actually, if you look at it, he's in the field of consultancy, asset management, fleet technical management and training. He has 32 years of experience in aerospace, defense manufacturing, international airline operations, national, regional, commuter aircraft, helicopter operations, aviation asset management. He has hands-on experience in regulatory compliances with various civil aviation regulators, FAA, EASA, DGCA, and others. He has also experience in different geographical locations. His expertise, actually, if you look at it, it's enormous. It's in startups, mergers and acquisitions, regulatory affairs, aircraft modifications, heavy maintenance, fleet technical management, asset management, aircraft lease management, aviation consultancies, and airline restructuring. So I'm not going to go into all his past experiences in Blue Dart Aviation, in Kingfisher, as well as in TrueJet Airlines, where he was CEO. Over to you, Vishok, for telling us about your journey in aircraft leasing.
Okay, ma'am. Thanks a lot for such a kind words. And I think it was so nice of you. Good morning to all the participants. And thank for Fiki to give an opportunity to give my view as a customer. Hello. Can you see it? Just want to reconfirm.
We can see it, we can hear you.
Okay, sir. I'll go ahead. So I'll just give a small background how we started in this business. We were planning to set up a air ambulance or national wide and air ambulance service with a large number of the helicopter. And the thought was there to set up a company in Ireland or Abu Dhabi who was very aggressive in approaching us. And then it came in mind, we have an Indian rupee Raftar. And in month of September, we approached to Miss Vandana, there is a possibility. We had a plan to set up a leasing company in India. Government has also planned with the rupee Raftar policy, can it be moved? And she immediately created a group, and we all the stakeholders from the GIFT City, IFSCA, lawyer firms, income tax, DGCA, tax authorities, and we had a very detailed, frequent discussion. And in month of October, I think we had a government notification issued that aircraft leasing is approved. And that was one of the fastest things we have seen that. And as soon as the IFCS formed, they started consultation on the regulation on aircraft leasing. We do had a interaction with them. On February 19th, the regulation was issued. And as we speak today, and I think Ashish has confirmed, 2 of us has already got an approval. So that's it clearly indicates what the speed all the stakeholders are working and how MOC is driving the speed which is expected in aviation, which is all the time is the essence of service everywhere. If I tell my experience, how was my journey so far? Our experience is that MOGA has played a very, very active role in coordinating, aligning all stakeholders on the same page. That was very important. This was the first entity, and there were the multi-agencies were involved. And the best thing I liked during our interaction with all stakeholders, each stakeholder, whether DGCA, they were looking with the current law, how best they can incorporate this activity or support any particular requirement of this country, which requires a minimum effort, which may require a minimum regulation change. So the approach from all the stakeholders, whether it was a custom, because we can't take an aircraft to SEZ in GIFT City, how it has to be handled, the approach was very, very proactive and how to resolve the issues. As far as the regulation was concerned, the very mandate, I think Mr. Vandana's keep on driving, we have to the ease of doing business. We have to see whether this regulation required, if the documentation required is a must desirable or it is just a legacy issues. So all the regulation, what we have seen and during our final discussion with IFCA for the aircraft leasing with the complete team under the chairmanship of IFCA chairman, and it was always that approach we just streamlined. And the speed, I'm 33 years in aviation and 25 years in civil aviation. It was the first time in the last 5 years we have seen that really the speed has picked up, and this was unprecedented. We do have a teething problem. Yes, we can't say it was only hunky-dory. It was perfect. It was a teething problem, but all the teething problem has been resolved very quickly. We had a problem with ROC where the industry classification was not there. And once we raised that issue, I think within 4 or 5 hours, it has been resolved. So that's not an issue, but there was a problem. The issue was there, how quickly it was resolved. And that is a very, very positive sign. So as an entrepreneur, we are delighted to get support from the all stakeholder in setting up this venture. And yes, we do have a teething problem, but I believe the way it has been streamlined, the next two people who are coming in the leasing business, they're going to have a much, much easier ride. And I think me and Acumen is going to charge them royalty to making their life better and much easier. What I look as a leasing company way forward, there is some regulation still need to be relooked. And one of the regulation we believe SEZ approval has to be relooked, as we are not in the manufacturing, and that can be removed or maybe aligned. As a leasing company, IFSCA can give a direct approval, which can be much, much faster, and it removed a lot of documentation and paperwork. The second is the custom procedure is being aligned. They are not fully aligned, but they being aligned. And none of the current custom procedure is a showstopper. That's one of the reasons we are going ahead with our project. But some of the process for the future may be realigned. For example, if I'm importing a helicopter, it comes in a Mumbai in crate and disassembled condition. It moves to somewhere in Juhu for assembly and park it there. That is not an SEZ area. It will be remain parked there till it is leased out to an operator either in India or outside in India. So these are the small nitty-gritties are there, but I'm happy to share with all the audience the ministry and the custom way of working in a very positive way to resolve them and making all those rules very simple, so there is no complications. As a lot of question has been raised on the rupee, we are getting funding. We have approached to the lenders. They are ready to fund us in rupee, and that will be a big advantage for us to, if I'm able to have a rupee as a transaction currency in IFSCA in GIFT City, which will ensure our both my lessee is also protected from the currency exposure, because I am getting funding on my rupee. I have to pay back rupee. He pays me rupee. That will be a very, very big advantage, and it will boost it. Second, last I will require, I recommend we have to look at the feasibility of the inflow of the Indian fund. It has to be initiated. We have a lot of advantage of a tax structure in India. We have a lot of company, profit-making company, a lot of liquidity in the market, and we have to look in way forward how we can tap this market, because everybody will question, and it will be in my mind also, if we are an India-based leasing company, where is my Indian fund? Where is an Indian capital? And Mr. Dipesh has mentioned that they have got an approved, two companies has approved, in the few months they will see a transaction. I want to assure Mr. Dipesh that we are few weeks away, not even few months. And if you're able to get a slot for our asset, you may see delivery as soon as in the month of May and June. So I really thank Ministry of Civil Aviation, IFSCA, GIFT City, Ashish, Moon SEZ Consultancy. They really made this journey very, very smooth and very, very encouraging to look at for a much more engagement on this. Thank you.
Thank you, Vishu. Thank you. I am sure that your experience will propel and compel many others to come into this business and realize that working together with the authorities is profitable, as well as it can be eased up. I'm going to cut short my dialogue because we are running late, and we must kick off the next panel discussions. I know there are loads of questions already coming in. We're going to take them all together at the end of the first panel discussion. This is a panel of experts, ladies and gentlemen. We're going to cover a whole gamut of aircraft financing outlook, aircraft financing structures, your PDP, your SPVs, the pricing issues. We're going to take up aircraft financing through alternate investment funds. Then we have valuation perspectives, asset valuation perspectives, both from an OEM as well as from an asset manager's point of view, or an independent appraiser's point of view. We're going to do a little bit of rejig on the presentations. We're going to start with the two India-based aspects. So on aircraft financing structures, I'm going to request Ashwini Tiwari. He's the Managing Director, International Banking Technology and Subsidiary State Bank of India. State Bank of India, as you know, is India's oldest and largest banking group. Ashwini himself has 3 decades experience, and he's handled several assignments across various countries, including obviously in India. He's a certified associate of Indian Institute of Bankers. He's a certified financial planner, and he is also on the board. He has served on the board of International Institute of Bankers at New York and the board of University of Washington Global Bankers Program. Ashwini, we are looking to State Bank of India to take the complete lead on this. So over to you to tell us how to go about the financial structuring business. Thank you.
Thank you, Vandana ji. So, Monica, could you load the presentation? And before I begin, actually, I was hearing all the good words which were being said about Vandana ji, and she also mentioned the word intrepid with regard to Vishok Mansingh, who also in turn called her by that same designation. So that reminded me of the Intrepid, which is a 1943 aircraft carrier, which is parked just close to the deck in New York City and is currently a museum. It was a World War II. I mean, it's for action there, and it has been there since then, very well maintained. So therefore, Intrepid is what we really need in this thing. And looking at the entire journey of how GIFT City has evolved in various activities, and State Bank of India also was one of the earlier ones to set up a branch there, which is doing business. And we have shifted quite a lot of our business, which we used to do in our foreign branches, to GIFT City because the facilities were made available. And therefore, we are already present there. So today, and as I looked at the aircraft leasing, I was part of the conclave which happened in Delhi some time back. I feel personally that about 75 to 80% work is already done. Now, what remains is the small loose ends, which, as Mr. Mansingh was telling, that as you come to that transaction, you face a problem, you tell them, they solve it out. So that's a really good way, which is not something which most authorities in India are known for. So very good to see this. Now, what Vandana asked me and I've done is to take a few concepts which are there in the financing of aircraft leasing. And though personally, I may not have too much experience in this area, but as a bank, we have done this outside India. And I think now time is coming that we should start doing it here. And most building blocks are in place. And there are, of course, still certain things remaining, which I will briefly indicate towards the end of my presentation. So could you move on to the next slide, please? So this is known to everyone because this is a this is an audience which is fully aware of the scope and the advantages that are there. The ninth largest civil aviation market in the world. The passenger growth has been one of the highest in the world, and the drivers are the new carriers, increased business and leisure travel, modernization of airports. I mean, the wonderful thing is that despite some very negative things, the high cost of ATF fuel, the high taxes in the beginning, and various other challenges, because the scope is so much in India, there, and the scheme and the initiatives which have been taken by Civil Aviation Ministry, the Udan initiative, various other initiatives. A lot of airports are coming up, a lot of airports are getting modernized, and the passenger traffic has just taken on. I mean, if you exclude the last year, which has been a difficult year because of the pandemic, I think the growth story has been very good and will continue to be very good as soon as we get a full handle on this pandemic as it is. So therefore, the 2,000 odd aircraft which we will need over the next 20 years, this is projections by some of the co-panelists who will talk more about this in the next, next sessions. So $300 billion opportunity overall. Next, please. Can you go to the next? Okay, thank you. So how is this happening in India currently? Because we don't have a aircraft leasing in India currently. So most of it is import lease, 90% plus. Initially, there's some planes which were bought, but no airline today buys an airplane much, and especially so in India, because it is a very capital intensive business. And airlines need capital for other things, not necessarily to directly buy the aircraft. So it is all done mostly on lease basis. These are large aircraft books, and these are leased through leasing companies which are located offshore. So that's the first point, that all of these are done through leasing companies, and most of which are either located in Dublin, Ireland, which we know, or they could be located in Hong Kong or Singapore. There are other centers which have come up. This has not been a specifically permitted activity for banks, even though it is now allowed in the GIFT City. So therefore, this is something we have already taken up with the regulator, because even if it is allowed in the GIFT City, first we have to take an approval to set up such a subsidiary and for a particular activity, which is currently what we are engaged in. Then the demand and non-availability of own sources of aircraft financing. So therefore, there is a rationale for us to set up structures for ourselves in India, and maybe come out with some structures which are focused on India and suitable for India, because as we know, India has a challenge of capital, especially a US dollar capital. Aircraft financing outside India and within civil aviation is one of the most profitable segment, and it is generally secured. So therefore, the capital which is required on the aircraft financing is relatively lower as compared to some unsecured financing, which is also done outside. And if we can create a fully competitive environment, which is there in other jurisdictions, and which we are almost quite a long way on, I think this will give a real boost to Indian aircraft leasing. And this destination of GIFT City, people have talked about it, and I'm sure the most important part of that was the competitive tax regime, which is already in place. So therefore, we have to look at other things as to what those are. Can you go to the next slide, please? So let us look at some structures, because this session is more about structures. How is aviation funding done, aviation financing done? So it could be done in cash, which is the most easy option, that you have enough cash of your own and you just pay cash and buy an aircraft. And therefore, because it's a direct use of cash, it is the least used option, in fact. And then there are the others which are common, which is capital markets. How do you structure a debt transaction? How do you have enhanced equipment trust certificates, unstructured debt? And this could be via a listed company directly into the public markets, or could be a private deal, private markets. And then, of course, banks are heavily involved, which is a secured debt. It could also be an unsecured commercial debt, though that's not so common. And then we have the leasing companies. So the leasing companies, the typical model as it stands today is that leasing companies buy aircrafts directly from the suppliers, which is, as of now, it's Boeing and Airbus only, though there are smaller aircraft suppliers as well. But most commercial aircraft are sold by Boeing and Airbus. So therefore, leasing companies will try to buy the aircraft from them. For doing that, they may take loans from commercial banks. And then various structures are created, and then they will lease it to the airline. So that's a typical model as it works today. Export credit is also used, which is typically a guarantee from an export credit agency. Sometimes it could be a direct lending as well. Sometimes the manufacturers could give some support, not typically the full support, but some support could be given to aid the purchase of the product. And especially in these times, even as the manufacturers themselves have stress, but they also support by deferring the payments or by giving easier terms, etc. And as the export credit has kind of come down a little bit, US Exim, as we know, wasn't really functional for a long time. Now it is apparently. However, and China Exim, of course, is focused on companies and aircraft of that region. So therefore, this has slightly shifted to insurance companies, and they have various other products like the non-payment insurance policy, and through a commercial bank loan or a capital market structure, essentially serves the same purpose of a guarantee given by the export credit agency. But there are some differences which we will see. Can you go to the next slide, please? Okay, so this is just an illustration as to how the aircraft purchase may happen. So since it is a very high cost transaction, high cost deal, therefore no manufacturer would like to start making a plane for any airline unless they get some advance. Now this advance is again given in phases as the aircraft gets made. And this also could be as high as 30% of the part payment of the full purchase price. And if that be the case, therefore, airlines or leasing companies actually get funding for this transaction also. And this is what is called the PDP, or pre-delivery purchase, pre-delivery payment financing. So this is one type of financing which is there. Typically, it's a short-term financing because it is limited to the time during which the aircraft is getting made. And once it is made, this PDP finance or loan could be paid out by the next set of lenders who will fund the aircraft for the to the leasing company or to the airline for the full tenor, which could be 10 to 12 years or less. Or it could be some of those lenders who have given the PDP financing could again go on to liquidate this and give the longer loan. So it could be both. And this is, as mentioned, this is the purchase of the aircraft, which is an airline or leasing company, or could be an SPV floated by either of those, borrows money for funding all or part of the PDP amount. Typically, there will be some equity here from the expected from the airline company or the airline also, and there will be an interest payment throughout the PDP loan. There are no principal repayments here. So the principal repayments are all made on the delivery, at the delivery. So it's basically a balloon repayment, which is made at the end of this term, which is when the aircraft is getting delivered. And typically it is converted or rather refinanced by the various financing structures. So cash may not be paid. It is by way of a separate loan by which this PDP payment or PDP loan is paid. And meanwhile, while this PDP loan is still outstanding, the PDP lender might get a security assignment of the purchaser's right to purchase the aircraft. Now, there are certain nuances here. One is that the leasing company may be, let's say, be in Ireland, the airline may be in another country, the suppliers, as we know, could be in Europe or could be in the US. And therefore, there are multiple countries involved, and these the regulations linked to all of these countries form part of these agreements. And therefore, these PDP agreements are pretty complicated exercise. And one complication which arises that suppose the buying entity, which is the leasing company or airline, were to suddenly default or not able to pay interest or go into bankruptcy, then what happens? Then the lender has an option of either stepping into the shoes, paying the rest of the money and taking over the aircraft, or they can try to assign it to another airline or another leasing company, but that will be subject to the manufacturer's consent. So therefore, all of this makes it pretty complicated. But since this has been happening over a period of time, this has become quite common. And therefore, one has to be aware of the complications which are involved here. Can you go to the next one, please? Then there is something called a special purpose vehicle. We've all heard of this term, that special purpose vehicle or SPVs. These are very, very common these days. And in the aircraft financing industry or aircraft leasing industry, this is the way to go. Every aircraft which is bought could be owned by an SPV, which takes its funding. And there are multiple ways actually or advantages of actually doing it through an SPV rather than directly doing it through the leasing company's balance sheet or the airline's balance sheet. And this SPV could be of any particular ownership structure. For example, it could be a trust, it could be a partnership, it could be an LLP or a limited liability company or a corporation. So when an airline or a leasing company buys an aircraft, it will assign the purchase agreement or the lease agreement to the SPV, and then the SPV will lease the aircraft to the airline. So therefore, the security interest and SPV will take the loan for funding this lease agreement or the aircraft, and these security interests are then issued by SPV in favor of the financier. And the trust can be set up, and then the SPV is taken off the balance sheet. So what that does it that once the SPV moves out of the balance sheet, it becomes a dedicated entity which has only one aircraft or maybe a couple of aircraft, and this is out of the balance sheet of the leasing company or the airline. So therefore, the balance sheet is not clogged by this the huge purchase which is made, and typical financial health continues to be okay. And since it is owning that asset, therefore, if there is any problem with the leasing company or the airline, which means it might have stress or go bankrupt, the SPV is not affected. And therefore, the lender who has lent to the SPV, their interests are not compromised. And these are and therefore these structures or SPVs are also called bankruptcy remote, which means even if the operator or the leasing company, etc., goes bankrupt, the SPV stands isolated, it is protected, and therefore the creditors who have lent to the SPV, they are also protected. And they can provide additional, access to additional sources. There are also exposure limits on certain financiers. So they can finance one SPV and the limit will be to that extent of that SPV. They can provide a loan to another SPV. If they had to provide this high value loan, which is could be of the order of $40–50 million, let's say, to for one plane, and if they have to provide for, let's say, 10 planes, then if it is one company, there are exposure limits which are laid by most regulators, which will come into play. So therefore, by this SPV structure, the internal exposure limits are also overcome for the financiers. And of course, when the SPV holds only one asset, the repayment of the loan is more certain because the cash flows which are coming from the earnings out of that that aircraft, which is the underlying asset, are given only for this loan. They are not meant for any other loan or any other assets, and therefore, typically the financiers whose repayment is assured will charge lower interest rates, and therefore the costs also come down. So there are 3-4 major advantages. One is bankruptcy remote, the airline or the leasing company's balance sheet is protected, the lender's interests are protected because that assets and its earnings are only dedicated to them, and therefore the cost comes down. So it's a win-win situation for all, and that is why the special purpose vehicle or SPV is the most common way in which financing is done, aircraft financing. Can you go to the next one, please? So let us look at some other financial structures. Commercial bank structure is again very, very common. So lenders or a bank could directly make a loan to an airline or a leasing company to purchase an aircraft. It could be to the SPVs which are floated by these companies, could be directly given, and the loan is secured by mortgage or security interest. The airline or leasing company will own the aircraft, but it is mortgaged to the lender, and they could lease it to any other party if required. This loan is cheaper, but one has to remember it's a balance sheet transaction and it has full recourse to the company. So even if it is given for one aircraft, if there is a default or there is a stress or a non-payment, then the lender can take recourse to the full company and on its other assets as well. So therefore, and moreover, there are certain events of default which by certain financial ratios are breached, even if there is no non-payment, even then the lender may ask for the money to be given back. So therefore, that could again become a challenge for the leasing company to operate its business. And the third thing, which is very relevant in India especially, is that in case a company is not investment grade, and investment grade not necessarily in India, but externally, because we are dealing in foreign currency here, then it may result in a more expensive loan. So these are some of the disadvantages, but the advantage is it could be cheaper. Can you go to the next one, please? Can you go to the next slide, please? Yeah. So then operating lease. Now this is something, so we have financing lease, we have operating lease, but the operating lease is the most common lease. And here the owner or the lessor who leases to an airline or other lessee retains all the risks and rewards which are there, which means the leasing company is leasing this to the airline. And the owner or the lessor releases or sells the aircraft once it is returned. So the airline at the end of the term will give it back, give the aircraft back. If it is mandated not to give it back, it becomes financial lease. But we're not going to talk about that because that's not very common. And this again is of two types: wet lease, which everybody knows, where the operational control of the aircraft is still with the lessor or the leasing company. They practically operate the flight, maintain the crew, insure, and do everything. So that's again, it is not common. If an airline is coming up, maybe they can use this, but it is expensive. Therefore, the most common model is a dry lease, where the owner provides only the aircraft and the rest of the thing is done by the airline themselves. And the advantages of operating leases, there's much greater flexibility in managing the fleet because it can be contracted for increased capacity only when needed. But it can be again expensive compared to the other forms. Can you go to the next one, please? Again, financial lease, as I mentioned earlier, here the airline has to purchase the aircraft at the end of the lease term, and therefore it is not very common. And there's though there are instances of this as well. Can you go to the next one, please? Then this is back leverage lease. So leasing could be, I mean, operating leases also are of very, very different types, where operating lease with the aircraft is collaterally assigned in favor of the lender, and the lender will get part finance, 70 to 85%. Rentals will be assigned to the lender to finance the aircraft. There'll be a first charge on it to the receipt. So not only is the aircraft charged, but even the lease rentals are kind of assigned to the leasing company. So therefore, here the lessor retains 100% of the asset's residual value, but the only portion of the aircraft's acquisition cost, which is the equity portion, is given. And lenders have security interest, and they also have the lease payments, which are assigned to them as receivables. They may take management of the lease in case there is a default. However, once the loan is repaid, the lease owner or the leasing company gets the aircraft completely free. So this is one variant of the operating lease. Can you go to the next one, please? And then this is a very specialized one, which is more prevalent in Japan, where the operating lease is fully or partly funded by a Japanese investor or equity sourced. So while in all of the structures we have talked about, there is some requirement of an equity financing from the or equity contribution from the leasing company, let's say 20-30%. In this case, that 20-30% also could be given by an investor from Japan typically. However, the commitment is typically long, so which is a disadvantage of 10 years and all. Structure is very inflexible, and therefore typically this is popular only in where Japanese companies or Japanese investors are involved. It's not very popular across the world. Next, please. Sale and leaseback, again, this is one of those structures where the airline has bought it, but it sells a used aircraft or its right to purchase a new aircraft to the leasing company. And the airline will then lease the aircraft back from that entity. So airline has bought and it has leased back to it has sold and then leased back the aircraft. This gives flexibility to the airline, which can manage its fleet. And it also allows the leasing company to either buy the aircraft or aggregate the aircraft in bulk, which gives a lot of other advantages. Next, please. Then we come to the export credit agency. So this was very common, where the 85 up to 85% financing was done. The ECAs are typically sovereign, which is owned by governments, and therefore they give government-based guarantees to lenders, most secure form of guarantees, and therefore the cost which is there to the airline or the leasing company actually is much lower. So this is typically done to support the export of aircraft engines and other manufacturing goods, and therefore the three most common ECAs were from the US EXIM, then Europe, and of course the China EXIM, which is there to support Chinese manufacturers. And this is for the manufacturing and supply of goods from that country itself. And the remaining price is generally funded by equity investors, could be the airline or the leasing company itself. So it could be in the shape of guarantees, or it could also be in the shape of direct funding, but that's not common. So guarantees are the most common structure here. But as I mentioned earlier, this has come down a little bit, especially from the US, because the US EXIM wasn't functional for a length of time. However, the China EXIM continues to be very active. Next, please. And then this insurance, which has come into play now, and it is pretty common. The insurance, the ECA guarantee is now replaced by an insurance non-payment policy, where if the lender is not paid by the leasing company or the airline, the insurance company will pay. The differentiator is the insurance companies like COFACE and all, they are not sovereign entities. So in that sense, the lender has to do a due diligence of the insurance company itself, whether they are comfortable in thinking that the insurance company will be able to pay. Secondly, there could be multiple insurance companies involved, so you have to do due diligence on all of those companies and have contracts with all of them, and therefore that makes it slightly more complicated. But there are also certain flexibilities, whereas ECA financing is subject to the OECD regulations and the ASU regulations, and insurance is slightly more flexible in those respects. So therefore, this is becoming a common way in which the risk is taken off by lenders. The margins for lenders get reduced, but considering the fact that in many jurisdictions, the airlines are operating in high-risk jurisdictions, or where the return of money is under question, the credit risk is high. I think this is a structure which is useful, and this might be useful even for India, because here the airline industry has passed through a lot of stress, especially in the recent times. So this could be something we should look at. Next, please. And then, of course, there are these other points where lessor needs to ensure the lease aircrafts are well maintained. The lease agreement will capture such clauses of the reserve for maintenance, which has to be there. Security deposits could be required. The protection for non-payment under lease agreement could be there. There could be market practice that the security deposit could be 2 to 3 times the rent, so that in case something happens to the airline or the company, then therefore maintenance could be carried on without any problem. This reserve. So these are some additional things which could be funded also as a non-fund based facilities. Next, please. So coming to the last slide, which is the Indian aviation space. So we understand this, that all the aircraft are sold in the foreign currency, either euros or US dollars typically. So therefore, there is a foreign currency liability, whereas all the revenues which accrue to the airlines are in rupees, which is the domestic currency. So this forex risk continues to be there all across, whether the airline leases it outside India or within India, it doesn't matter. The conversion thing is the risk is there, and at the moment actually the airlines are themselves bearing this. So there could be situations when, if we do this out of the gift city, we could have instruments which are located within the gift city, which could hedge this risk, and this hedging cost could be lower here when compared to when we do it outside India, which is typically the case now. So therefore, this is one big opportunity when we start to do this. Fuel risk, of course, is there. This is outside the purview of GST. So this is a general point, not necessarily connected to aircraft leasing, and hopefully this will be considered at some point. We have had, especially at SBI and many other large banks, we have had these challenges with some of the larger airlines collapsing, and even Air India, though it is still around, but it is only on the strength of the government guarantee. So the sector as a whole has not been very good for us, and therefore we have not been very positive on the Indian airlines, and we have been slightly cautious. But the potential and the scope is so large, therefore no bank could remain away. And if the credit mitigation structures and the guarantee or insurance structures could be put in place, I think the leasing industry could really take off. Of course, COVID is something which has impacted everyone, including the airline industry in India. And in outside India, Delta and Boeing have both got, and many other airlines in the US have got direct infusion from the government there. So maybe in the Indian space also, we could look at some of these support which could be given as a short-term measure to just ensure that the airline health continues to be okay. Next, please. I think we have come to the end of the presentation. Thank you very much.
Thank you so much, Ashwini ji. I can only conclude by saying and putting an entreaty to you that although SBI and other banks from India may have been a bit cautious till now, there are a huge number of green shoots which are appearing in the Indian aviation sector, including the handling of the force majeure events like COVID-19, where, as I indicated earlier also, that we have brought the aviation sector in a steady path of growth in order to mitigate the force majeure risks that might exist. And of course, although we do speak about the financial health of the airlines, it is also a reality that this happens everywhere in the world. And frankly, in the COVID conditions, while you had many global airlines toppling away, the Indian airlines have so far, fingers crossed, toes crossed, held their own, and we've not seen anything like that. Of course, Forex risk, I think it's a very important element to address. And on the fuel risk, we are assured that as soon as possible, the fuel will be in the GST domain. But the sum and substance is that State Bank of India has to lead the initiative to develop structures which it finds are suitable, with minimal changes in the regulatory aspects. There's always a creativity which is possible. And you have yourself noted so many possibilities which exist. So I would leave it to you internally to take up this matter as a serious challenge and to come to speed with us. We're already getting entities incorporated at a very fast pace, and we would urge SBI to take it up. I cannot but share with you one single thought, which is that I was a young undersecretary in the ECB division of Department of Economic Affairs. This is in the early 90s. And I actually was authorized to do the Government of India guarantee in a Japanese leverage lease for 12 aircraft, which were sourced by the then Indian Airlines. And I was kicked to bits because in my bag, I carried a guarantee form to London for $1.2 billion US, which in those days was a huge amount of money. And when the at the immigration border, they asked me to declare whether I was carrying any foreign exchange. I was tempted to tell them, yes, $1.2 billion. So, so Ashwini ji, we look forward to working with you going forward. And so please, you and your team, if possible, can stay on for, I'm sure, 1,000 questions which are going to come your way as well. I'm going to move on now to Prasad Gadkari, who is, the other big money into India, which is the National Investment and Infrastructure Fund. Prasad is the Executive Director and the Chief Strategic Officer of NIIF. He comes with 2 decades of experience in areas of private equity, principal investments, joint ventures, project finance, and corporate and policy advisories. He has been in the past a managing director at TVS Capital, where he was responsible for driving the PE business. He comes with actually a whole host of experience, and I'm going to allow him to speak to us to bring his experience to bear, not just the academic excellence that he has, being a student of the Bombay University and also in MIMS Mumbai. He's also a CFA charter holder. So over to you, Prasad. I'm not going to say anything more, but let you do all the talking.
Thank you, Vandana ji, and a good morning to all the delegates. Can you move to the next slide, please? Let me, I think, begin by first of all complimenting you, Vandana ji, as well as your colleagues at the Ministry of Civil Aviation, plus the officials of GIFT City. I think in a very short time we have seen very interesting developments, very significant progress on multiple regulatory fronts, and it's quite interesting and heartening to see that. So my compliments to you. Secondly, let me thank you to the organizers, FICCI, for putting this masterclass together and inviting us for this event. What I'm going to do quickly today is really to paint a kind of a broad brush picture of the AI industry in India in terms of how it operates, the characteristics it has, what are some of its peculiarities, and what has been its involvement with the aviation sector. So essentially, first of all, AIF stands for Alternate Investment Funds. And it's a specific product which is regulated under the SEBI's AIF guidelines. So there are, in around 2011-12, SEBI came up with a very specific set of guidelines. Prior to that, we had some venture capital regulations and some mix and match kind of regulations, but we did not have focused regulations for this product. And that's when SEBI came up with specialized guidelines, and they came up with 3 categories of AIFs, and those exist even today. The category 1 is really around sectors which the government thought are important for it from a development point of view, from an external outreach point of view, from a perspective of developing various areas of the economy. And so that's the sector, that's a category which is focused on infrastructure, startup industry, social ventures, SMEs, and so on and so forth. The category 2, which is really the largest of all the categories, is the mainstay, which is the private equity industry. It also has some mezzanine and debt kind of funds, which falls under this category. And then there is a category 3, which is really a little more short-term oriented. It employs interesting, complex strategies of hedge funds, of long, short, and so on and so forth. And again, a product which is increasingly gaining traction in the market from an investment point of view. But as you can see from the graph, really the mainstay is the category 2. 70-75% of the market is really falling into this category. The industry, in some sense, has been around for 20 years, but it has really formalized, as I said, for the last 10 years when the guidelines came in for AIFs. And it's really over the last maybe 3, 4, 5 years that it's starting to mature. Earlier, there were players who approached it in a particular manner, but the formalization of the industry, the slowly institutionalization of the industry, the specific disclosures, the regulations, all of that, I think, has started to come together much better over the last 3 to 5 years. And that has improved its performance in terms of its investments, in terms of its exits, and so on and so forth. The industry has roughly raised about $50 to $55 billion in the last 7-8 years. And this is domestic. Okay, so when I'm talking of all of these numbers, we are talking about mainly domestic AIF industry. We have about 250-300 domestic fund managers who operate in the country and who manage this $50 billion. If you add the global capital, I think that will be a multiple of these numbers. And just to give you a sense, in the last year itself, India saw about $28 to $30 billion of private equity investments which came in. The prior year was something around $15 billion. So if you put two years together itself, we have seen $35 billion of actual inflows, and large part of it has been global AIFs also, which have been investors. So we have both of these investors which invest in our market. Can you move to the next slide, please? The key characteristics, right? How do AIFs work? So AIFs really, each AIF is a distinctly legal entity. Most of them are structured as trusts, but the point to note is each AIF has a separate legal existence of its own. So NIF, we have 3 funds and 3 AIFs, and each is a separate legal entity of its own. And that's how the AIFs are structured, and in terms of its mandate and in terms of the regulatory structure it is required. And depending on what strategies one is employing, what is the track record, AIFs have different tenures. So at the shorter end, we have some AIFs which are maybe 7-8 years long. And at the longer end, we have about 15-year kind of AIFs also which exist in this country. Each AIF, when the manager is raising money, so the point again to note is each AIF is a trust, and it is managed by what is called an asset manager, which is a separate legal entity which sits outside. The manager manages this AIF and it raises a pool of capital for a particular investment strategy or a particular purpose from a set of investors. And so when one has 2 AIFs or 3 AIFs, for every AIF you separately set up a trust, you get different set of investors, you have its own distinct strategy, and so on and so forth. That's how this works. Historically and even till today, the bulk of the investors into these AIFs have been global investors. So I would think 85% plus of the capital which has come into this sector, even into the domestic AIFs, it is global money, and it comes from 3-4 main sources. It's sovereign wealth funds, it is pension funds, you have multilateral development banks, you have family offices, you have endowment funds, you have university funds. These are some of the main contributors into these AIFs. And when the AIFs are themselves charting out their investment strategy and styles, there are again multiple strategies they employ. Some of them set up their own companies, which are called platforms. Some look at buyouts, which means they buy out existing businesses and then they rebrand and reset those businesses. And then some also take up minority stakes or passive stakes in other ventures. So again, depending on every entity's strategy and style, it can range across all of these. Talking about NIF, I mentioned we have 3 distinct funds, each with its which has been raised and with its own investment strategy. The first fund we set up is called the Master Fund. It is an infrastructure fund which has been raised to invest in core infrastructure projects in this country, most of them operating projects. And that has been raised from sovereign wealth funds, pension funds, Canadians, Australians, Middle East. All of these have been contributors into that fund. Our second fund is what we call a fund of funds, which is an investor into other private equity managers. So it does not invest in businesses or companies directly, but it invests in other managers who are doing this business in the country. And that has come from multilateral development banks have been important contributors to that. And for the first fund, we have already closed the fundraise. It's about 2.4 billion, and we are already investing from that. The second fund we have closed to a significant extent. There is a small balance left, and that is what we are still in the process of closing with some of the potential investors. The third fund we have is a private equity style fund, which is called the Strategic Opportunities Fund. And there, that fund will potentially be about 2 billion, and we have just begun the fundraise process, and we have started our dialogue with investors for that fund. So that's how NIF funds are structured. Can we move to the next slide, please? Moving on to the tryst or the experience that AIFs have with aviation. I think it has been periodic, but still a fairly long-standing history that way. Over the last 15-20 years, at different points in time, AIFs have had participation in the aviation sector. And it has ranged from different things. So on one hand, it has been into airlines, as you can see, people like SpiceJet, people like Air Deccan, and although it no longer exists, but when it had started off, it had been able to attract investments from AIFs back then. And some of these investors some were domestic, like ICICI Venture, some were global investors like WL Ross. The second category is really service providers like MROs. So Airworks is again a very well-known name to all of you. They have got investments from a bunch of investors like GTI Capital, Elephant, and so on and so forth. And at the other end of the spectrum in hard assets, which is airports. Airports again has seen large investment from domestic as well as international investors. Sorry, people like IDFC have invested in that. People like Macquarie, Fairfax. I think the point to note is both global and Indian AIFs have had participation with the aviation sector in the past. And like in any industry, as Mr. Tiwari also outlined, so there are some good experiences, there are some not so good experiences, and that's how it's been. Can we move to the next slide, please? I think, as I outlined, the AIF industry has seen participation in different elements of the value chain of the aviation industry, and now it's heartening to see that a new area open up in this space, and which is the aircraft leasing business. Honestly, a couple of points I've put here, but I don't have to really preach this to the already converted in terms of how big the Indian aviation opportunity is and how big a growth story it can be. So that, and I'm sure all of you are have more expertise on this than me. The key important things to, I think, note is really the regulatory processes, the frameworks have evolved and have progressed extensively, thanks to all the efforts of the ministry and GIFT. So that's a very encouraging sign. And now various elements of this whole thing are starting to come together, as we can see even at this event. From our perspective, as we look at it clearly, domestic is the big story, and whilst domestic is the big story in terms of our market size, we're going to have maybe 1,000 odd planes getting added in the next couple of years. But at the same time, we would always think it will be crucial for this industry and any business which sets up focused on this for domestic market to also have strong global linkages, because this whole business has a very strong international character, and so right at the outset one will have to build in those kind of international linkages, international connectedness with the global ecosystem, and that will be a crucial element of the business structure itself. Definitely, it will. It's a very specialized business. Again, has been outlined by all the speakers before me. So we will need the right talent pool. The right kind of skill sets are absolutely critical. We'll have to bring all of these things together to tap this opportunity in the right manner. But given all of these ingredients which we are seeing, and surely we are right now going through a little bit of a difficult phase because of the pandemic, but I'm trying to look beyond that, and we're hopeful that we will be shortly or at least in some reasonable time we will be able to overcome that. But after that, the Indian aviation sector story should be again coming back to the high growth path that it has seen in the last 5-10 years. And with that, we think that it really creates a good potential for specialized, this aircraft leasing is going to be a specialized business. The way I describe different AIFs, in some sense, it's a specific new category in itself, what is called globally, it's called the asset financing business. And there is a good potential one can see for an asset financing business, which is getting developed in this country. And given that, I believe there is going to be a good potential to pull in capital from domestic investors, global investors for this aircraft leasing business. I touched upon some numbers just to give you a sense. Domestic, so although currently AIFs are largely funded by global investors, in terms of long-term domestic capital, and this I'm talking about insurance money, pension money, we have about $800 billion of capital in this country. Globally, pension insurance industries invest up to 5-10% of their capital, or sometimes even higher, into AIFs. If I say even 5% of $800 billion can come into AIFs, that is about $40-50 billion. So that's the potential we have for attracting into AIF industry into this country. The good news is the government has also recognized that, and they have started some initial steps in this direction very recently. Some of you would have noted some policy changes have happened, enabling pension funds to invest into AIF. So I think all of these ingredients are slowly starting to come together. Obviously, the progress is going to be gradual, but there is potential to pool this domestic capital with the global capital for this kind of a sunrise business in this country. That's our strong belief. I'm going to take a pause here. Happy to take if there are any questions, but thank you.
Thank you so much. Such a wonderful, valuable insight into the world of alternate investment funds. I can only say that when I heard 55 billion that NIIF has already raised, I was tempted to say, we need only 5 billion annually.
Sorry, madam,
out of
55 billion is for the industry. I would love for NIIF to have 55 billion. Sorry, I meant the industry.
So from the industry, we just need 5 billion. And later on, when you spoke about 40 to 50 billion, I started salivating from the word go. So all I can request alternate investment funds and NIIF in particular, with whom we have been working very closely. Akhilesh has been a valuable member of MOCA in the past, and now we hope that we will get an insider advantage, if you like, in NIIF. This is not something that all serious bureaucrats should be saying, but I'm hardly the serious type. So, but the short point, I think, is yes, AIFs in India have matured in the last 3 to 4 years very seriously. You brought that out very well. And what we are looking at is for baptism by fire for you in creating that capital pool for aircraft leasing and financing that you mentioned. Time is never available in quite the abundance that all risk management experts would need. So I can only say that it's time, just as Government of India has taken a huge big chance with aircraft financing and leasing, that the alternate investment funds through NIIF taking the lead also do so. So there are all the categories of financing which Ashwini had also spoken of, and alternate investment funds can also tie up to fill the gaps, if nothing else, to start with, while we make a slow but steady and assured cooperation between the different types of financing which could be available. Thank you, Prasad. I'm not going to speak because I've already taken liberties with our panelists from Boeing, and my 1,000 apologies to them. So I hope you will be there to answer the questions at the end of this panel discussion. So I'm now going to go into the global perspective and how we can learn from the experience of Boeing Capital Corporation. There will be 3 presentations. One will be by Anil Patel, whom I again know very well, going back 2 years at least. He has been a good partner with us in helping us understand various issues of aircraft leasing and financing. And I cannot but place on record the invaluable role that Purvi Maheshwari from Boeing Capital also played in working out many aspects of the leasing and financing ecosystem with us. Anil Patel is Managing Director of the Customer Finance Asia Pac and India region in Boeing Capital Corporation. He has been with the Boeing company since 1985 and has held various positions. His responsibilities presently include customer financing support for new commercial aircraft sales by providing assistance to airlines who are seeking financing through lessors, commercial banks, capital markets, or covered financing such as AFIC, UKEF, SARCHE, or the US Exim Bank. He also communicates with financial institutions and investors regarding Boeing commercial aircraft products and services, and is actively engaged in enhancing and expanding the capital markets for Boeing aircraft and services. He and his team are responsible for Southeast Asia, Oceania, India, Korea, and Japan. And he has also led the efforts to successfully ratify the Cape Town Convention in Pakistan, India, Bangladesh, Oman, and Vietnam. He is responsible for sale and leasing of both new and used aircraft. He is a structural engineer, a certified engineer, and he holds a Bachelor of Science, a Master of Science in Civil Engineering, and a Juris Doctorate degree in law. So over to you, Anil. Tell us what's the aircraft financing outlook.
Thanks very much for that kind introduction, Vandana. It's my pleasure to be here. Thank you very much for giving the opportunity for the Boeing team to speak at this important event. And, you know, on a personal level, I've been working with our airline customers in India for the last 20 years, helping them arrange financing. And it's been a long journey, but it's really, important, and I'm really excited to see the developments here at GIFT City and the progress that's been made, and we look forward to the transactions that would flow through there. So what I would like to do is, in mind, talk about kind of the financing outlook. So I'll probably, what I'd like to first talk about is kind of the overall market size. You know, what's the market size globally and in India in terms of aircraft and volume? And then secondly, I'll talk about the ways that aircraft opportunity is financed globally, the different sources of financing, whether it's leasing, debt, and so forth. And then I'll also touch on the kind of the status or the current state of those various sources of financing. And obviously the implications that they may have on India and the plans for GIFT City. So next, what I just want to caution is that there will be some forward-looking statements here. So please refer to the Boeing financials if you have any questions or interest. Next slide, please. Just looking first at the overall demand for travel and traffic, right? That's a really important place to start. And when we look at the current situation with the COVID impact that's going on right now, we're clearly in a very, very difficult situation. But we've had similar experiences in the past. We had the 9/11 crisis, we had the financial crisis that happened in 2008. So we've had some of these shocks to the system before, but in the end, after a certain period of time, each time the industry has recovered and actually performed very well over that over the long horizon. And so we expect the same thing to happen here. The industry and aviation market is resilient. It's much deeper, much bigger impact than the previous ones. That's very, very clear if you look at this slide. But we still expect that the travel is really important and that it will recover over time. And so that's, I think, one of the key things that we want to emphasize here, the fundamental requirement for travel and the demand we expect to get back on track later on. Next slide, please. And then with that traffic, we spent a lot of time trying to understand the demand for traffic and travel and what that translates into the number of aircraft and the units that will need to be delivered. So we spent a lot of time of trying to forecast that, and we've been pretty good at it over the last 20 years. And every year we come out with what's called a current market outlook, or CMO. And one of the things that we publish in that is trying to identify the number of aircraft units that'll be financed over the next 20 years. And clearly the COVID situation that's going on right now has an impact on that. And so if you look at the next 10 years, the fleet will be smaller over the next 10 years. Even over the next 20 years, it'll be smaller, and the COVID impact, we think, will have a impact on it. In fact, over the next 20 years, we think that there'll be about a 4% less number of units that we'll be delivering on an industry basis over the next 20 years. And so I think the impact is going to be there, but we expect the long-term trend still to be very positive. As I mentioned, the industry, we think, is resilient. So I think that's the key thing. And so over the next 10 years, we expect about over 18,000 units to aircraft to be delivered to the market. And when you look over the next 20 years, it's about over 40,000. So I think it's still a very strong industry, and people who are in this industry are in it for the long run. If you come into the industry and you step out of it when times get difficult, you can get burned. So I think the key thing here is you need to be in the industry and stay in it for the long run. That's how you actually reap the benefits of the industry. Next slide. So we looked at the overall global industry, what the number of units we're going to deliver to the market. And now I want to focus on the number of units we're going to deliver to India. And this is, if you look at 1999, there were about 112 aircraft in 1999 in India. In 2019, there's over 550 aircraft. And then in 2039, we expect 4 times that, about 2,300 aircraft. And I think that's actually pretty consistent with what SBI's view was as well. And I think that translates into about $320 billion of financing opportunity for the industry. So I think that's a really good sign. But that's just an indication of the fact that as we develop GIFT City, that the opportunity that can flow through there is pretty large. Next slide, please. And then this is a chart which we publish every year, which indicates the different sources of financing for aircraft. And you have the different sources, meaning leasing, capital markets, commercial banks, export credit. So all the different sources, and we try to identify whether they're healthy. If they're healthy, there's a green here. If it's kind of middle of the road or some concern, then it's yellow. And if it's not really healthy and not providing sources of financing, then it's red. And so when you look from left to right, if you look at the far left is 2009, and that's when we had the impact of the financial crisis. You can see a lot of red or orange, so to speak. But if you look further all the way to the right at 2020, you can see that the markets in 2019 were pretty green, a lot of financing from all the sources, but the big impact in 2020, obviously, because of COVID and what happened there. And in fact, the commercial banks it's very difficult to get financing from commercial banks for a short period of time. So I think that's the thing. But I think in 2021, which we will come out here probably in the next later this month, we'll provide an indication of what's happening in 2020. But we expect all of these areas to improve in the 2020 timeframe. Probably the ECAs and the credit enhanced and the OEM support probably all stay about the same. But everything else we expect to improve a little bit as the industry, as the market starts to improve. Next slide, please. And I think leasing is a big factor in financing our aircraft deliveries. It's almost 50% of the aircraft financing is through leasing. In 2020, there's about 10,000 aircraft that are on operating leases today, about 40% in Asia Pac. And so what's happening with leasing today is it's a very challenging, dynamic situation right now. There are a tremendous amount of restructuring going on with all those aircraft that are on lease to customers throughout the world globally, rent deferrals, restructuring, rent holidays, workouts, all that is going on. So they're busy doing that. They're also trying to shore up liquidity. So as they take delivery of new aircraft and try to book more business, they do need to make sure that they have financing available for all those new opportunities. So that's something they're working on. And they're also taking a look at risk manage. Are we too focused in a certain geographic sector? Are we too focused on certain aircraft asset types, narrow bodies, wide bodies? So there is a lot of focus on in that area as well. And those that have strong parents are going to be benefiting from that because they have the staying power then to be able to get through this crisis. And there is some consolidation going on. The biggest one, obviously, you hear about is GCAS and AirCap that's going on. But tremendous amount of and because GIFT City is a place where we're planning to do leasing through, there is tremendous opportunity here in the leasing channel here. Next slide, please. And then looking at commercial banks. This is also a big source of financing for aircraft deliveries and for our airline customers. 2020 obviously was very volatile. There were large facility drawdowns in 2020 for airlines that could get it. And in fact, shortly after March, when the big impact from COVID was experienced, there was a big increase in the credit spreads. But then later on in the year, the credit spreads have narrowed and come down. And we see that now that's improving today. So a big part of the bank market is starting to stabilize, but still, I think it's limited. So I think there is still opportunity for improvement here, but it is one that we think will get healthy over the long term. Next, please. And then talking about the next one is credit enhanced, and this is the one that that was mentioned before. This is where insurance companies have come in to provide the guarantees that similar to what Exim Bank provides, and this is a way for the insurance industry to participate in this sector. And since 2017, when this first product was issued through AFIC, about $5.5 billion of financing has been done until today. AFS, which is an ACG or Tokyo Century Leasing product, they've already done a few deals as well. So they're in the mix, and there's another new company as well. So there's more and more interest in this space as well. But they also have been suffering some restructurings, and so they're going to have to get through this period and make sure that this is something that they can stand through and get through to make sure they benefit from this sector. Next slide, please. And then I won't spend much time on this. This is there's a lot of talk on this one, Export Credit Agency or ECAs. This is US Exim Bank, UKEF, Saatchi, Export Finance Australia. It's pretty stable right now. They are working their pipelines, so we expect this to continue to be a source of financing that is there. And this is especially one that should be there during crises and help step in and provide liquidity when it's needed. Next slide. And then the capital markets, this is probably focused more on the US and European markets. A big source of financing for the US lessors, or I should say global lessors, not just US lessors, and US carriers. They did over $100 billion last year. It's not as heavily used elsewhere, but it is starting to expand. They are, as collateral, they are using innovative structures. So for example, the loyalty programs, Delta, American, some of them have used these loyalty programs as collateral to finance some of these capital markets products. But definitely a little bit of stress in this market as well. Next slide, please. And then I think one thing that I want to mention is the ESG or environmental social governance. There is a lot of interest in making sure that the sector itself is focusing on green technology, green investments. So when new money is coming into this space, they are focused and have questions about how green is this space. So I think that's something we have to watch, and we are very mindful of it. The AWG has just developed a carbon calculator, so you can look and see how things have changed for an airline over time. And airlines, they're very focused on consumers as well. Whoever's buying tickets on them are looking at their carbon footprint. And so airlines are very mindful of who their customers are and what their requirements are. And so one of the ways they can do that is obviously new technology aircraft, which is a way to reduce the carbon emissions. So a big focus, we want to make sure that that's something we're all aware of. Next slide, please. And I'll close with this slide, which is aviation is a kind of a long-term investment area. Like I said, I think folks who are in this sector, who want to make money and benefit from this sector, really need to understand that you need to be long-term focused. It is growing. We expect it to be continue to be a very balanced demand geographically. The product profile is pretty stable. The assets are 25 to 30-year life assets, and it's pretty mature. And the global finance markets are pretty mature as well. And obviously, the Gift City will be one of the ones that we hope to add into this space and include as part of the plan going forward. Thank you very much.
Thank you, Anil, for giving us such an important perspective. And during the future discussions, including today's deliberations, we would love to hear what kind of a role and growth pattern you perceive could be played by the Gift City financing in aircraft leasing in a more globalized perspective. I note that you did speak about the global markets being very resilient over time. They have withstood the shocks. One of the things that never ceases to amaze me, and you also touched on it, is that the airframe and the engine manufacturers were shown in the cautionary financing environment. So are the airlines. So it never amazes me as to how, other than the aircraft manufacturer and the airline, everybody else seems to be making money. So how can we turn this around? Of course, while we're talking about aircraft leasing and financing, I know that this is the most lucrative leg of the aviation aircraft value chains. So let's work on and try to see how we can bring in Indian capital also to play alongside the global funds which are available. So there's no replacement in a sense, but it's the idea of in the enhanced and growing India market, how Indian capital can also come in with a heightened incremental role. So thank you so much, and I'm sure we will revert to you with questions. Now it's my very great pleasure to invite Patricia Lodge to discuss the aircraft financing structures. Patricia is a Senior Director, Customer Finance Asia Pac and India in Boeing Capital Corporation. She has been in the Boeing company since 2012, and she is the Senior Finance Director who covers airlines in India, Pacific Islands, Australia, and New Zealand. Patricia supports the Boeing commercial airplane deliveries by working with financiers and airlines to assure availability of financing for aircraft at the time of delivery. Prior to this, she was the account manager for Europe, Russia, Central Asia regional teams. So, she comes with varied experience, and she has also worked as an attorney for several organizations in the broader Seattle area. She's a graduate of Washington State University, earning a Bachelor of Arts in Political Science, Global Politics, and has a Juris Doctorate degree from Willamette University and is licensed to practice law in the state of Washington. So, Patricia, over to you, please.
you, Vandana, for the introduction, and happy to be a part of the presentation and conversation today on aircraft finance, and specifically here on aircraft finance structures. Certain of these topics here that my agenda that I'm going through, Ashwini from SBI very thoughtfully and thoroughly covered. So I'm happy to delve into some of those items in a little bit more detail. But first, I'm going to start off talking about some of the hierarchy of aircraft finance principles, flowing into then a few of the different finance structures, whether it be operating lease and sale leaseback, the bank debt market, and talking a little bit further on the private sector's credit enhanced products, as well as export credit and capital markets. To start off here, I kind of prepared this slide talking about how an airline views leasing aircraft versus ownership and some of the decision-making process that an airline might go through as they decide how to finance their fleet and build their fleet and grow. Certainly, there are advantages to both purchasing and leasing. I don't need to read all of these off here, but an airline certainly has the ability to build up equity in the aircraft and benefit from an aircraft's residual value if they decide to purchase the aircraft and then finance it, and whether it be a capital markets or an XM type structure or debt. Certainly has the benefits there. We saw a lot of airlines here in 2020 last year. COVID impacted leveraging some of their owned aircraft that they had equity in to do sale leasebacks and generate and raise capital in a period where they were experiencing stressed liquidity. Whereas the pure operating lease of an airline taking aircraft from a lessor's order book has the benefit of getting the aircraft faster than, say, an order might have otherwise taken them through an OEM. And the lessor itself assumes the residual value risk. A cost comparison is definitely important to do between the two and evaluate the different finance structures that are used. Operating leases in the long run can cost more money, but the upfront costs are much lower for the capital expenditures of the airline, since they are simply paying the operating lease instead of buying the whole aircraft outright. Of course, when an airline is buying an aircraft from a manufacturer, they need to think about those pre-delivery payments that were previously mentioned. Multiple sources of financing the pre-delivery payments, whether it be cash that airline has on hand or that they're able to raise through unsecured financing. Banks are also a source of PDP financing. Not all banks are, in the PDP financing market, but certainly the liquidity is there when there's a strong relationship between the airline and the bank, or it's a bank that is much more focused on the asset value of the aircraft and willing to take, perhaps the higher risk that might be there, since they're not funding an actual metal aircraft, but rather funding against a purchase agreement. Lessors are a huge source of PDP financing, whether it be a standalone short-term loan, or they provide the advanced sale leaseback financing and take the aircraft when it's ready for delivery with a lease to the operator. And then just some other general private placement or raising funds through the capital markets to fund the payments to the OEM for PDPs. And a very high level review of the sources of aircraft financing. These have all been previously discussed, but leasing, debt, capital markets, or export credit. And here I wanted my last slide here on the aircraft principles to talk about is how credit and the jurisdiction and asset areas kind of come together to view what a financier might view their investment in the aircraft and the airline, and how they might be mitigating some of the risks there. And these factors weigh into how is a financier going to price the deal in the long run, and what can they do in the transaction to make their valuation more secure to protect the return. So on the credit and the asset risk mitigation side, a financier might watch what the advance rate that they're advancing and make a smaller advance if they're need to protect themselves more, changing the term from short term to a long term. asking for extra collateral to mitigate perhaps a high loan-to-value ratio, or asking for maintenance reserves or a security deposit or that lease fee upfront, or perhaps a parental guarantee. Then on the jurisdiction side, a financier can look to what country the asset's in, or certainly it has the country ratified the Cape Town Convention, or if the situation did deteriorate with the and a default perhaps is there the certainty that the creditor would able to retain back their asset in the event of bankruptcy, which India certainly has shown success in implementation of the Cape Town Convention. Next topic I'll go into is operating lease and sale leaseback. It's been previously mentioned here tonight that we've seen a very growing leasing industry, and it's grown rapidly over the past couple of decades, and we're hovering just over 45% of the global fleet is on operating lease. There's lots of opportunities for financiers in the leasing industry to participate in this market with the future growing aviation fleet, and especially in GIFT City there certainly doesn't really need to be restated, but there's plenty of wealth of opportunity there. This is this typical operating lease structure. I don't feel like I need to go into it, but in an operating lease, to highlight, the leasing company holds both the legal ownership and the economic ownership of the aircraft. And they can choose to finance the aircraft with the banks in order to fund the aircraft. The one difference between an operating lease and a sale leaseback is this transaction starts off with the airline's purchase of the aircraft from the manufacturer and holds the purchase agreement, and then chooses to sell the aircraft to the leasing company at an agreed purchase price between the parties, with the operating lease flowing between the airline and the leasing company. And then the leasing company, of course, at delivery can choose to finance the aircraft in whatever manner they wish to finance it. Some very high-level characteristics of operating leases. The only thing I need to highlight here that varies from what was there is that within an operating lease, the term is essentially of mutual negotiation between the lessor and the operator, but an airline may have the option to negotiate a term extension or purchase of the aircraft at the aircraft's fair market value during the term of the lease. It is a way for the airline to continue operation of the aircraft. Three main components of the operating lease costs, largest of which, the lease terms of the rental, typically about 0.7 to 1% of the new aircraft costs on a monthly basis. Building up into this is very important is the negotiation of the return conditions of the aircraft. And that's very important on both the operator side and on the lessor side, as it helps to protect the lessor's interest, and will the airline be able to manage the operating lease over the course of his lease to meet those return conditions so that there's no surprise expenditures at the end of the lease. Maintenance rent is typically paid in cash and can vary. And then with the lease fee or a security deposit of a 2 to 3 month lease rental payments, and you can frequently see lessors willing to accept that security deposit in the form of a letter of credit, a standby letter of credit, could be negotiated as well. Here I'll spend some time talking about the elements of a lease pricing. And this is coming from more of the financier perspective of what items need to be considered when setting the monthly rent. And not giving specific numbers here, but talking about whether something has a high, medium, or low impact on what that monthly rent will be. Obviously, the very high impact is how much the aircraft purchase price is. And then following closely behind that into importance is what return is the lessor looking to get, and in return, what are those lessors' funding costs? Not all lessors have the same amount of funding costs. Large investment grade lessors are able to raise funds quite cheaply. They are heavy users of capital markets and perhaps can kind of squeeze their funding costs. But other smaller lessors, perhaps they need to find debt to secure the aircraft and have a little higher cost of funds, and so the pricing between a smaller lessor and a larger investment grade lessor might vary. And then the term of the lease, and then the residual value of the aircraft, and managing that expected residual value has a huge weight on that monthly rent that you need to charge to, say, recover residual value or manage your way to that. And here I simply want to show, this is a very simplified view of the lease economics that and the items that were shown on the prior chart, where you see, you know, in blue, it's the lessor's, the acquisition price that the lessor must pay for the aircraft. And then it highlights, you know, some of the buckets of funds that a lessor will need to make sure that their lease rate is covering as they price the deal, you know, whether it's the operating expenses of the lessor itself, and, you know, their transition, their cost of doing business, whether it be upfront costs and recurring costs, what it might cost a lessor to transition the aircraft, to get the aircraft into a delivery condition for follow-on lessor. All of those items are something that the lessor might want to price into their upfront lease as a way to be more conservative. And then you're always managing to how much you need to pay by way of funding costs on an annual basis to cover, you know, the lessor's debt on the aircraft, and then the expected rent that you would be receiving from the operator there in orange over the course of the lease, and then always watching how that residual value is going to be coming down in the future, because it kind of mirrors up with what the lessor's you know, net cash for the lessor and what their book value might be. Here we'll get into the topic of bank debt as by way of financing aircraft. Bank financing is a highly prevalent and a very common way of financing aircraft. There's, you know, I'll just call out a slight difference between your short-term financing, might be the pre-delivery payments, fundings that I'd mentioned previously, and bridge financing in case an airline hasn't been able to line up permanent term financing by the time an aircraft is ready for delivery. Multiple lenders and banks out there will provide bridge financing as, say, a 6 months to a 1 year term. Whereas when we say term financing, we're talking about, you know, the senior debt on the aircraft, the junior debt, or the debt that export credit agency or some other credit enhanced product might be providing. The bridge financing, if as meant term financing, if it can't be put in place at the time of delivery, bridge financing is a way to be, you know, pulled together to give the airline more time to pull together permanent financing. That doesn't mean that it's, you know, any faster to pull together. Certainly, I believe that there's just as much documentation and time and effort that goes into a bridge financing, but it's important for those financials to be financing to be there for an airline if they need it to deliver the aircraft. PDP financing was covered by Ashwini in his conversation very thoroughly. So just to highlight here that once again, that the security in a PDP financing is the assignment of the purchase contract itself. And it's very important that, you know, the airlines are able to find ongoing adequate PDP, you know, source of funds. So it's a smaller niche market, we might say, with not as many banks providing PDP funds. So it's an increasingly growing area where a financier can step up and get comfortable with taking the risk that an airline might not take delivery or get term financing arranged in time. But it's a very important and open method of funding that a bank can do to participate. Just highlight differences between PDP and permanent financing. When you're doing a term financing of an aircraft, your collateral is the metal itself. It's an aircraft that's, you know, maneuverable. It goes around the globe, but it's physical. And typically the airline has, say, a 20% equity in the deal. Similarly, we typically see some form of equity in a PDP financing deal, with the airline having some stake in the aircraft, but the collateral is with the OEM. The collateral is the purchase agreement, and the aircraft itself is being built. Senior debt, we certainly see tenors of senior debt ranging, anywhere from 8 to 12 years, and advance rates usually are typically around 80%. In say COVID impacted markets, where lenders might get a little more cautious about what the residual value of the aircraft might be, or if they're trying to get more conservative, they might drop that advance rate to say 70%. But the senior debt financier is always going to have a first mortgage security on the aircraft, with the payments being paid out monthly or quarterly over the life of the transaction, and earning interest on a fixed or floating rate. Loans, we typically see loans in, say, US dollars due to frequently the asset values being based in dollars, but certainly loans against aircraft are available in the currency of the airline. Here's a simple overview of the mortgage structure of an aircraft. I don't believe we need to get too far into it because it was covered previously. But in a mortgage, the legal ownership and the economic ownership remains with the airline itself, and then the airline finances, say, it gets the direct loan from the bank and provides the mortgage to the bank. I would like to highlight the difference between this mortgage style loan with the finance lease that puts the special purpose company, or SPV, in the middle of the structure, typically set up as a way for a lender to have an enhanced interest in form of security in this aircraft transaction, because they actually hold title to the aircraft, whether it be directly if the lender sets up the SPV itself, or if it's with a charitable trust with a securities pledged to the lender. And the finance leases are generally exempt from sovereign debt restructuring. So just to highlight the difference in a finance lease versus the mortgage as previously shown, the airline has the purchase agreement with the manufacturer. However, legal ownership and economic ownership transfers to the SPC the legal ownership transfers to the SPC at the time of delivery. However, the economic ownership remains with the airline by way of the finance lease, and it pays down over the life of the 12-year lease, with the airline being able to hold the legal ownership by the end of the term, whether it be a sale from that special purpose company to the airline, or assignment of all the shares of that SPC reverts back to the airline. Junior debt is a way for an airline to get close to 100% financing. Here in blue is just a sample structure, but in blue would be the XM guaranteed loan, with the green showing the junior loan. Junior loans are typically shorter in tenor than the senior, and might be more expensive due to the weaker collateral coverage that the junior loan is accepting in this transaction. And here you see in red, this is what we say is the residual value of the aircraft coming down over years. And so the goal of both the junior and the senior is to be fully covered in collateral over the life of the loan. However, as we're seeing, with some market depressions, is what we're experienced last year, COVID impacted, where aircraft values, as far as the current market value is concerned, it is taking a hit and weakened in some ways. And if there was the event that the airline, for whatever reason, had a bankruptcy or default on the loan in this area where this red dotted line has dipped below, say, the junior loan, there's no guarantee that the junior loan would ever get paid out in the event of default. So they would have to take the position of, do they buy out? The only way to get the return is to buy out that senior loan and get the aircraft, the collateral value itself. So it's a higher risk of a position, but they are typically getting rewarded by charging a higher interest rate on the transaction. I'll touch briefly on some private sector credit enhanced products that are available. AFIC has previously been mentioned. This is the standard AFIC structure set up by Marsh. They're certainly not the only one. There are others very similar structures. Marsh has a couple different ones of, for this one here is for Boeing, and then there's another Airbus Balthazar structure, along with the ACG ones mentioned by Anil previously. And what these types of structures, insurance-backed do is that they give the, an enhanced credit rating to the airline, and encourages a bank or that investor to come in and perhaps lend to the airline at a lower interest rate than they otherwise would have done due to this enhanced credit rating that they say it can come from having that insurance policy guaranteeing or providing, the comfort in the structure. Expert credit agencies really help bridging the gap in commercial financing. We have seen in the past that expert credit agencies really are able to fill a huge role in supporting the emerging markets. They will lend into or support countries and lend into structures in countries that might not have banks participating on their own, but banks would lend into it with a government guarantee, such as EXIM in the structure. Expert credit agencies can provide a stability during market interruptions. Anil showed the dips between, in the past that occurred after, say, 9/11 or during the financial crisis. And during those periods, we certainly saw an increased use of export credit to fund the airlines, whether it be the funding the lessors or the airlines themselves. And export credit agencies also have a role of maintaining the level playing field. There's global export credit agencies supporting, the companies in countries around the world, and all kind of step in to support the exports from those specific countries. The Export-Import Bank of the United States is the official, the ECA of the United States. They will provide loans, direct guarantees, or loans for new aircraft, used aircraft if it's less than 18 months old, for spare engines and other spare parts as well. Just a sampling of some of the global ECAs that exist that participate in aircraft financing today. UKEF has financed a certain number of Boeing aircraft as well over the past few years. In the lapse of that for a certain period of time, EXIM had lost its authorization but has recently become reauthorized and it's back up and running for aircraft financing. An ECA provides the loan guarantees covering the senior debt on the aircraft, typically covering the lesser of the 85% of the net price, or up to the US content, say if it was for an EXIM financing. They favor structuring their transactions to the cross-border finance lease with an SPV in the middle of the transaction. Depending on the credit of the airline seeking financing, the fee, the exposure fee would vary, but however, that fee can be financed over the loan term, and that is a fixed exposure fee that is set on a quarterly basis. And then there's a variety of risk mitigants that can be put into the transaction that the ECA might require, whether that be timing of when payments are made or cross collateralization to other aircraft. The EXIM basic structure, I don't think we heavily need to go into. It's standard, you can see there with the special purpose companies in the middle, with the EXIM providing the guarantee to the lending bank. The final few slides here are set to talk on the capital markets and how the capital markets participate in financing aircraft. And Neil previously alluded to the fact that U.S. it's not just U.S. based, but it is predominantly used by international lessors and U.S. airlines, with a few other global airlines mixed in there as well. And what do you mean by capital markets? It's that non-bank debt financing issued to institutional investors. Frequently, we see this as unsecured notes based on the airline or the lessor's credits, secured notes, privately placed, and the collateral that can be used with secured notes can be anywhere from aircraft to slots to a variety of new and always kind of changing view of what can be used as collateral in these transactions. And then finally is the enhanced equipment trust certificates, or ETC, which is secured debt with some enhancements to the deal structure to improve the pricing from the airline. The ETCs are frequently seen in the US market with some of the US major airlines using them, but also there are ETCs that have been issued globally by airlines around the world as a way to finance a set of aircraft. So they're more of a sophisticated financing structure than an airline works with an investment bank to set up and to the best structure to obtain a good pricing from the investors. And it's really done to facilitate financing of a large volume of aircraft. ETCs really benefit from having a diversity of aircraft that are in the structure. The investors are able to obtain enhanced protection, or that's where the enhancement comes into it. And because that collateral can be diverse. And then there's some different structural enhancements that the investment bankers and the airlines can do to structure it so the whole into different certificates, so that each class can perhaps be made of a different degree of what assets or what collateral, and then the pricing might change over the course of it. And then the legal framework in the US and Cape Town has really provided certainty that the investors would have readily access to the aircraft collateral in the event there was an issue that arose during the time that the ETC was active. An airline will have an equity portion in the deal, and so when the structure is done, say it's a 12-year deal, the airline buys out the equity piece and owns the aircraft at the end of the financing. So this is my final slide. The world of aircraft finance is really a whole team of groups working together, whether the customers and the airlines, all of the capital providers, whether it be the banks and the lessors, the private equity investors, the insurers, and then all of the policy and opinion leaders that drive legislation to change and improve and enhance the aircraft financing environment. And certainly I think we're seeing this start to work together in India with all of the different entities and groups coming together to find a way to finance aircraft efficiently within India, and especially to benefit the India aviation market. Thank you for your time today.
Thank you, Patricia, for providing such a holistic treatise to what is actually a very complex subject, where there is so much of variation which is possible in how capital financing is structured. So in my mind, a huge number of questions already arise, and I would love to sit with all of you and the Indian banks to see, and alternate fronts, to see how we can, actually structure deals which take care of India's specificities and help to lower the lease pricing, in a sense. You had given very informatively all the elements of the lease pricing. So, for instance, one of the elements that you had mentioned was that the return cost at lease end could be, low to high. So how is it that for the Indian environment, or actually why only the Indian environment, but from the GIFT City environment and the lessors who operate from there, how we can work to lessen that from the high cost to the lower end. Some of the things that have always bothered me is, very well brought out by you in the working out the enhancements of the credit as well. For instance, all your EETCs. For instance, when I look at credit rating, it never ceases to amaze me as to why India's rating should be as low as it usually is. And, when India gets equated with the sovereign entities from across the world which have defaulted, when India has never defaulted. So I look askance actually at the credit rating agency, and I have dealt with them in my previous avatars where we did work with them to try and improve the way they do the credit rating of different countries. By removing a huge portion of the discriminatory or discretionary element in it, so that our private sector or public sector corporates, when their risk is being priced, they do not have an overhang of the overall country risk and the credit rating in the credit rating. Equally, when we look at the way collaterals are worked out, or even the legal framework of the Cape Town, again, I would love to hear that Netherlands, which is sitting on one of our planes, when from India we have allowed all the aircraft to go back to the lessor, whether the Netherlands credit rating or the Cape Town risk decreased suddenly or not versus India's risk decreased or increased. I mean, how did it swing when they are sitting on aircraft? I'm not, these are very important things because, as you said, in any variation of a lease load, whether it is from 0.7 to 1 or it's even lower than that for the very low risk airlines which are leasing aircraft or are negotiating better terms. These are important elements to go through, because when India has created an environment which is covering all the policy aspects, all the regulatory aspects, these aspects which I have highlighted are beyond the control of the government in a sense, because these are being tackled by entities which are outside our regime. So I want to see how we can marry these to better effect in India. The relaxations that may be required to make foreign debt financing easier and more easily accessible, and how we can tie that up with the Indian capital. So there are many things that come to my mind, and I'm sure we will benefit from other conversations in a more detailed manner. But thank you so much, Patricia, for bringing a wealth of information, very detailed information, into our discussions here. I now swing to Mike Warner. He's going to provide, we move to asset valuations, and Mike Warner, he's the managing director of the aircraft programs and valuations in Boeing Capital Corporation. He's responsible for arranging, structuring, and providing financing solutions for airplanes, space, and defense products. I'm happy to see that you also handle defense products, because as you know, in India's environment, we have enabled leasing of defense aircraft as well. And I find that you are responsible for promoting Boeing commercial aircraft to financial institutions, appraisers, rating agencies, Wall Street investors, analysts, and other stakeholders. So, I would like to hear some answers to the questions that I raised as well. You have been the airplane development customer leader for Boeing commercial airplanes as well in the past. And your roles have included responsibilities for the 777X, the 737 MAX, 787 series of airplane programs. You have also served in the BCAs as Director of Market Analysis, leading the teams that develop and publish Boeing's annual commercial market outlook. I think you all have just released one yesterday or the day before, and we would love to hear from you how it's going as well. I know today you're doing asset valuations, so maybe we will look at it. So I'm going to let you go ahead with your presentation, Mike. Over to you.
Great. Thank you so much. And, thank you to the organizers for putting this all together and for the delegates for joining us here today. I really appreciate your time. I'd like to spend a bit of time here really talking about the drivers of aircraft values and our perspective on values as a manufacturer. I'd also, of course, like to spend a little time talking about the impact that the pandemic has had on valuations. Of course, aircraft are solid investments. One of the reasons that they are such a solid investment is the aviation market itself. As we heard from Anil, this is a very strong long-term growth market. And it's a market that's really built on the desire and the need for people to travel. We travel for personal reasons, we travel for business reasons. People want to travel, and that's not going to change. We're obviously in a downturn that is unlike any other that we have seen in our lifetimes. But time and time again, aviation has really shown itself to be extremely resilient. We know that it'll recover, and we're starting to see that already, and we're seeing that pent-up demand for air travel coming out. Aviation is also a tremendously diverse business. There's been fantastic growth, of course, in Asia, Middle East, and developing economies, and then the steady demand that we've had in mature markets in the US and in Europe. We've also seen incredibly steady and strong growth from the low-cost carriers who have shown that ability to really stimulate air travel and to get people to travel due to low fares. And we're in this period where there's this growing worldwide middle class, a large number of people who now for the first time have the ability to travel and want to travel. So these are all tremendous drivers of growth. And these drivers of growth really support aircraft values. And now the aircraft asset itself is a strong investment. Aircraft, as we know, are long-lived assets. They average about 25 years in service, with many staying in service for much longer than that. There's a predictable amortization of the assets, and it's also an industry where, of course, there are very high barriers to entry. So if we go to the next chart, please, I'd like to talk a little bit about the characteristics of aircraft and really what makes an aircraft a great investment and how OEMs view this. We as an OEM, as we design an aircraft, we're very much thinking about the elements that will support the long-term value and the residual values of the airplane. So what are some of those factors and what makes an airplane a great investment? A lot of that really, of course, starts with economics, right? So our airline customers are always driving us to develop the most economically efficient airplanes possible. This in terms of fuel burn, fuel burn is certainly the airline's largest cost, as well as other operating costs such as maintenance costs, spare parts, fees, etc. So as we develop new airplanes, we're always making significant improvements to cost because our customers push us to do that. For instance, the 787 Dreamliner, 20% more fuel efficient than the airplanes it's replacing. Not only is it 20% more fuel efficient, but it flies further with more comfort for passengers. And of course, the airplane capabilities themselves drive value in terms of aircraft size, the range capability of the airplane, and the ability of the airplane to open up new, longer range missions. So that's another factor that certainly is important to driving value and that we think of as we design new airplanes. Another one is having a family of aircraft. That family is so important. When we design an aircraft like the 787 Dreamliner or the 737, we really design it with different sizes. For instance, the 787 has 3 family members. This is important because an airline can gauge up or down based on demand in the market. It gives them room to grow or to perhaps downsize based on market demand. And those are really important drivers of value. Not listed here is another important aspect, and that's the end of life options. Aircraft like the 737-800, there's now a freighter conversion program. That really means after it ends its life as a passenger aircraft, it can be transitioned to the freighter market. It gives the airplane additional life and improves the residual value of the airplane. Many wide bodies, of course, like the 767 and now the 777, have freighter conversion programs as well, which, as I said, really continues to improve the residual value of that airplane. Now, on the right side of this chart, you'll see really some of the market drivers that determine value and value retention. And really customer base is key. It's important that an aircraft not only sell a large number of aircraft of units, but also that there's the number of customers and the diversity of those customers is also extremely important. This means an aircraft is a more liquid asset and it can easily move to a new customer if need be. Now, the 737 next generation 737 NG is really a great example of this, and it's probably the best residual value performer in history. The 737 NG, of course, sold over 7,100 units and has over 220 customers. So it's that type of broad customer base that really is a tremendous value driver. Some other items that I'll mention, the leasing market. Both Anil and Patricia mentioned this. It's a very important as well. And it's important for values because we all know that, as was mentioned, that leasing companies own about half of the aircraft fleet today, and a model that has good acceptance from the leasing companies and high penetration in the leasing market is very important. Another key area of importance is the secondary market. If the aircraft is going to be able to trade hands over its life, the first lease may be 12 years, but the life of the airplane itself is 25 years or maybe more. So an airplane that is easily tradable later in its life, that's an important driver for aircraft valuations. Now, there are things that we can do as an OEM to help with that, right? For instance, just in the design of our aircraft, in the design of the 787 Dreamliner, we very much took this into account and put less variability into the airplane so that one airline's configuration is more similar to another's, making transition between airlines easier. Generally, single-aisle aircraft are easier to transition than wide bodies, since wide bodies have more variation in their seats and their configuration and their in-flight entertainment. And all these things can be expensive to change or upgrade as the fleet change hands. So these are just some of the many drivers of value and certainly some of the things that we consider when we design airplanes. Now, if we go to the next chart, please. Want to continue really talking about what drives value in the market today, and what I think what we're seeing today, particularly given our market conditions, is that it's very important for operators to have the right fleets, right? And versatility and flexibility is really the key. These are big drivers of aircraft value. I think moving forward, there's going to be even more emphasis on the importance of airlines building the most versatile fleets. These are fleets that will, maximize capability, but also minimize risk and minimize cost. And these fleets will allow operators to really most efficiently serve markets and open new markets and really provide that future flexibility for their networks. This means really, truly having the right size aircraft and the right capability with the right efficiency. Another driver of that is environmental performance in terms of carbon emissions and noise. This will continue to play a large role in aviation. This is not going away. This has not changed because of the pandemic. And continual improvements in fuel efficiency and sustainability will be key, and those aircraft that are the most environmentally efficient will be the most in demand. And then in addition to that, finance stakeholders in the industry, many of you'll be looking for the most versatile assets that are deployable across networks, across business models, and across regions. And these are the airplanes that will have the highest value and retain their value the best. Just as an example, I certainly think of the 737 MAX. Here we have an airplane with outstanding economics. It's got a new engine, improved aerodynamics. It's more efficient than its predecessor, the 737NG. And also, as I mentioned before, just market demand. There's an incredible demand for single-aisle aircraft the size of the 737 MAX. Our long-term forecast calls for over 32,000 new single-aisle aircraft to be delivered over the next 20 years. And so there's a lot of growth in the single-aisle market. And in addition to growth, there's a lot of demand for just replacing the existing single-aisle fleet with these new, much more efficient products like the MAX. So let's go to the next chart, please. And I would like to talk a bit about values. And I think when talking about values, it's always good to start with definitions. Starting with the definition of base values, a base value is really an appraiser's opinion of the underlying economic value of the aircraft. And it's the value in an open and stable market with a balanced supply and demand. So this is somewhat of a theoretical value. Certainly today, we are not in a stable market and there's not a balance of supply and demand. And that's where market values come into play. So the market value is really an appraiser's opinion of the likely trading price under current market conditions, right? So as you can see on that chart on the right, market values fluctuate up and down based on market conditions. During periods of stability and growth, market values may exceed base values. And during downturns like the one we're in today, market values will be below base values. So let's just talk for a minute or two about what's happening in today's environment with base values and market values. And for the most part, base values have remained unchanged even during this downturn. While the impact of COVID has certainly been severe on the industry, I think that appraisers agree that the market will come back and that the economic value of the aircraft remains in place. There were some aircraft models that were, I'll say, already distressed before the pandemic. These are older end-of-life models, and we've seen some changes in base values to those aircraft. But for the most part, other base values have remained steady. Of course, where we've seen the impact during the pandemic is really to market values, right? So generally, market values have been more impacted for midlife and older airplanes and less impacted for newer aircraft. It's really those new, most efficient airplanes that have been the first to return to service. And these are the aircraft that airlines are really looking to build their fleets around going forward. We've also seen less of an impact to narrow body aircraft and wide body aircraft. Domestic and regional markets have been quickest to return back to their pre-pandemic levels, whether that's been slower certainly in international markets. So to generalize, what we've seen in terms of market value declines due to the pandemic, new technology aircraft, so 737 MAX, A320neo. On the wide body side, the 787s and A350s, we've seen pretty modest declines. I'll say single digit declines in market value, kind of between 5 and 8% drops in market value pre-pandemic to today. So relatively, I'd say relatively minor. We've seen certainly larger declines in market values for the midlife and aging aircraft. Again, with wide bodies more impacted than narrow bodies. If you look at, say, a midlife 737NG or A320, by that I mean a 10 to 12-year-old airplane, declines in market values have been about 15 to 20% due to the pandemic. And those values declines have been higher for wide bodies, for midlife wide bodies. A 10 or 12-year-old 777-300ER or A330, we've seen market value declines in the 25 to 30% range. So certainly more hit there. Freighter airplanes are really the exception to this, right? Because there's been such strong demand in the freighter market. We've seen many freighters coming out of storage, out of the desert and back into service. And freighter values have really remained constant, and in fact, in some cases increased from where they were when the pandemic started. I do want to go to the next chart, please, and talk a little bit about, I've talked about the impact of the pandemic on market values, and I wanted to stress again, what a resilient market we are in. This chart here shows, it's from one of our appraisers, IBA, and it shows market values relative to base values. And it does that for 3 different airplanes. In the blue line is the 737-800. The orange line is an A320ceo, and the gray line is an A330-300. And what you're seeing on the axis here is market value divided by base value. So in the late 90s, market value to base value was 1.0, meaning market value was equal to base value. We were in a very balanced market. Supply and demand were steady. And so you saw a ratio of 1. When the September 11th events and attacks hit, there was an instant impact to our industry, and you see the quick drop in market value. So market value to base value fell, 10 to 12% fairly quickly. And then we had, of course, the SARS epidemic after that. But if you look at market value returns, this industry returned. There was tremendous growth in this industry. It took just a couple of years for market values to recover and get back to base value numbers. And then by the 2006, 2007 timeframe, market values were well above base values. They were 10 to 15% higher than base values. So that just shows how this industry rebounds from these downturns. And then ultimately you see, at least for the 737 and the A320, market value and base value kind of settled back into a nice steady 1.0 factor, while the A330 started to fall out of favor and other new models were introduced. And so you started to see a drop in market values for that product. But, it really shows that this is a resilient industry, and we've talked about air travel demand returning, and certainly aircraft values will follow as well. So if we go to the next chart, please, just want to talk a little bit about the process of valuations, and certainly know that we'll be hearing from an appraiser very soon. But there's many factors and considerations which really impact value opinions. And as I said, valuations change with market conditions. We at Boeing, we follow many of the aircraft appraisers and look at their blue book valuations and follow them closely. There are differences of opinions from appraisers, of course, and appraisers use different assumptions to drive their values. So it's really important for you as a user of an appraisal value to really understand what's driving those assumptions and what's behind them. As we at Boeing, as an OEM, as we look at valuations and try to understand what's going on, we really follow as many appraisers as we can. And in fact, we average a group of 10 appraisers for most of our work, so that we're not swayed by one appraiser who may be higher or lower than others. So, I think that's one important piece is to, as I said, really to understand the assumptions behind the valuations, and to look at different appraisers to get different opinions. So I kind of want to close out here on a couple of charts just to show you some data and show you what we're seeing in terms of values. If you go to the next chart, please. I want to talk about some single aisle data. Here you're seeing current market value and base values for 4 different single aisle aircraft. These were all new build aircraft. The values that you're seeing on this chart are the median values of 10 different appraisers, appraisers that we subscribe to their blue books. And so what you're seeing here in this case is market values and base values for these new products, where, as I said before, base values have held constant during the pandemic. And for these models, market values are down about 5 to 10% below their base values, really reflecting where we are given the current environment. And on the right side, you see there the orange dot. That is the market value pre-COVID, which was very similar to the base value. And the current market values, the blue dot, again, which are down about 5 to 10% from those kind of pre-pandemic values. So if you go to the next chart, please, looking quickly at wide bodies, again, we have new build wide body aircraft here. We have 3 members of the 787 family, and then the A330neo and A350-900 and 1000. Again, new technology, wide bodies, and similar to the single aisle aircraft, we see that wide body market values are down about 5 to 10% below their base values. And again, a year ago, prior to the pandemic, market values were very close to base values. Now, again, if we look at older aircraft, midlife or aging assets, we would see a much lower declines in market values, relative to those pre-COVID levels. And then let's go to the final chart, please. Just to kind of wrap it up, again, aircraft valuation is a it can be subjective. There's a lot of factors that go into it. There's market factors. There's the airplane characteristics. Valuations do change up and down based on market conditions, and these are things that we follow very closely. I know for appraisers, there's constant vigilance looking at values following the market, looking at current and new products. And again, our advice is to continue to, use different appraisers, understand the assumptions that drive their values, and to look at different appraisers just to get different viewpoints as well. So with that, I'm going to thank you for your time and hand it off to the next speaker.
Thank you. Thank you very much, Mike. Again, a very insightful way of looking at the market values and asset valuations. 3 thoughts occurred to me. The first, of course, is that as we go into the aircraft leasing and financing ecosystem in India, we do not have localized appraisers or valuers. Of course, Acumen Aviation is going to speak to this issue in quite the numbers that you all have spoken about. So for instance, when you said that you use groups of appraisers in order to value the assets, to me, it's an important concept, and we would also like to see going forward as to how we can develop. And Acumen Aviation will also perhaps speak to the issue as well. The second thought that I had was that as we are moving more and more into sustainable aviation, and if I'm hearing correctly, obviously the asset value of a sustainable of an aircraft which promotes sustainability in its operations, and there's a lower fuel risk or there's less of carbon emissions, etc., that would obviously attract perhaps financing of a different order. So this is I think, is it different types of financing, or just the pricing of the financing would be different? These are some thoughts that occurred to me. And perhaps we can go into these issues. Then the third issue was that I read you that it's the narrow bodies which have seen the least downswings during the COVID period in terms of valuation. And obviously, there are many drivers, and the market itself is the big driver. In India, the demand is for direct networks which go into our biggest markets, which are Europe and the US, or beyond the 5,000 kilometer range. So technically, I would expect our airlines, or intuitively, I would expect them to go immediately into wide body aircraft, especially when the valuations are down at this point of time. What we have seen is an Indian airline placing the largest narrow body order, in fact. So, these are some conundrums which are important to look at. It would be interesting to see how and whether and how Indian airlines take advantage of the asset value changes that are occurring at this point of time. So thank you, Mike. I'm going to now move to Amit Tyagi, who's the ISTAT certified appraiser and Chief Intelligence Officer of Acumen Aviation. Again, Amit goes back, I think, 2 years at least with us. He had very kindly, and Acumen Aviation, of course, also goes back with us as one of the organizations which is always ready to jump into all new ventures and to work with us in developing a holistic aircraft leasing ecosystem. They have very recently also launched a postgraduate year-long diploma program in aircraft financing and leasing with the university. So, Amit, talking about Amit, he joined Acumen in 2009 as the Chief Intelligence Officer. He leverages his expertise as a certified ISTAT appraiser. And this is actually combined with a wealth of about 17 years of technical and commercial expertise in aviation, which he has working with sophisticated and diverse clientele. He has appraised various ABS transactions, asset sale purchases, market values, due diligence, and fly forward analysis in the last few years. And he is responsible for management of assets on behalf of investors and provides asset market insights, life values, and risk and ownership assessments. So, without much ado, he's also been working. Actually, he holds a bachelor's degree in aeronautical engineering, BSc PCM, BAML. He is pursuing the GMAE from IIM Bangalore, an MBA program, which is in collaboration with Toulouse Business School of France. So over to you, Amit, for taking us through this very important matter.
Thank you, ma'am. And I would like to thank Ministry of Civil Aviation and IFSC Authority and GIFT City in a collaboration with IFSC to conduct this masterclass and providing me this opportunity to comment on this very important topic of asset management. It's a very broad topic, and I think ma'am has given a lot of introduction, so we can skip that. If you could go back a little bit, I will just like to give about Acumen. So I think ma'am has spoken a little bit, but Acumen started back in 2009, and I also joined at the same time. And at that point in time, we had we were a technical consultancy, And subsequently, due to tax reason, we opened our office in Dublin, and Dublin became the main office. And we have gone to Miami, Beijing, and now, as ma'am has mentioned, we have also opened office in IFSC Gujarat. So Acumen has grown by leaps and bounds. We have our technical services, which contain several other services. We have a digital department containing Sparta system. We are developing our own softwares to assist the industry and on asset management side and the valuation side. And under commercial management, we manage the we are having commercial lease management and valuation and appraisal. So next slide, please. Okay, so from asset management perspective, it is important to note and understand what is the life cycle of an aircraft. From that perspective, generally, the aircraft is initially manufactured and given on first and second lease. The first lease is first or second lease maybe mostly between 6 to 12 years. And during that period, the various maintenance checks may be performed, or several other duty an asset manager need to perform. And those are essential to be monitored, and I'll elaborate on those two. Similarly, at the end of lease, then there will be a sale of aircraft, and the valuation of aircraft will be needed for several reasons. So I'll be covering that in my next slides. And similarly, after every lease, there will be requirement of valuation and remarketing. So that topic is also being covered under this. And finally, at the end of as we basically as an appraiser also, and as Michael also mentioned, we take the aircraft life to be around 25 years. And based on that, at the end of life, if the aircraft part out is delivering more value than actually aircraft as an entity, then the part out or disposal is the best option, and that is what is done. Next slide, please. Okay, so as soon as I mean, this is the starting phase for any lease. So the delivery conditions are what a lessor generally agrees with the lessee. Now, it is a prerequisite for every lessor or to meet these requirement before the delivery of the aircraft to the lessee, and which will include at the starting maybe configuration of aircraft and its maintenance status. And the condition could be different. If the aircraft is very new, it will be generally in the full life condition, or if the aircraft is used, then the delivery condition could be in the middle somewhere, but those will be agreed in advance. And in case of a used aircraft, generally the inspection is done at assembly line or during the testing of aircraft, and for a used aircraft, generally at the delivery location. And delivery condition, if the lessor is unable to meet the delivery condition, generally it will all be listed as exceptions, and either those need to be remedied or rectified before the delivery or within a stipulated time frame. And at the time of delivery, a certificate of technical acceptance will be signed and given by the lessee. So meeting the delivery condition is the first step to start the lease. Next slide, please. Redelivery. So once the lease is going on and we continue to perform all the requirement during the lease, and finally the redelivery period will come depending on the lease term. So redelivery planning start at least 12 to 18 months in advance, and generally all the lease will have I mean, some of the leases may have extension option, some may not have. If there is an extension option available, first of all, that will be discussed with the current lessee. And if the current lessee is ready to extend the lease, then the lease extension may happen. If the lease extension is not happening, then it is sure that the redelivery will happen. So the redelivery planning will start, and the lessor will start trying to remarket this aircraft. Now, the best option available with the lessor is, or the lease manager is, if he can find the next lessee which will accept the aircraft in the similar configuration. If that is possible, that is the best scenario. And if he can match the delivery condition with the redelivery conditions are matching with the delivery condition of the next lessee, that is the best scenario. If that doesn't happen, then what are the changes between the two requirements? I mean, how we have to deliver to next lessee, and what is the current lessee is going to give? What are the delta? That delta need to be clearly checked out, and those modifications or changes need to be planned well in advance. Various stakeholder will be contacted, which will include OEMs, STC holders, or how that change is going to be performed. So that starts in the background with the lessor, and the discussion starts with the next lessee also. And it will also involve the discussion of how the commercial arrangement will happen with the next lessee, whether those modification the lessor is supposed to do and give, or the next lessee is also going to take a certain portion of that, and all that is discussed in advance. After that, once the redelivery meeting is generally planned between the current lessee and the lessor, around between 6 to 12 months in advance of redelivery date. And redelivery locations, MRO, lease return check package, etc. need to be discussed and agreed in advance, which may involve like hard time task or structural check task or any painting requirement, etc. Those need to be ensured that they are part of the redelivery check. And this is a very essential requirement, because if anything misses at this stage, and then it can really cause trouble while delivering the aircraft to the next lessee. In such situation, if there is an additional cost to be borne by the current, I mean, there is a deviation between the current lessee and next lessee requirement, then additional task may be inserted, or additional requirement may be inserted into the check packages, and the lessor may pay directly to MROs or as agreed between the parties. So, next slide, please. Lease transition. So major point for a smooth lease transitions are all listed here, and it is essential that any lease transition is well planned, as I mentioned in my previous slide too. So if there is a deviation is existing between the current lessee delivery condition and next lessee's delivery condition, then all those differences, all the required kits, etc., should be arranged in advance, and because those can surely create a lot of trouble to deliver the aircraft if not well planned. And certain requirement with the OEMs also may take a lot of, because the kits availability could be very difficult in certain scenarios. Lessor will send its technical representative for detailed record review and the physical inspection, generally 45 to 90 days in advance, and which will all be discussed in the redelivery meeting, as I mentioned in my previous slide. And whatever observations or findings are noted during the reviews, those needs to be corrected. And if there are any issues which cannot be corrected, then the current lessee and the lessor will discuss, and those they will try to reach to a commercial arrangement, if that can be accepted by the next lessee. with this also, the lessor would try to bring in the next lessee at the same place, and they will request them to basically come and do the review at the same time before the lease end itself. So any finding from the next lessee is also taken into account, and their findings, and those are included into the findings while checking if the return condition are matching, then the current lessee itself will perform those rectification actions, and aircraft will be delivered back. So this is the aim for any lessor to give aircraft, to accept the aircraft from current lessee and immediately deliver and sign the lease with the next lessee. That is what is the best scenario, and that is what every lessor tries to do. So lease transition is very important, and to ensure that the aircraft doesn't stay on ground without earning a lease rent for the lessor, and if it is not earning the lease rent, then it actually there are other associated expenses which comes into picture. So this is a very important topic. Next slide, please. Okay, before I go to the maintenance reserve, it is essential for the audience to understand why do we need maintenance reserve, and why it is necessary. So as you can see, 3 slides here. The first slide, first figure shows that the aircraft generally, when it is new, it is at 100% of or full maintenance status. When we start utilizing, so this may be now taken into the first slide may be taken as a hard time item, or certain items for which the utility can be reduced to the 0, and then again can be rebuilt back to the 100% life. So if we compare to similar to hard time items, the utility curves will move like a sawtooth curve as shown in the first one. If you notice in the second slide, then it shows that the initially when aircraft is for own condition items or such items, they will be at the 100% life at the start when taken new, but they will start moving down in the maintenance status, and the utility level will fall down to a certain extent, but it will not go down to 0, and neither it can be built up back to the 100%, because you will, for example, any engine will have its half of the LLP might be used, but you may perform a performance restoration, but you can't replace the LLP if they are having half of the life remaining. So basically you build it up, but it will not go back to 100% of life. It will reach back to maybe 80% or so, depending on where we stand in the maintenance status, depending on all the major components. So if we compare and mix up these two curves, what we find is the curve which is shown on the third figure. So this is the portion which is in the shaded is what is the value risk to the lessor. If the maintenance reserves are not being collected, then this risk will exist, and must be to recover to recover from this risk, value risk. It is essential to collect MR, and that is why we collect MR. Next slide, please. Okay, so maintenance reserve funds are actually collected for heavy or qualified maintenance events as agreed in the lease, and they are typically paid by the lessee to the lessor based on the maintenance utilization. Lessor will reimburse to the lessee those amounts once the maintenance event has been performed. Lessee lease agreement specifies the amount to be paid and the event which are reimbursable. So there will be qualified maintenance event which will be listed in the lease agreement, with the definition. So only those will be reimbursable, and only for those the MRs are collected. And especially speaking, though, for airframe, those are structural checks. For example, for an Airbus aircraft, it could be 6-year and 12-year checks. For a Boeing aircraft, it could be like a narrow body 8-year, 10-year, or 12-year if we go with the previous MPD. And if we go with the new MPDs, it could be 9-year and 15 years. So depending on the lessee and lessor's agreement, those will be defined. And the qualified maintenance event definitions will be mentioned in the lease agreement. Rates will be further decided in accordance with the lease. Either mostly those are decided based on the maintenance cost and the time, expected time they are going to be used, and they are either listed in the lease agreement, or they are said to be agreed at the end of lease, depending. But in case of MR, they will be always listed, and escalation will be listed there. So what is the escalation percentage per annum, and the the escalation review date. So on which date the escalation will kick in. Collection of the MR will be mostly on the monthly basis. Every month, the lessee will send at the end of month the utilization, and based on that utilization, based on the agreed rate, the lessor will send an invoice to the lessee, and the collection will happen for that. And reimbursement to the lessee will happen based on the qualified maintenance events, and once the lessor is satisfied with the provided records, and once those are submitted. It is to be noted that mostly in advance of any MR event or a qualified maintenance event, generally the lessor is consulted, and generally lessor will agree to the MRO being used for such events. Next slide, please. Okay, as we have seen in the during the life, or every asset manager or a lease manager would require asset valuation at several stages of the aircraft, in an aircraft life cycle, due to different reasons. So while my colleague Michael has already covered on the valuation side, I have kept some of the slides for a quick understanding on that topic. To being a ISTAT appraiser, I thought it will be nice to have that. So what is an appraisal? Appraisal is the act of or estimating the value of an asset as per the definition or the which is contained in the appraisal report. It may be a base value, it may be current market value, or any type of values which will be shown in the subsequent slide. Why do we perform an appraisal? Because the asset manager would like to know or will need it for several different reasons, as highlighted here: for sale, purchase, insurance claim, decision, for exit strategy, tax purpose, or to find out the value of lease, etc. So there are different reasons why perform the appraisal may be needed. Whom to approach for appraisal? ISTAT certified appraiser is what is well accepted in the worldwide for commercial transport aircraft, and those are being used by lessor, investors, banks, private equity fund, insurer, reinsurer, or many, wherever, and they are well recognized and accepted in the market for most of the wherever such a requirement arises. And what is ISTAT? ISTAT is a non-profit society which is including manufacturer, purchaser, brokerage agencies, leasing community, maintenance appraisal, and including airlines and so. ISTAT provide certification to those who satisfactorily demonstrate that he or she is qualified to appraise an aircraft. So they conduct the exam and provide such certification. Acumen has 3 ISTAT certified appraiser and 2 ASA appraiser. ASA is American Society of Appraisers. Next slide, please. So these are the different type of values which is generally provided. Base value and market value is already covered in the previous slide. So I will straight away go to residual value. Residual value is the value of any aircraft for which is at any future date. Generally we require it to find out at the conclusion of lease term if we are valuing a value of a lease, or it can be at the end of life also. Depending on requirement, the residual value is value at any future date, and mostly the future base value or so, or as defined by appraisal in the report will be taken. Distress value is something which is in case when the seller is or any seller is mostly in hurry to sell, and there could be a discount applied in such cases. So that is the distress value. Securitized or lease encumbered value is based on the future earning potential of the aircraft, which will include rent and terms or payment stream during what lease term is available, and estimated residual value at lease termination with a appropriate discount rate. And the discount rate will depend on several factors, depending on the risk and all other items which based on which the discount rate is find out. Part out or salvage value is, or at the end of life, as I mentioned in my previous slide, we need to check whether the aircraft basically is best to have in part out or sell the parts separately, or value aircraft as an entity. And that is, if we are selling parts separately for reuse on other aircraft, then such values are known as part out or salvage value. And when we compare both market value and salvage value, if whichever is higher, mostly the commercial decision will go accordingly. Next slide, please. These are the factors. I think some of those is already covered by Michael. I'm just mentioning here for clarity. In little more detail. So aircraft specific is age, weight and type, engine type. Well, while we value, we take all this into account. And what is the interior configuration, utilization, our cycle will play a very great role, because depending on that is what is MRs are decided. And it, especially on engine, it is very, very important. On type specific, fleet distribution, engine choice, or how much product support is available in the market for that, whether the MROs are available, whether it so there are what are the technological changes coming into that particular segment, and what is the product, where we do stand in the production cycle of that, and what is the industry specific capacity in the market, what is the stored fleet size at any particular time, whether airlines are operating profitably in that segment, or narrow body aircrafts are less affected. This is one of the reason, because the aircraft are back into service earlier than the other aircraft type. So that will also be one of the major factor. What are the future orders, deliveries? What are the regulatory changes coming? And same way the macroeconomic factors which are taken into account as shown here. Next slide, please. Next slide, please. Okay, so why do we value the aircraft? Basically, this is just to show that the list price or the new price could be in the range of 100 to 110 million. I'm not mentioning any aircraft specific, but it is any single aisle aircraft could be in that range, but the actual sale value could be between 44 million to 55 million. Next slide, please. So similarly, a wide body aircraft could range in the list price from 200 to 450 millions, but the actual sale price could be between 85 to 220 million. So it depends why there is a wide variation, and so the valuation is important part. Next slide, please. Residual value. So as residual value is one of the main concern, or any you take lease encumbered value or any type of value, it is essential for any asset manager to ensure that the residual value of aircraft is maintained. And this is why it is essential. What it is not possible to list everything here, but I'll give some certain points here. So to ensure what a asset manager generally do, they will do a regular audits depending on the credit risk of an airline. It will be between 12 months to 36 months, and that will be decided by lessor or lease manager. And they will, during such audits, they will collect all the reports and do the physical inspection of aircraft and ensure that they have the latest status sheets, etc. So because the value of an aircraft is lot into the reports. Otherwise those need to be again, there will be expenses to redo those tasks. Monitoring the financial health of a lessee and take timely action as per the lease is a very essential part of an asset manager. And if the lessee financial health is deteriorating, it is essential to have more frequent on-site visit and do surveillance as necessary. And it is also essential to monitor if there is any financial or technical default between what is mentioned in the lease. Sometimes the lease will mention like tightened assembly should be installed on the aircraft. If it is not so, and the airline is also not in good financial health, then every asset manager would like to have their title assembly back to. Otherwise, it becomes very difficult to chase them back and get it back in case of repossessions and when the airline goes bust or the lessee goes bust. So to avoid such situation, or if asset manager would be very concerned if there is any preservation of aircraft or aircraft is stored, if it is not a short-term preservation or due to forced region, everything is grounded, because in such cases the aircraft component could be taken out by the lessee to service other aircraft, and which can be a greater risk for a lessor. So these are the main points which are essential to be monitored to maintain the residual value and to ensure that the records or lessor has the proper records for that. Next slide, please. So these are the main type of values. As a base values is generally at half-time half-life, and to ensure or give a baseline value in half-time half-life condition, considering the aircraft is at or in a average physical condition. Residual value is the value of aircraft at any future date, and will take maybe in the half-time half-life condition for future, and it also is used for the lease encumbered value at the lease end, or that those values are required. Lease encumbered value, as I mentioned earlier, is for to find out the value based on the future payment streams and with a proper discount rate. Market value is as adding to the market factor into the base value or the maintenance adjusted base value, as the case may be, and finding out the actual situation of the value at that point in time. And similarly, salvage value is the part out value at the end of lease. So base value is generally maybe provided in a desktop appraisal. Due to paucity of time, I have not put the type of appraisal here, but I will quickly explain. The base value will generally be in the desktop appraisal will provide that, and similarly the residual value also. In a lease encumbered value, where the maintenance status or could be taken into account in the market value also, which is called extended desktop appraisal, where we take the current maintenance status of the aircraft and do the adjustment for the maintenance status at that point in time. and salvage value is mostly at the end of life, or when it is basically giving the best commercial I mean value to the lessor rather than aircraft as an entity. So these are the main type of values, and lease encumbered value, we can say a financial appraisal. So these are the major type of appraisals which are given. Next slide, please. Yeah, thank you very much. So these are the, I hope I have been able to provide the required information in such short time. Thank you very much.
Thank you so much, Amit. The amount of wealth of information and knowledge you have provided us, it is so difficult to digest it. I'm going to need separate classes with you as a student, so that I can really understand and digest all the ramifications that exist on whether we are looking at factors exogenous to a lessor or a factors endogenous to a lessor. When we set up the aircraft, what is more important, and how we need to begin to address all those aspects. Obviously, we have to improve the environment on both counts, and to provide risk mitigation strategies, so that the values of the assets held by the lessors in Gift City are impacted less than would otherwise be presumed. So I have actually, and we are overshooting our time. We were supposed to be in for a lunch break at this time, but I do have some listed questions, and taking the liberty of time again, and testing the patience of all concerned. There are a few questions which I think we could address now, before the speakers of this panel move over for. So there is a question from Hong Kong, Miss Charissa Chu. She has said, compared to Dublin, India has access to strong equity and debt capital markets domestically. How can that be tapped to help bolster this initiative? So if SBI or NIIF can answer this question, that would be useful. And then from her, do the tax and other incentives flow through the value chain through to equity and debt investors? So I can perhaps request Suresh Ji of PwC to answer this. May I request the others to switch off their mic? So is there anybody from SBI and NIIF? SBI, NIIF? Or Dipesh, would you like to answer this?
Yeah, I'll take this. I think the question is very valid, that can the Indian institution participate? So the way now this regulation has been structured is for the aircraft leasing entity, it can be a joint venture between a foreign lessor and an Indian lessor, or the Indian entities and the foreign entities can come together, and equity can be brought in by the Indian institutions in this. Similarly, it can be 50-50, it can be 100%. So the participation of Indian institution comes in. For debt, the ECB, the banks which are already housed in the IFFC would be able to give the debt, which will be dollar denominated, plus they have been allowed to give ECB in INR, in the local currency, to the entities operating there. And as far as the tax benefit flow is concerned, the entity will not be having a corporate tax for 10 years. However, the dividend distribution tax, which the SPV will pay to the parent, that based on the investors where they are housed, they will be required to pay the requisite tax. Otherwise, it will not be taxed on the entity level at the IFFC. And Suresh may like to add on the tax front on this.
Sure. Thanks, Dipesh. So, as rightly mentioned by Dipesh, you do have a 10-year tax holiday as far as India is concerned. And as far as securities which are listed on the exchange is concerned, so for example, if there is a capital raising which is happening on the exchange, investors do get a full tax-free regime. Securities which are listed on the IFSC exchange and are transferred, they are not subject to any tax in the hands of the investor. There is also a lot of, exemptions given in terms of applicability of security transaction tax, commodity tax. So I think in a way, capital markets in IFSC provide a very attractive regime, and companies may want to look at that to raise capital from IFSC.
Thank you so much. There is another question, and Suresh, perhaps you can address this as well. This is from Mr. Uday Gelli. Will there be any customs duty levied on helicopters imported and leased through GIFT City?
So the answer is no. It is not likely to be levied. There are certain conditions to be satisfied. So, for example, if the IFSC is in SEZ, and if you are importing anything into SEZ, usually you will not pay any custom duty. So the same thing should apply even in case of helicopters. There are some amendments which are required. And I think the government is, I'm told, is working on that. Subject to that, I think the answer is that it's not leviable.
Absolutely. There's another question from Mr. Kirit Manik of Bengaluru. It's a request not to ignore leasing opportunities of trainer aircraft by finance intermediaries and to have tie-ups with, and which have tie-ups with major trainer OEMs such as Cessna, Diamond, and Piper Aircraft for lease to FTOs, such that new generation aircraft are always available for the training. So here we can very simply answer that none of the types of aircraft or leasing opportunities are being ignored. There's another question from Mr. Arvind Jadhav from Mumbai, that if the investor owner of the aircraft is an Indian and wants to lease the aircraft to an Indian operator, then one, what are the tax implications for both lessor and lessee? And two, will DGCA allow this type of leasing engagement? On the first one, Dipesh, do you want to go?
Sorry, ma'am, can you just, I just missed that first one.
Yeah, so if the investor owner of the aircraft is an Indian and wants to lease the aircraft to an Indian operator, what are the tax implications for both lessor and lessee? You did address it in your PPT, yeah, but this question is still there.
I think the way currently the IFFC is structured, it is more meant for the Indian entity availing these services from a foreign entities. So what it replaces now is that it replaces Ireland or Singapore or Mauritius, for example, that you were availing these services from those centers which can now be availed from IFFC. But as far as the Indian manufacturer is concerned and a leasing entity or a lessor is in India, which is both dealing into a local currency in India only, they may continue to do so within the domestic umbrella. That transactions can't move on the IFFC because that's a typical rupee transactions between two players. And tax incentives are not flowing for the domestic transactions in the IFFC zone.
Correct. And whether DGCA will allow this type of leasing engagement, I can just indicate that there are presently domestic to domestic, that is domestic lessor to domestic lessee transactions which are being concluded, and there is no bar on this type of leasing engagement on the part of DGCA. Another question by him is, how will we attract aviation leasing corporates to come to India for doing lease transactions? Because it is being averred that the European market is very sensitive and looks for minimal taxation. So I think we more or less answered this question. Then another one is, what are the plans for creating more IFSC centers in the country, in any other city? IFSC authority, would you like to take that up?
Yeah, currently, as per the policy of Government of India, the first IFFC has been made operational. And as we move, based on the experience of the other countries where the capital is not fully convertible, normally it has a gestation period of some 8-10 years that you develop a center, bring the economic activities and economy of agglomeration by bringing institutions. And then what China did maybe 8-10 years later, opened up other centers. So maybe a similar strategy, whatever the Government of India decides on this, will be followed for India.
Yeah. And then, of course, one other question is, what are the minima criteria, requirements, legal and financial, to set up aircraft leasing company in GIFT City? I know perhaps Ashish from Moon SEZ, would you like to answer this?
Yeah, I'll just request you to repeat the question once again so that I can hear.
So what are the minima criteria, requirements, legal and financial, to set up aircraft leasing company in GIFT City?
Okay, so in terms of legal criteria, as I mentioned, that any Indian company, Indian investor, individual basically, if they want to set up a unit in IFSC, it will be under RBI ODI guidelines. And if it is a foreign investor, NRI or a company, they can also set up either a company, limited liability partnership or trust in IFSC. In terms of capital requirement, there's a minimum capital requirement of $200,000, which needs to be maintained at all the times in freely convertible foreign currency in aircraft leasing entity. So otherwise, there is no other restrictions in terms of legal or financial requirement.
Correct. So another question from a Mr. Amit Mittal from New Delhi for Dipesh is, the capital requirements of $200,000, can these be used for aircraft purchase, and will it be deemed as a deposit by IFSCA when an entity registers there?
Yeah, so the 200,000 which you bring in as a capital can be utilized for the purchase of the aircraft. And before the purchase of the aircraft, whatever the amount you have received, that can be in the form of a deposit.
Dipesh, we've lost you.
Yeah. Can you hear me now? Hello?
Yeah, we lost you after your first sentence.
Okay,
whatever you brought in earlier can be?
Yeah, whatever you have brought in as a capital, that can be utilized for the purchase of the aircraft. In case you have not utilized that money for purchase of aircraft, you can put that $200,000 as deposit.
Okay, excellent. So then there is a question from Ninad Chavan in Mumbai. Are aircraft components stocking, warehousing and leasing as well as their MRO services allowed in GIFT City? Ashish, do you want to handle this?
Yeah, so particularly, ma'am, there is no restriction per se from SEZ or IFSC point of view. Only thing is the facilities needs to be built up by someone. So that is also being worked on. In fact, Dipesh Bhai and myself were discussing onto this as well, because this is a requirement which will come definitely.
Yeah, so one of the answers to this would also be that all manner of services which are auxiliary or ancillary to aircraft leasing and financing, these are permitted to be undertaken from the GIFT City IFSC. And in case there are requirements of component stocking or warehousing, to my mind, as Ashish said, there is no bar on it. as well. As regards MRO services, I mean, you would need large hangars, or you would need some parts banks facilities. So these are available. So what we have been working on with the government is for providing extensions to the customs bonded facilities at various airports across the countries for lessors who wish to provide such services as part of their leasing transactions. So a customs bonded facility in Chennai, for instance, could be available for the customs, for the component stocking or warehousing for aircraft which are being leased out by lessors in GIFT City. I'm not sure whether there are, okay, one more question for Dipesh Shah is, which laws have been specifically made for enabling bankruptcy remoteness of SPVs set up in GIFT City? Are they in sync with English laws? I think instead of Dipesh, I will let Mary Lou handle this question in her assessment on the legal issues, or even any of our second panelists, because legal issues will be coming up later, and either Mark Pierman Wright or Mary Lou can take up this question. So we will put this question on hold. Another question is regarding tax depreciation or capital allowances admissible on aircraft in the framework currently envisaged by the Indian authorities. Suresh, would you like to address that part?
Yes, ma'am. Yeah, I think tax depreciation is allowed. There is a 40% WDV which is provided with the tax laws.
Yeah, I see that Mary Lou, do you want to answer that question on the bankruptcy law, remote provisions and law?
Yes, sure. So there's no separate law, framed with regard to entities in IFSC in connection with insolvency. The general laws applicable in India would apply, and an SPV usually is bankruptcy remote. There are some rare cases where, courts may lift the corporate veil in the case of, for example, fraud, or where they act as a nominee for another entity, or it's set up to avoid particular laws. But otherwise, an SPV is a separate legal entity, and the assets of that entity only would be touched in the case of insolvency of that entity. And in the case of a parent, they would not touch the assets of the subsidiary company. The shares of a subsidiary could be attached if it's an asset of the parent and the parent goes insolvent, but not otherwise.
Thank you very much. These are actually the questions that we had received from the first, the initial inaugural panel, as well as from the panel one. I know that we have eaten into our lunch break, and I'm tempted to continue with the work, even though it means a very heavy day for without break for all of us in the panels, at least, who are sitting, and for many of the participants who are offline. So I propose that we continue and take up our second panel of presentations by the experts. All game for it, yes? So let's go. The first presentations would be on tax matters, and this would be by PricewaterhouseCoopers. We have Suresh Swami, and we have Niren Setia. So Suresh is a partner at Pricewaterhouse and is based out of Mumbai. He has over 22 years of experience in the field of direct taxation. He's a member of the Institute of Chartered Accountants of India, as well as Cost and Works Accountants of India. He has, of course, spoken on this matter. Actually, Suresh has been working with us, I think, for more than 2 years, and has been a core member of our team as we have advanced in various brainstorming sessions, the actual drafting of implementation of recommendations, and then what could be the possible solutions. So it's my very great pleasure to introduce Suresh Swami. So over to you, Suresh.
Thank you, ma'am. In this part of this presentation, I also will have my other colleague who will talk about the indirect taxation. And so maybe I'll first finish the direct tax part, and then I can bring him.
Yeah, because I would like to introduce Niren Setia separately as well. So when we are coming to a little gap, please do let me know.
Sure.
Okay.
So thank you, ma'am, and thank you, Vicky, for having me here. It's a pleasure speaking to all of you and to this audience. Maybe I'll just quickly dive into the key taxation issues and how the taxation works firstly, and what are the key issues. Now, can you go to the next slide, please? Yeah. So as far as leasing structures are concerned, they are ideally the current very prevalent structure is with what Indian airlines are really using is direct leasing from overseas. In my slide, I've just used Ireland as an example, that is prominent, but you also find leasing structures from, say, Singapore and Hong Kong, which are also prevalent. So you have that as a structure, and then with all these models, or all these developments on the tax and the regulatory front, I think there are two other models which can actually emerge. The one prominent one which will emerge is actually having a IFSC entity, which will start leasing out to Indian airline companies. And I'll talk about the tax and the tax implications of doing that. And some may also want to test waters in the Indian shore before they actually fully dive into setting up or leasing it out from their Indian entity. So that's another model, which is a LILO model, lease in, lease out model, which may actually emerge. And I'll talk about both of them in my presentation. Go to the next slide, please. Yeah. So as far as India tax regime is concerned, Indian companies have two alternate corporate tax regime to choose from. One is the old regime, I just want to call it the old regime, where you pay normal corporate tax rate, which is like 30% plus surcharge, and education tax roughly about 34-35%. And in 2019, there was a new regime which was introduced for domestic companies. And they were given an option to subject themselves towards a lower rate of tax, which is like in fact 22%, but again with surcharge and aggregation says it comes to about 25.17 if certain deductions were not claimed. Now, companies who are set up in IFSC and who are approved by the IFSC authority are considered to be IFSC units. They do have a choice to go and opt for a new regime. So there is no issue as far as choosing the new regime is concerned. Now, if a unit were to be set up in IFSC, they are entitled to a 10-year tax holiday. And 10-year tax holiday, which they can choose from our first 15 years, starting from the year in which they receive the approval to set up the unit. Now, if depending upon when the tax holiday expires, post the tax holiday, the company, depending upon what regime it has chosen, it will be either paying at 35% or at 25.17%, which is the effective tax rate. Indian companies also, and there's a question in the question and answer session, is are they entitled to depreciation? Yes, the answer to that question is yes, they are entitled to depreciation. And the tax law do provide for depreciation on aircraft and aircraft engines. The tax rate of the depreciation rate is 40%, and it's allowed on a WDV basis. Indian companies are also allowed to carry forward their unabsorbed depreciation to subsequent years, and they can set it off against future profits without any time limit. So in a way, from a Indian company standpoint, company which is set up in IFSC, you get a 10-year tax holiday. Choose a post that you pay only tax of 25.17% if you have opted for the new regime, and you can structure your taxes based on when you start your tax holiday and how much of depreciation you are allowed to carry forward. Secondly, important point to note is that there is a minimum alternate tax which usually companies set up in IFSC are levied. Minimum alternate tax for an Indian company is 18%, but a company which is set up in IFSC, they are subject to a minimum alternate tax of only 9%. 9 plus applicable surcharge and incidence will roughly lead to 10.5. However, I think the point to note is that if you have chosen the new tax regime, which is the lower tax regime of 25.17%, then the minimum alternate tax is not applicable to you. In a way, you actually come to a zero tax position if you make that choice. Question is, what stops you from opting for the new regime? Are there any conditions for that? Clearly, for a new company which is going to be set up, there are no such conditions. You can, and there is no even any evaluation based on your past history which you need to do. When you set up, you straight away choose for the 25% tax regime, and therefore you don't pay even MAT. So that's a fairly clear regime which is established in the Indian tax law. Another question which again Dipesh spoke about while he was answering the question was with respect to dividends which is paid to the shareholders. Now, as far as India is concerned, and about a year back, we had a dividend distribution tax regime, whereby the Indian company which was distributing the dividend was required to pay a dividend distribution tax. The dividend was not subject to tax in the hands of the shareholders. We have moved to a classical system of taxation of dividend last year, which means that the companies in India no longer need to pay a dividend distribution tax, but the income is chargeable to tax in the hands of the shareholder. Now, as far as the IFSC unit is concerned, and earlier also it was not required to pay a dividend distribution tax. Even now, there's no dividend distribution tax. However, the shareholders will need to pay a tax on dividend. Because again, the tax rate, while the domestic tax rate will be 20%, however, depending upon the place where the investor comes in from, for example, if the company is set up in Hong Kong and it is the one which is investing, the dividend tax rate will be 5%. Or if it is in some other country, you look at the two treaties and you apply the dividend tax rate as far as India is concerned. Point to be noted again is depending upon the taxation of the entity in the home country, you will get credit for taxes which you pay in India if there are any incremental taxes in your home country. So there may be some amount of planning which may be required, but you may be able to still get credit for taxes paid in India in your home country, depending upon what the tax situation in your home country is. Go to the next slide. India also has come out with attractive tax regime for debt investments, or for example, if there are borrowings from made by the IFSC unit. If the IFSC unit or the entity which is set up in IFSC actually borrows and pays interest to a non-resident, then those interests are interest income earned by the non-resident is not subject to any withholding in India, and it is also not subject to any tax in the hands of the non-resident. So in a way, from a debt funding standpoint, very clear regime which is being prescribed. No taxes as far as debt investments are concerned. In this year's budget as well as subsequent amendments, they have also provided that there is no withholding tax required on, say, aircraft lease payments, which are in the nature of royalty. So the finance bill earlier talked only about royalty payments, but later it was also extended to interest paid to non-resident. And this is especially supposing if you have a not operating lease, but you have a finance lease from IFSC. The IFSC entity actually takes the aircraft of finance lease from an overseas entity and then seeks to lease it to another Indian airline company. Then be it operating lease or be it finance lease, the lease rentals are not subject to any withholding tax. I think that's a very important point to note, and I talk about it why it's important. There is also they have also defined what an aircraft means. The definition of aircraft now includes aircraft, helicopter, engine, or any part there. All of that is covered as far as this lease payment is concerned. Important point is when Indian airlines are actually taking the aircraft on lease from say Irish entity or from another say Hong Kong entity. They have to the lessors have to access the India Ireland or India Hong Kong treaty to get to a lower rate. There are various conditions under the treaty which they need to satisfy. Are they a person? Are they the beneficial owner of the income? Are they do they satisfy the general anti-avoidance rule which are prescribed by Indian law? Are they satisfying the MLI tests which are prescribed? Now, all of that actually goes away when you actually set up an entity in IFSC. The Indian airline company, when it's making a payment to a IFSC entity, it is all domestic payment. There are no treaties involved. And the domestic law itself has coded the necessary provisions in the tax law itself. So therefore, the provision is very, very straightforward, very, very clear. And therefore, the reliance on these tax treaties is avoided completely. And that brings down the risks, usually which people say, right, people perceive in accessing these treaties, that risk comes down substantially. Right? The other outstanding point is with respect to withholding tax on payments made by Indian airline companies to IFSC unit. Is it subject to any withholding? So while the unit which is set up is entitled to the 10-year tax holiday, it is the payer still needs to withhold tax at 2%. It's not a tax issue, it's more a cash flow issue. And this is something which government is considering in our, when we have spoken to the CBDT, they are very conscious of this issue and they are working to provide relaxation as far as this particular point is concerned. I think it's a matter of time this will come through, but as of today, there is no exemption. The other point is with respect to capital gains on disposal of aircraft. And when we were as a part of the working group and even later when we were interacting with investors, this came up as a very, very important point. When you are actually selling the aircraft after the lease period, there is a tax, there is a capital gains tax which will be levied in the hands of the selling entity. And this was under the domestic law, the tax rate was 30%. It was treated as short-term capital gains tax. This year's budget has brought in that change. It provides for 100% profit link deduction on capital gains arising on transfer of aircraft or aircraft engine by a IFSC unit to any person, which is the only condition being that the IFSC unit should have commenced its operation before 31st March 2024. So there is some kind of urgency that you set up the entity, and once you set up the entity and you commence operation, then you're not required to pay any tax on sale of these aircrafts whenever it happens. Earlier, also there was a condition that the aircraft had to be leased only to an Indian airline company, but that condition also has gone away. So whether you lease it to Indian airline company or whether you lease it to an overseas company, non-resident entity, so yes, if you are earning any capital gains on transfer of these aircraft, that will not be subject to tax in India. There are also certain exemptions which are provided from a stamp duty standpoint. So the Gujarat government has issued a notification which says that we will have a 10-year tax holiday, which has already commenced, which is commenced from 4th of August 2020. A exemption on all activities which relate to setting up the unit in IFSC, acquisition of any movable property, which includes aircraft or even immovable property, everything has been provided for a 10-year tax holiday from a stamp duty standpoint. So that's already there, and you don't need to pay any stamp duty. So I think with that, maybe I just pause, and maybe it's a good time, ma'am, to introduce my colleague Niren Setia.
Thank you, Suresh. It's such an insightful one, and I think taxation is a matter of enormous interest among all who are seeking to establish SPVs in the GIFT City. My pleasure to welcome Niren Setia. Hi, Niren. He's also with Price Waterhouse and Cooper and Company. Sorry. Niren is a partner there, based in Mumbai. And he has over 18 years of professional expertise, partnering with various multinational and domestic companies in various areas, GST, excise, customs, service tax, VAT, and foreign trade policy. He's a regular speaker at seminars and has made many presentations on GST to trade associations. He's also a chartered accountant and has a master's degree in law. So over to you, Niren, for the indirect taxes framework.
Thank you, madam. Good afternoon to all. And before I commence my presentation, I wish safety and good health to everybody on in the discussion today. So with respect to the indirect tax, and when I say indirect tax, it principally covers two legislations. One is the customs duty and the other is the GST legislation. The manner in which the legislations work with a unit in IFSC, I'll just share some thoughts around them. First, before I speak on the indirect tax implications, one important aspect to understand is that an IFSC unit is set up under the Special Economic Zones Act of 2006, and as per that legislation, there are many tax exemptions and tax benefits which are granted. As soon as you set up an unit under that legislation, the corresponding benefits under the legislation get attracted or get available to a IFSC unit. So when the indirect tax implications arise, they arise in two different transactions. One is on a transaction of import into the SEZ, which is the place where the IFSC unit is located. And subsequently, there is a second transaction, which is the transaction which is between the IFSC unit and the Indian Aviation company. There could also be a similar second transaction, which could be with a offshore, which is offshore, which is in terms of offshore in terms of the IFSC unit in IFSC providing offshore services. I think there is some background noise at my end. Please excuse me for that. Can't help it. It's basically I'm at home and the noises around me. If I'm not audible clearly, I'll try and speak more loudly so it's clearer for everybody. Excuse me for that, please.
Don't worry, we can hear you, Niren. Go ahead.
Okay. Yeah, thank you, madam. Yeah, so if you see on the slide, there are two kinds of transactions which have been envisaged. One is an outright purchase, which is basically an IFSC unit procuring an aircraft outright, or secondly would be an operating lease basis. When an outright purchase is made by an IFSC unit, the tax implications would be those which will get attracted by a SEZ unit or a IFSC unit, and hence the law provides for exemption from customs duty and GST both, though an SEZ is geographically a part of India. However, the SEZ is carved out from the purpose of tax purposes to a limited extent, and hence these exemptions come through. The law, the SEZ law requires, and similarly as the Customs Act requires, that the goods physically enter the SEZ zone. However, it is practically impossible. It is impossible for an aircraft to be within the IFSC zone or within the IFSC, and hence we are working along with the GIFT authorities or the IFSC authorities in getting in discussion with the government to get this exemption or waiver for a physical movement inside the IFSC, and with that a lot of relaxation would come through in terms of the customs duty implication and the customs duty procedures to be followed along with the transaction of import, keeping in mind the future transactions that could arise after assuming a lease gets over in terms of subsequent lease, subsequent sale, subsequent repair work, all movement to MRO. So various kinds of movements or transactions which could occur after the aircraft gets imported by an IFSC unit. Keeping all of that in mind, there is discussion going on with the government to relax the requirements in terms of physicality and tangibility and movement to enjoy the benefits which are provided under the SEZ Act or under the Customs Act. So with respect to outright purchase, this is the exemption which is provided. Similarly, if goods are if aircraft is imported on an operating lease basis, what needs to be understood is that operating lease is a service activity. However, there is a movement of aircraft which happens within the country. So from a movement perspective, the customs law comes into being and the exemption continues. With respect to the service activity, which is the operating lease or the lease payments, the tax which gets attracted is the IGST, and however there is an exemption in place for such IGST if it is provided for the authorized operations of the IFSC unit, and which we are going with the presumption that the IFSC unit would be procuring the aircraft only for authorized operations. Hence, this exemption will also come in place. So, if you look at it from an indirect tax regime, for IFSC unit to procure an aircraft from an indirect tax perspective, it comes absolutely tax free for you to undertake your onward transactions, because there is no customs duty, there is no GST, and as Suresh covered in the earlier slide, even to a certain extent stamp duty exemptions are also there, and hence from the underlying bottom line relevant important point is that it comes absolutely tax free. Now, this was the first piece of transaction which was on the procurement. Now, the subsequent piece of transaction which is on the IFSC unit undertaking further activities in terms of utilizing that aircraft for onward purposes, which could be for operating lease purpose. Now, here there could be again two sets of customers. One could be an onshore customer in the sense of an Indian aviation company, and other could be an offshore customer, which could be anywhere in the world. In respect of offshore customers, there would be no GST implications or any customs duty implications, because it would again qualify as an export transaction, and it would mean it's a completely tax-free or a tax-free activity altogether. With respect to onshore transactions, which is transaction with an Indian aviation company, it will be as I mentioned earlier, an SEZ unit or an IFSC unit, as it is a part of within the SEZ zone or SEZ Act, it is deemed as a foreign territory for tax purposes, and hence when an Indian aviation company procures an aircraft on lease basis from an IFSC unit, it is treated as if the Indian aviation company or the Indian airline company has imported the aircraft into the country. Now, as it is being procured on operating lease basis, again, there would be two kind of tax implication or two kind of legislations which will come into being. One is the customs duty and the other is the GST law, which is for to cover activities of services. The customs duty will come into being because of the movement of the aircraft outside the control and possession of the IFSC unit into the control and possession of the Indian Aviation Company. And to the extent of customs duty law, there is an exemption provided that the lessee or the Indian Aviation Company pays GST on the lease premium which it is going to pay to the IFSC unit. Again, which means that from a customs duty perspective, there is no customs duty implications on procurement of the aircraft by the Indian Aviation Company from the IFSC unit. With respect to GST, there is a slight anomaly here, and the law says the GST has to be paid under reverse charge by the Indian Aviation Company. However, under the SEZ Act, in a normal situation, the GST is payable by the IFSC unit or the SEZ unit on a forward charge basis and not by the recipient under reverse charge. There's this the overall cost implication or the overall impact on the transaction in terms of tax and the rate all remains the same. It's the only difference between who pays it, whether the IFSC unit on a forward charge or whether the Indian Aviation Company on the reverse charge. That's the slight point of anomaly, and which aspect has we have already taken it up through the IFSC authorities with the government, and we are in active discussion with them, and we are definitely hopeful that in a short time this anomaly will also get addressed. Hence, at the end, and important to understand that this GST, which is paid under reverse charge or under forward charge, which is being borne by the Indian Aviation Company, it is eligible as input tax credit in the hands of the Indian Aviation Company, and hence it is not a tax cost for them, which is identical to an aircraft being imported or procured by an Indian Aviation Company from an Irish lessor or in a LILO model, whichever the model may be. Hence, by by establishing yourself in an IFSC in the IFSC and conducting your leasing transactions from IFSC, at least to the extent of indirect taxes, there are no incremental tax implications, and it's all ensured that it's all made neutral. In fact, there would be probably more comfort in terms of carrying out the movement and tangibility once the earlier point which I mentioned in terms of the benefits we are trying to see in terms of removing the requirement of getting the aircraft within the IFSC zone. So these were this is the law around indirect tax law around doing aircraft leasing through IFSC in India. Happy to respond to any queries. I know I have overshot the time. Please excuse me for that. Any query revolving around indirect taxes or any query revolving around corporate taxes, happy for Suresh and me to take it up during the session or after the session. Thank you very much, everybody, for the time. Thank you, madam.
Thank you, Nireen. We're going to take all the questions at the end of the panel. Of course, you raise very important issues that there are no incremental taxes, but there is ease of operating the tax regime when you are working out of SEZ. You have brought out the what you term the anomaly between the RCM payments by airlines if they are importing or leasing the aircraft from an overseas lessor versus the forward charge mechanism for the lessor to pay the GST in a SEZ unit. So technically, it's not an anomaly as such, but it's more of a question of how the input tax credit is availed and how it is transferred through the line to the final user. So we'll address this in the question hour session. So without much ado, thank you so much, Suresh and Naren. I'm going to move on to Paul Myers. He's going to speak about credit risk management, including the rupee risk. Paul Myers is the EVP Leasing Markets, Customer Finance and Asset Management of Airbus. He was born in Paris, but he's a Dutch and a French citizen. He holds a Bachelor of Science in Aeronautical and Astronautical Engineering from Purdue University and an MSc in Management from Boston University. He started his career in commercial at Airbus for about 9 years, where he held roles in airline marketing and sales financing. He moved on to Credit Lyonnais and PK Air Finance, where he spent about 5 years in aircraft financing, and later from their Luxembourg office and later the Toulouse office as VP Marketing. Now his new responsibilities in Airbus cover leasing markets, customer finance, asset management, and aircraft investor relations. So he brings to us more than 30 years of commercial and finance experience, which is combined with the expertise in aircraft evaluations and purchasing, aircraft financing and operating leases. And he has been involved in multiple big ticket transactions globally over the years. So welcome to our panel of experts. Paul, the floor is yours. Thank you.
Thank you very much for the nice and detailed introduction. Hello, everyone. Good afternoon. I'm very pleased to join this Aircraft Leasing India roundtable. I will, during this half hour, spend some time to go through some key topics on aircraft leasing. The agenda, if I can switch, yes, here we go. The agenda is going to be covering the growth and importance of aircraft leasing, looking specifically at the Indian markets. And then I want to spend some time looking at the, more importantly, leasing business fundamentals. So I will go through the first two sections fairly rapidly and focus on the last one in more detail, as I think that is more looking at the expertise and aspects required to develop the aircraft leasing activity within India. So looking at the growth in aircraft leasing, first of all, you can see that this business took off in the mid-80s. But has been expanding fairly rapidly since late 90s, early 2000s. The total leased fleet initially was fairly minimal. Airplanes were being acquired by airlines through direct purchases. And over time, leasing developed to cover 50% of the global fleet. And I will show that this activity continues to grow very rapidly on a global basis, and you see that the mix today is very important, and the airlines operators are relying very much on aircraft operating leasing. First of all, and I think this may have been covered a little bit before, so I will not spend too much time on it, but you have basically two different approaches to leasing. First, the lessors that make direct orders with the manufacturer. So they purchase an aircraft ahead of delivery, some years in advance. So they have a forward order book. We also sometimes call it a speculative order. And they will, during a period between the order and the delivery of the aircraft, have a phase where they will market the aircraft to place it with various lessees around the globe, various operators. So they will be responsible for finding a home for the aircraft. and they will be very active and relying on their in-house marketing expertise and relationships to place the aircraft with operators, which is a different structure from the sale and leaseback, which is more a financing approach to aircraft leasing, where the airline has placed the order, but at delivery of the aircraft, they seek financing via a lessor, like they would finance the aircraft via a bank. But the lessor would purchase the aircraft from the manufacturer or the airline at delivery of the aircraft, and then lease it back to the operator for a predetermined lease term. So the very big difference between these two approaches is obviously that in case one, you have the lessor responsible for finding a home, and in the second case, it's really a financing of the aircraft by a leasing company. I think it's important to understand these fundamentals, because you have different players in the market in these two different areas of activity. So looking at the share of our deliveries from the lessors over the past years, focusing on the last 20 years, you see that we had a number of, in dark blue, direct orders from the lessors that has been, give or take, fairly stable over time. You could say around 30% of our single aisle orders are being done via lessors who have order books with Airbus. The remaining is done via sale and leasebacks, so the financing at delivery that I just mentioned. And this has been a growing share, and today represents roughly the same amount of, or same number of deliveries being financed via lessors. So an equal share between the direct orders, forward orders, and the sale and leasebacks, and nowadays representing more than 50% of our total deliveries. So you see the number of players also slightly different. There are fewer lessors going with the direct order approach. It requires more in-depth expertise. It requires more solid marketing expertise, because they've got to place the aircraft with an operator, so they need a global marketing team. In the case of sale and leaseback, yes, they will need some marketing expertise to remarket the aircraft at the end of the lease term, but they don't have to market the aircraft upfront. And you see that the number of players on the sale and leaseback market last year for us was around 35 lessors, while on the direct order it was slightly over 10. So a different number of players, far more players in the sale and leaseback market than on the direct order market. Looking at the snapshot of our deliveries, how were our aircraft financed within Airbus last year? We delivered 566 aircraft, all types included, from the A220, our smallest member of the family, to via the A320, A321, our single aisle key product, core product, to the A330 and A350 product, and last but not least, a few more A380s that we're still delivering, represented 566 aircraft. How were they financed? And you can see here that, as I said before, lessors represented the majority of the majority of the aircraft financing availability for those aircraft. 55% via lessors, 37% was done directly from airlines, from cash payments, often paid cash, but maybe refinanced after delivery. So it can be done via different structures that are available in the market. I think it may have been mentioned earlier this morning about the typical type of structures, whether it's ECA or supported financing or capital market structures. So some of the deals were also financed by the ECAs. We did 10% of our deliveries with the export credit agencies of Europe and Canada. Canada covering our Bombardier acquisition, the A220, now an Airbus product, but still supported by Canada. And then we stepped in on 1% of the deliveries to support in some way or form, assist some delivery financing with our balance sheet. So very limited number of aircraft. But you can see the key role, the key message here is that the lessors have been playing a very substantial role in delivering our aircraft. Looking at the landscape, it's very interesting to look at the evolution over the last 20 years. You can see that in 2000 there were around 9 lessors. Their backlog, which is their direct orders, were around 400 airplanes, and there was only one lessor with an order of 100 aircraft or more. So you can see the landscape the way it was 20 years ago, very much US-centric, a few in Europe and one player, SALE in Singapore at the time. And that since then has moved very much east. You can see that, well, not only did the lessors get much bigger, but also the center of gravity of the market has moved to the east, with lessors developing their activity in Southeast Asia, China, India, and a lot of big markets which are the high growth markets on the east side versus the more mature European and US markets. So you can see also a much larger number of players in the market, and obviously quite a few new players, including Chinese leasing companies. I'll come back to that a little bit later. So in India, turning to India, the market in India has grown very, very steadily and very rapidly, multiplied by 7 over a 20-year period. So that equates to an average growth of 10%, which is very, very, very important compared to potentially other markets. So we see a big potential, and the lessors have been obviously playing a large role in India. I will show that, but it started, roughly speaking, 20 years ago with the first Indian Airlines A320 that was put on lease, and today represent around 550 aircraft that are leased in India. You can see that the share in India is substantial. There are far more aircraft in proportionally on lease in India than any other market. 79% of the aircraft operated in India by Indian operators are on operating lease. So that's a large share. You can see in other markets it's also grown substantially, but not as fast as in India. So India is clearly a very high growth market with tremendous potential. Just to say that in India also, a lot of the airlines have been using a mix of sale and leasebacks and taking also direct orders from lessors, but the sale and leaseback activity has been very significant in India, and that has contributed a lot to the growth. You can see here in the last 5 years, especially, making India a clear leader in the proportion of aircraft on operating lease. So looking at the players in India, a very diverse and large number of players. A lot of lessors are very active in this market. You see some of the names with the number of airplanes that they have on lease in India, Avalon, DAE, CDB being the largest, but followed by a lot of other very significant and important players. So a very diverse market, a lot of competition, which is good for the operators, for the airlines. They get a lot of very strong interest from the leasing community to finance the aircraft. And I think this is continued, and we see still very strong interest for the Indian market. Now, taking an example on China, 20 years ago, there was virtually no lessor based in China. There was no lessor. Since then, it has grown significantly. Some Chinese institutions, mainly backed by large banks, have developed a domestic activity of financing aircraft for Chinese operators. They are focused on China, but also developed internationally. So the core market was first working their China development, and as part of that, they've also been acquiring a lot of aircraft from other lessors to drive their international growth and their international footprint. So it's been a mix of financing aircraft in India and purchasing aircraft from other lessors to grow their portfolio and diversify also their portfolio outside China. So you can see that today it's 58% of their portfolio is outside China, 42% is in China, but you can see that they have grown significantly and have added a lot of their a lot of the fleet in China has been now financed also by Chinese lessors. So I want to spend a bit more time on the fundamentals, which I think are quite important here for this roundtable session. to explain a little bit what drives leasing, what are the key criteria of aircraft leasing, and how the business can be developed within India and with Indian players. It's a very concentrated market in a way. There are a lot of players, but you see 80% of the aircraft are leased by 44 lessors, and then 50% by only 12. So there are a few mega lessors, you can call them, that are significant players. But it takes time to get there. You build up your portfolio over time. You start usually with looking at your core domestic market, but then it's very important that lessors expand internationally and have a what we call portfolio diversification to diversify the risk in their portfolio. So these are the biggest players that we have, the top 20 players. Two very large lessors, AerCap and GCAS, stand out, but followed by some other very important lessors with fleet sizes that you can see here on the chart. Many have, you can see their in-service portfolio, but also added to that the aircraft they have on order with the manufacturer. Most of the big players have direct orders, but not all of them. You can see that a few like PBAM or Aircas or DAE have no direct orders with us or any OEM, but do have a significant portfolio and significant activity, mainly driven by the sale and leasebacks. So the type of profile of the lessors varies quite a lot. You have a number of public lessors like AirCap, Air Lease, and Calc that are listed. You have the majority of the players are backed by large financial institutions that give them the financial backing. And you can see these on the bottom left here. And then you have also those backed by large banks. So the financial support is obviously very key. The access to very strong liquidity and strong financing at competitive rates is very key in this industry. And that's one of the key competitive aspects of the lessors, is to access capital at an attractive rate and leverage their balance sheet to give competitive lease financing to the airlines. But you can see there's quite a lot of diversity in the way these lessors are structured. Some are semi-public and semi-owned by large institutions, as you can see there in the middle. But most of them have very strong financial backing to drive their success in the market. Just taking a few examples, of different sizes of lessors, taking, for example, AirCap as a very large player, one of the largest players with over 1,000 aircraft in their portfolio. Then a more mid-sized lessor like SMBC is still very large, but obviously smaller. And then a smaller institution like Goshawk. All of them have different sizes, have established themselves at different phases. But one of the common denominators between those three institutions is that they do all have a very large base of operators, of customers, between 70 and 160. You see number of lessees. So the importance here and the key message is really to have a large, it's not only driven by aircraft size, but it's the diversity of operators that matters. The portfolio diversification is absolutely key. And that is something that is driving the success of a lessor, is to have a global footprint with relationships with airlines around the globe. So all these airlines, all of these lessors, despite that they're different sizes, all need to develop a global network and a global relationship with airlines around the world. You can see this here. You can see they have different focuses. Some are more European focused, some are more Asian focused. But the key driver here is the diversification on both the lessee side, but also on the aircraft types. They diversify their risks amongst operators. They diversify their risk amongst aircraft types, having a mix of wide bodies and single-aisle aircraft, and in some cases also regional jets. So having that type of diversification and understanding the market and not placing, let's say, all their eggs in their basket is one of the key drivers for financial stability and success of a lessor, and the ability also to attract this very important source of financing and cheap capital, which I mentioned. So some lessors are have obtained ratings from the rating agencies, investment grade ratings, which is predominantly based on their diversification of their portfolio, their financial stability, and their ability to drive solid earnings on a steady basis. And we could even see that during the financial crisis, roughly 10 years ago, slightly more, but many of the lessors kept very strong earnings during that period, even though the financial markets were shaken up very, very much during that period. They managed to retain fairly strong profits during that period. So to be global lessors, you need to move your assets around. You need obviously to be able to take aircraft back from an existing operator and redeploy that asset to another part of the globe. That international footprint requires expertise, but also requires a very important legal framework, which is driven by the Cape Town Convention. It's a very important agreement that has been ratified by many countries that you see here highlighted with entry into force. They have accepted the Cape Town Convention, which drives the jurisdictional risk, the ability of lessors to repossess aircraft in case of lessee defaults. Local law basically supports the Cape Town Convention when the convention has been ratified and put in force. And that enables the lessors to fully play and leverage the mobility of aircraft assets. So one asset can move from China to the US or from the US to India. And the lessors provide that type of flexibility that enables to move aircraft from, let's say, airlines that could be in a weaker, or markets that are in a weaker position that have lower growth, to markets that have a higher growth. So that type of flexibility is unique in aviation because of the mobile assets, and it's key to drive the lessors in terms of their financial stability. So very important. India has ratified Cape Town Convention, so it's very important to provide that type of visibility and stability, legal framework visibility to the investors and to the lessors. So and spend a bit more time on some of the fundamentals. I would say the two very key drivers to drive a successful leasing company are the people and the relationships. The people in terms of the experience they have, their technical capabilities, whether it's accounting, managing subjects like we heard before on taxes, manage the risks driven by the business. I'll mention this a little bit later, looking at the risk analysis, understanding the business fundamentals, the assets, having expertise in terms of marketing, remarketing aircraft, and obviously also trading airplanes, because lessors do want a portfolio to turn. They trade aircraft on the market or to other lessors. So all this activity is driven by strong expertise, strong talent that is required to build a very strong business for a lessor. The relationships with a lot of different parties, whether it's the banks, the financial institutions, I mentioned the rating agencies, procurement on aircraft and services, buying airplanes, the relationships, obviously core relationships being with the airlines, the operators, and the ability to source the right financing. So people and relationships are driving success for lessors. It takes time to build this talent. It takes time to build this expertise, but there are many countries we'll talk a little bit about one of them that is very, very key in our sector today, which is Ireland. I'll mention some of the parameters later on, but you can see that these are the fundamental sides for success of a strong leasing industry and strong leasing sector. A few quotes from lessors, AerCap and Avalon. They're focusing on, again, as I said, diversified portfolios, modern aircraft. The latest technology is very key. Managing the technology cycle, managing the business cycle. It's a cyclical industry, so entering at the right time, at the right price, with the right assets, and satisfying the customer needs with the right assets is typically, the very strong fundamental in aircraft leasing. basically having the assets that your customer wants is very important. Trading aircraft, I mentioned it. The lessors do trade airplanes to other lessors. I think a lot of lessors have started their business by buying portfolios from other lessors to get themselves established. So a lot of the largest lessors will trade some of their portfolios, 10, 20, 30 aircraft at a time. They'll sell it to another lessor. They'll sell it into the market, into the asset-backed securities market. That is very developed and has been very successful over the past five years. So there's a lot of ways to generate additional profit by trading airplanes. But before doing that, obviously the lessor needs to source the aircraft. So the successful lessors today have all started by buying assets from other lessors to establish themselves with a starting portfolio and then develop the relationships with the airlines on a global basis. Looking at the risk management, a very core competence for a lessor. There are many risks to manage in this business. There's the environmental risk, the strategic risk, looking at the geopolitical aspects, the countries in which you operate, in which you do business. If you want to be a true global player, you have to take risk in many different jurisdictions. You need to understand the situation in those jurisdictions. I mentioned Cape Town, obviously providing some visibility on a global basis on some of the jurisdictional risks. But it's also, understanding, the general framework to do business in many different countries around the globe. There's the asset risk I mentioned, the type of aircraft you want to invest in, what are the right assets, at what time is it the right time to buy assets, do the assets have the right liquidity in terms of demand from the market, do they have the right residual value profile? I think there was some discussion about it earlier, but there's going to be more about it. It's very key to buy assets that have strong residual values because that is what is driving the return for the lessors. Looking obviously very importantly at their financial risk, the airlines, the credit risk of the airlines, having the proper ways to analyze airline balance sheets, airline business plans, understanding the business fundamentals of airlines, their markets, their presence in the market, their competitive position, how they will grow in the future, what are the real risks in an airline, assessing their balance sheets, their exposure to currencies, fuel. There are many aspects to analyze in an airline to understand the fundamental risk of such an airline and its credit rating. So, and then last but not least, the operational risk. Aircraft come with operational risk. They're basically understanding the technical aspects of an aircraft, their maintenance cycles, the cost of maintaining, the safety of aircraft, a lot of aspects related to the aircraft asset itself. All these risks obviously are interconnected and need to be properly assessed to get the right picture of the investment and establish the right risk and reward of an investment. Obviously, certain investments require higher reward depending on these different assessments that you see here on this page. And having the expertise to make this risk analysis is absolutely key. Having the right people to be able to assess these different risks, bring them together into one perspective about a transaction and understanding the underlying transaction and the risk reward that transaction will provide to the lessor, and the financial stability, obviously, of the lessor with the diversification. But altogether, it's really understanding the airline business, the airline fundamentals, the operator risk, and the demand requirements in the long term from the airlines. What aircraft do the airlines really want to operate in the next even 10 or 20 years, and understanding the dynamic and also being able to anticipate future market dynamics and market demands. So all these assessments are important. The currency aspect, just to mention, is also very important. Aircraft are traded in US dollars today. It's a US dollar market. Now, some countries have been able to source financing and leasing in other currencies. There's been a bit done in the euro, although it's still very limited, and it is possible to structure transactions with other currencies. However, the residual value of the aircraft fundamentally remains a dollar, basically asset, a dollar residual value. So what we've seen in the past is some transactions with other currencies, but mixing maybe other currencies and the US dollars as the asset remains very much a dollar asset. And that is something that the lessors are continuing to do because the trading of aircraft also requires that, basically the structure of the transaction is dollar based. So you could structure it in certain cases with other currencies, a lease with rupee, maybe with the lease receivables could be structured in rupee, but the residual risk and the asset risk probably will need to remain for some time still a dollar-based underlying risk. So just wanted to focus quite a bit on this. I think this is quite important to understand. And it takes time and talent, the right people to develop this type of understanding and to create a right lessor franchise, the right lessor development and the right portfolio balance. So as an example, very successfully, a country that very successfully developed the aircraft leasing space, Ireland. They've done a number of initiatives for the past 30 years, started in the early 90s or even slightly before with GPA, one of the major innovative players in the leasing space. Ireland has created a number of very successful and enablers to the leasing market, a stable fiscal policy, double taxation agreements with many other countries around the world to enable payments, lease payments being free of any withholding tax, signed up the Cape Town Convention, provided regulatory support to create new companies. Every aircraft is typically, or several aircraft are financed or set up through SPVs, special purpose vehicles that need to be created rapidly with the right approvals. The right expertise, years of building people with talent, understanding on the accounting and fiscal and relationship and marketing side. They've successfully developed that, access to funding to source the right capital. All of this has been extremely key to the success. I think there are other jurisdictions working to replicate this type of model. There will be other jurisdictions that will do it and will succeed. It's very important to create a right framework to attract investments, attract the investors, and the fundamental requirements are well understood. And there are some new developments, as I showed you in the beginning, that the center of gravity of the leasing is moving east. We can expect a lot more initiatives from countries based in Asia and obviously in India as we speak today that will develop very successful environments and platforms for the aircraft leasing and investors to come to these new jurisdictions for aircraft operating leases. Just to conclude this presentation, I want to mention a few other aspects related to aircraft leasing and other developments that are beneficiary from the investment that is generated by aircraft leasing. Obviously, creating a very strong pool of talent, of people, and job opportunities with highly developed experts in the field is one aspect which I mentioned, but the side benefits are developing a lot of attractive other expertise in the field of, for example, maintenance of aircraft, maintaining aircraft, storing aircraft, finding facilities to manage the aircraft transitions, manage MRO activities, parts. All of this basically follows on, and we can see, for example, as I mentioned in Ireland, that there's been a lot of MRO activity generated from the investors also in Ireland. that are creating a lot of job opportunities within the country. Last but not least, end-of-life potential recycling of aircraft has been also developed quite a lot lately in different jurisdictions. As the fleet is turning over to more modern equipment, the recycling of older equipment, older aircraft has been a very important part to do this in an environmentally friendly also solution. So I just wanted to mention before concluding my presentation that the secondary benefits from attracting investment in aircraft leasing are very, very wide and provide a lot of benefits to the country. So with that, I would like to conclude, the few messages here clearly is that there's a significant development of our aircraft leasing space globally. We think 50% is probably going to be sustained, if not even increased going forward. The skill sets required are very important. And I mentioned, this takes a bit of time to build up, but the skill sets are available. And it's a long-term benefit for the country to develop the right environment to develop this space, not only for its domestic market, but for investment, global investment into the country, into the leasing space. So with that, I'd like to conclude, and I've been very pleased to join this roundtable and give the Airbus perspective on our industry, and hopefully see a very strong development in India on this on the operating needs space.
Thank you, Paul Myers, for a very detailed and insightful discussion that you have brought to the table. You've already summarized what you have said, so let me just raise one or two thoughts that were occurring to me when you were presenting your issues. So, for instance, if you look at it from the Indian market point of view, you brought out the importance of financing via the lessor under SLBs, which has been India's predominant source of leasing, the kind of transaction. And equally, you brought out that if we look at many of the lessors, which are now emerging in the Asia-Pac region, for them also there is a financial strength, either or a backing, either through FIs or subsidiaries or through banks. The banks, of course, is mainly the Chinese lessors and SMBC, ICBC, CDB Aviation, BUCA, etc., etc. So this, I thought, is a pretty important takeaway for us as policy planners to see as to whether in the GIFT City we have put in a suitable financial backing for SLB transactions, which are generally preferred by Indian lessees. But obviously, you have also brought out that the strength of the lessor lies in having a diversified portfolio, and to the extent that the Indian lessors go for leasing to other markets, as was done by China, after having taken up some domestic activity, then that may be a useful way to go forward. On the rupee or the dollar domination in the aircraft ownership and sale or leasing space, it's again very interesting to find that even when the aircraft are being manufactured in non-dollar jurisdictions, the bulk of them continue to be transacted in dollars, and so therefore there is the overhang of a euro versus dollar risk for, say, aircraft which are procured from Airbus by Indian lessees, and how that has been captured into the overseas the transactions with the overseas lessors from Ireland. To me, that is an important thing. And you also indicated that the currency is a very important issue, even in inter-lessor trading of the asset, or even when we are looking at the end of the lease, end of life of the aircraft and how it's valued. So I can sit with you for hours to discuss many of the things, but one factor which stood out as well when we are looking at the issues of talent and need for expertise. The top three lessors that, or the sample of three lessors that you had taken, which have sizable aircraft on their order book, the number of employees that they have is actually less than the number of aircraft held. So that's an important. So I think if I remember correctly, the number of employees was in the range of 300 to 400 for AirCap, whereas the number of aircraft held were nearly 1,000. So it's a very important, I think, takeaway for our lessors, budding lessors in GIFT City as well. I thank you once again, and I'm sure there will be loads of questions, so we will revisit them as we go along. Thank you so much. Thank you, really.
Thank you. Thank you.
The next issue is that we will be taking up, again, staying in the domain of credit risk management, in a sense, which is something that was brought out. So we were very particular about bringing in insurance on the table for discussions, because of our perception also that as ECA-backed funding is diminishing in order, and it's more the risk management through insurance products that we have a segment on insurance. And I'm going to request Geeta Murlidhar to take up her presentation. That would be followed by Deepak Mahor of ICICI Lombard. So first, speaking of to introduce Geeta Murlidhar, I'm sure most people know her. She is the Emerita CMD of the Export Credit Guarantee Corporation of India. Incidentally, Geeta was the first lady to head a government-owned insurance company, and I'm very happy to see that. It gives me great pleasure, because India has done many firsts with ladies in political, scientific, and financial space. So, and many others. I was also very happy to be India's first trade negotiator under the GATT WTO. So when I went there, it was after 50 years that India took a lady to be a trade negotiator at Geneva. So I'm happy to see Geeta with such milestones having been achieved by her. She's also the chairman trustee of National Export Insurance Account, a trust which is set up by Ministry of Commerce and Industry for providing export credit insurance for promoting medium and long-term exports. She's on the board of Africa Trade Insurance Agency, representing India, which is the first non-African state to become a shareholder. She has over 35 years of experience in export credit insurance. She has been a vice president of the Bern Union, which is a 80-year-old organization of export credit agencies the world over, and is the managing committee member. She was the first Indian to hold this position, apart from heading the regional Asian group. She also continues to write on trade finance and export credit standards and the role of ECA's public. So over to you, Geeta.
Thank you so much for such big compliments. Good afternoon, namaskar to everyone. And it's just over a year of my retirement, And I said, I'm not going to think about exports, insurance, or whatsoever finance. But then, Vandana ji's passion and her drive is so infectious that it would wake up anyone who is even past their time. So here I am, and at the outset, I thank her for giving me this opportunity. And I also thank some of my previous speakers who are making this session easier for me. May I have the slides, please? Understanding of aviation market and risk and credit analysis, assessing creditworthiness and soundness of business of customers. These are the major and key work parameters for any credit insurance and for any ECA. So ECGC, having been in this field for yeoman years, they are very well established in this aspect. And when I went through the previous speaker's comprehensive risk map, there's no other organization which would match up to answering all the queries out of that. Various funding options our colleague from SBI, Ashwini ji, covered very meticulously. We also understood that funding the sales of aircrafts in the commercial paper market, it will be a huge maturity mismatch issue for all. And because we are talking about maximum repayment of 10 years, 12 years, and so the export credit agencies backed by the sovereign governments have always had a major role in aircrafts leasing, selling. Basically, the aviation industry owes its growth to a lot to the export credit agencies. Yes, they provide about 85% financing, but financing is only the last resort. Most of the time, with the guarantees, the lenders derive the full comfort and then get down to, a consortium lending, sharing between the major banks. And we also saw that there have been times when the export credit agency had to resort to direct lending, which could invite a lot of criticism from, talking about level playing field in our various working groups and discussions. We have had these issues coming up. And some of the ECA's deals that I would like to mention here, I had earlier also talked to Vandana ji about what UKEF, the UK Export Credit Agency, did. By way of a guarantee, they supported 2 billion British pounds, equivalent of renminbi, the Chinese currency. And the lender, of course, was the HSBC offshore. And precisely because 97% of the earnings were in Chinese currency by the Chinese airlines. When I was mentioning this, she was coining the rupee raftar phrase. And I was telling her, my dream is to see that similar such initiative is also implemented in India. A recent deal that was of great interest was XM USA. After they came about, after all their authorization issues got settled, as recent as September 2020, about 5 Boeing aircrafts, if I recall right. It was a French lease. ING and BNP were involved. About $170 million, and was extended. The beneficiary was Turkish Airlines, and that was quite a recent deal. In fact, PEFCO, the Private Export Finance Corporation, which has been set up by USXM, they also carry on their portfolio a maximum of almost 86% of the aircraft financing. Well, I would like to mention about Africa Trade Insurance, as ECGC is on their board and we hold their shares. We have found that ATI has supported not lease agreements, but loans with a 1-year moratorium on a repayment for the beneficiaries being Kenya, Ethiopia, Rwanda. So some of the deals of ECAs in the recent past, which has been of interest, I thought I'll just share with all of you. But unfortunately, after the UKEF SFO's debacle and the reauthorization of XM USA's being held up, the export credit agency slowly started withdrawing with the European banking system getting into stress also. European banks historically played a key role, and when they started retracting, there was a huge space left for others to jump in and do something. And I just heard that Airbus has got support of only 10% share from ECA's financing. If you remember, other speakers had also shared a chart of financiers and their experience in the recent past. And unfortunately, against the ECA, you would have seen only yellow, and some light stripes. I was only worried that there shouldn't be a red, because there's been a huge commitment from them. So when the ECA started retracting, due to the continuing global uncertainties and difficulty in accessing funding, and last 3 years almost, there has been a complete absence. Jump in the general insurers who started bulking up sufficiently to take the place and answer our problems. In the meantime, I would like to just, bring to the notice of Vandana ji and others who had been involved in the past, when ECGC was called upon to, support these kind of transactions, we talked about ensuring the receivables from the lessee or the airlines, whether it was in INR or foreign currency. And we were working out the modalities, non-payment and default, how do we define, and in how many days the a claim could be filed and how to honor it. We were thinking about issuing a services exports policy with a maximum risk defined on ECGC's books. We even discussed about reinsurance support and how to assess the merits of the lessee or the airlines. In fact, all this would have been possible because we still have our office in the GIFT City. ECGC was one of the earliest organization which had set up office in GIFT City, expecting these kind of businesses. All right, so can we move on to the next slide? So talking about the alternatives, now the non-payment insurance that we are talking about here, then general insurers bulking up for it. It is under the purview of Aviation Finance Insurance Consortium, AFIC. That's what the Marsh and Boeing together call it. And I read that Airbus and Marsh, they call it Balthazar. I couldn't get much material about it, but here we are talking about 100% coverage and terms again up to 12 years. And this was launched in 2017, way back in 2017, June. When we look at these strong orders, new aircraft types, strong demand in emerging markets, but the headwinds in the financing market making the financing more expensive. We don't have to worry because somebody spoke about the center of gravity moving towards east. Yes, it moved long back. Investors looking to deploy large amounts of capital efficiently. There are funds backed by China, Singapore, UAE, who are all very keen to invest in aircraft assets, as the industry would know, despite the challenges. And it's a huge opportunity for the new investors to earn attractive yields. We all know that the aircraft pool is continuously refleeted with more efficient aircrafts. In the past, the airlines used to take delivery of new aircrafts and the second-hand aircrafts would be passed on to the developing economies. But I don't think anymore, because new and smaller airlines in these developing countries, they're placing orders directly. Instead of placing orders directly with the manufacturers, sometimes through ECA route or sometimes through this insurance route. And we are, some of the deals under the AFIC that I saw was Ethiopian Airlines and ING Capital. There were 5 Boeing aircrafts, even Society General was involved, for about $230 million. That was a 12-year loan. Korean Air for a 777-300 for $150 million, a 10-year loan was also arranged. And yes, somebody mentioned about Japanese counterpart. The Japanese counterpart of AFIC, JFIC as they call themselves, Marsh and Sompo got together for that program. It's similar to the global program, and Japanese financial institutions and Japanese insurers were involved. And the airlines which benefited was Israel. 7879 was delivered to them. Japanese operating lease with call option, as someone mentioned, JOLCO. A very efficient finance structure only for new aircraft, of course, it is being done. The lease term of 10 years. And we have seen such epic operations being done. The most recent transaction was in December 2020, just 3 months back. AFIC, designed by Marsh and underwritten by Axis Insurance and Sompo International. The lender was Brazilian Development Bank, BNDES. 4 Embraer jets to SkyWest Incorporate. I think regional aircraft concept, what the recent concept people talk about would very much apply to a country like India, which is so vast and which is where consciously the developments of many airports across not the big metros, the other cities are also being developed. There's a lot of flexibility with AFIC arrangements. It can be with an ECA, with a bank, even capital market funding. Why don't we just look at the structure? If we look at its structure, it's a kind of a tri-party process, a system, tri-party system. So in a box, you would have a bank or the investor who is lending. Another box, you have the airline or the lessor, and then the AFIC in the third box. The bank or the investor, by way of a loan or a bond, would extend the finance to the airline lessor, who in turn has to repay the principal with interest on the said installments. But the airline or lessor is also obliged to pay upfront premium to AFIC. And AFIC would extend the non-payment insurance policy to the bank or the investor. Looking at the features of this, the funding agency need not worry anymore about the risk on the lessee or the airline. They should rather think about the risk of the AFIC, whether AFIC would ever default. All credit, asset, jurisdictional risk, which our colleague in the previous session was covering, are all transferred to AFIC. There's also talks on potential capital relief for the financiers. Financing cost will be based on the protection, upfront premium has to be paid. Access to the capital would be so easy with the highly rated AFIC panel presently. As I have come to know, 25% share is with Allianz, 25% with Fidelio, 25% with Access Capital, 25% with Sompo International. So I think about the rating or the risk on AFIC is we can just keep it aside for sure. When we look at the compensation details, it's amazing. Failure by an airline or a leasing company to pay installment in 15 days. That's the time period we are talking, 15 days. And the deadline for the lender or the investor to submit proof of loss, 15 days. And the deadline for insurers to pay the missed installment with interest is 10 business days. This is almost like factoring receivables. This is almost like you can't ask for more. A financier cannot ask for more. And after the leasing company defaults, AFIC will continue to pay installments until the outstanding principal amount is paid off. I for one who has been in the industry for over 35 years is unable to accept this kind of an arrangement, but this is the perfect arrangement that the aviation industry worldwide requires, and particularly for the India story to take off, this is going to be very, very handy. Did someone mention that in the overall financial structure of India, only aviation finance is the missing puzzle? Not at all. No more, as we can see. The dream year for aviation industry would, I think, was 2018, when Boeing and Airbus both delivered more than 800 commercial aircrafts in that 1 year. Yes, we have talked enough about how big a market India is, what India is. So one cannot stop India from growing and making it big in this industry too, and for which the export credit agency like ECGC, Exim Bank, and the insurance capacity that we have in this country, along with, of course, some other partners, even overseas partners, could make this really happen, could make this dream come true. I, for one, along with Vandana ji, can't wait it to happen. Thank you very much.
My God, I can hug you, Geeta ji, for saying two very important things. One is that aviation financing is no more a missing jigsaw in the puzzle, no more missing in the jigsaw. So frankly, that to me is, what can I say, more than I'm floating when I say that. The second point that the insurance capacity in India, coupled with the alternative forms of guaranteeing or providing the risk cover, is whether through ECGC or other international or Indian avenues which are available. I mean, these two are the biggest mantras actually that we needed to put together, so that Indian aircraft leasing, the hub begins to take off. The orders that Indian airlines have already placed are large enough, frankly, for institutional mechanisms to be built so that this is available on a tap, if you like, to finance the aircraft takeoffs. And as you said, the market, and so have the other speakers said, the market, aviation market in India is actually more assured than, I mean, it's among the top 3 assured markets in the world. So if people are not going to factor that in when they are pricing in the risk, then I don't see what else. The suppliers are here, the airlines, the aircraft manufacturers, the engine manufacturers. It's in their interest to work to make this a valuable proposition. And I think their presence here also marks that. So thank you so much. I have taken a huge number of notes as you were speaking, especially the examples that you have given of the alternative types of structuring that have been done, whether for Brazil or for the African carriers, or the advantages of a JOLCO or Ethiopian Airlines, Korean Airlines, all the examples that you gave. And I'm also heartened to hear that ECGC is already established in GIFT City. So I don't need to tell ECGC through you that please move. So let's see how we can put in some insurance products or guaranteed products which really work well. I know we thought about a very valuable service export related scheme. So let's see if it's needed. We will put it in place. Thank you so much.
I'll be here if there are any questions. Thank you very much.
Thank you so much. Thank you so much. I now move to Deepak Mahar. He is the Vice President, ICICI Lombard General Insurance Company. Deepak heads the Specialized Industries Group in ICICI Lombard, catering to clients in aviation, construction, and petrochemical sectors. He's an insurance professional with 16 years of experience in managing large corporate relationships, strategic initiatives, and complex deals. He is an MBA from IIM Lucknow and takes interest in technology, travel, and yoga. Well, excellent choice of interest. Thank you. Deepak, please go ahead.
Thank you, Vandana for a lovely introduction. Yes, yoga is probably something that is keeping us sane during the lockdown. So today I'm here to speak a little bit about general insurance coverages which are currently available in India, and what are the different companies, insurance companies that are providing them. So one thing that we should keep in mind is India is a admitted country, which necessarily means is, what that means is that any aircraft which is registered in India, any company which is registered in India has to buy insurance locally from a local insurance company. So today, if you look at the general insurance market in India, there are about 25 insurers, but only 5 of them have the capacity or automatic capacity to underwrite aviation insurance. So these 5 insurers, 4 are PSUs, which are New India, United, Oriental, and National. And there is only one private player, ICICI Lombard, which has a capacity to underwrite. So while we say it might look like a very simple slide on aviation industry with our airlines and general aviation, what we want to point out here is, as an insurance or as an insurer, we look at these different kind of aircrafts very, very differently. So terms or insurance coverage which is provided for an airline is very different. The deductibles which are provided for a rotor wing aircraft would be very different from a fixed wing aircraft. So once you are in a market to procure terms for your insurance requirements, you should keep in mind the kind of terms would not be similar. Okay, we can move to the next slide. So when we talk about the insurance coverages which are available, they can very broadly be bifurcated into these two types. One which are aircraft related and others which are aircraft operations or aerospace related. So when we talk, we'll go to each of these coverages in detail. But when we talk about aircraft related, it would be mainly to the property damage or any damage that occurs to a property. And aerospace related would typically be a liability sort of a coverage. We'll go into each of them separately. We can go to the next slide, please. Okay. So in the aircraft related covers, the first one or the main basic one is a hull all risk. And as it signifies, it covers everything that can happen to an aircraft. So all damages are covered except which are excluded, which are mainly mechanical and electrical damages. And it covers everything, either your plane is flying, it is taxiing, during takeoff, landing, or parked. All risks for the aircraft would be covered under hull all risk policy. So one very important thing that we need to look at when we are talking about hull all risk is that any damage that happens should be through a single recorded event. So many times there is regular deterioration of engines or parts. All of these incidents, any event because of these incidents would not get covered because these are discovered losses. So one thing that is important for any loss to be payable under a hull all risk policy is that it should be a single recorded incident. Okay. So next we talk about the aircraft liability policy. So any airline which is operating needs to maintain a liability policy for three different things. One is the passengers that are ticket-bearing passengers which are traveling. You need to insure against any liability that can come on them. Then there is a baggage liability, and then there is another third-party liability that an airline carries. Then there is another policy called as a hull deductible policy. So typically any aircraft would have a minimum deductible which is carried by the HSL underwriters. So hull all risk, spares all risk, and liability is typically underwritten by one single underwriter. They have fixed benchmarks for the deductible or the minimum amount of claim for which you are self-insured, and anything over and above that would be paid by the policy. So if you look at a wide-bodied aircraft, it can be close to $1 million. For a narrow body, it would be $750,000. For ATR, it would be $500,000. But there are some lessors or some operators which would want to have a lesser deductible. So the difference between $1 million and the deductible that they want, they can go and approach a hull deductible underwriter and buy a separate policy. Okay. Hull spares and war risk policy covers all war perils. So, for example, any civil war, terrorism, sabotage, hijacking, extortion, confiscation, anything that happens, these are all called as war perils. And any damage to the aircraft because of any war peril would be picked up by the war underwriter. These are typically separate underwriters from the HSL underwriters or hull spares and liability underwriters. Many a times, I'll give an example on how these two different, the underwriters are different. We can take example of a aircraft that probably went missing. Okay, so it took off from a destination, it didn't reach the other destination. And in any aviation policy, there is a stipulated amount of time. After that, you have to assume that the aircraft is lost. So because people could not make out whether it is a war-like accident or it is a natural accident, it was decided that both hull and war underwriters would pay 50-50 of the loss, and the entire loss was paid within the stipulated time. At a later date, the courts advised that this was due to the pilot in question, and he had hijacked the plane and put it into sea. So the entire hull all risk portion or the entire aircraft portion was paid by the war underwriters. But the liability portion was still remaining with the HSL underwriters. So this is how a normal HSL policy or a war policy would operate. And this is how the coverage bifurcation is being done. Okay, next slide, please. Okay, when we talk about the spares, so anything which is not attached to the aircraft is called a spares. So many a time people would maintain a spare engine or stocks for their regularly changed things in an aircraft. So all those things would get covered under a spares all risk policy. It can be while in storage, while you are sending your engine, and even if the engine is kept in the belly of the aircraft, it is still considered as a spare. As soon as it gets attached to the aircraft, it would become a part of the hull, and then it would be paid under the hull all risk policy. So spare all risk policy typically have a smaller limit, and people can opt for that. Okay. Aviation personal accident is a simple personal accident policy, but in all personal accident policies issued by most of the general insurers, aviation risks or perils are generally excluded. So for your pilots, for your crew, you need to buy a separate aviation personal accident policy. This policy would is a 24-hour policy. While you are entering into a lighting as a pilot or a crew member, it would be operational. We underwrite, ICICI Lombard underwrites a policy for aviation personal accident for the Federation of Indian Pilots. So where some 4,000 pilots are covered, and on a monthly basis, we settle a claim of 150 pilots. So sorry, I'm talking about loss of license. So aviation personal accident, we are talking about loss of license now. So loss of license is if the pilot or operational crew sustains any bodily injury for which they are temporarily out of service and their license is suspended for some time, that gets covered under loss of license. So the Federation of India pilots policy, there are some 4,000 pilots which are covered under the policy. And on a monthly basis, we pay out the, it is like a salary account that gets paid out, 150 claims per month are paid. Okay. Next slide, please. Yeah. So in aerospace related covers, we can look at, these are only third-party liability covers. So most of these, all these covers, we are paying for a third-party bodily injury or property damage. So if we look at the airport owners and operators liability, it can pay for any liability. If you're going into an airport, you slip, you hurt yourself, then airport owners and operators liability policy would pick it up. Anything on premises would get covered. I will take an example. Last year, we paid out a claim to one particular general aviation company where a person had entered the airport. He was probably deranged and he hit a helicopter with a stick. So the panels were damaged, the nose was damaged. It was some 3.5 crores of claim. It was first paid by the HAL the hull underwriters, but then ultimately it would move on to the airport owners and operators liability policy, because ultimately at the airport, it is the responsibility of the airport owners, the operators, to ensure the safety of your aircraft. Okay. So now we talk about the aviation refueling or fueling liability. So it is a mandatory cover. So all providers like IOCL, BPCL, HPCL, they provide for this liability. So while your tanker is doing a fueling operation by the action of any of your employees or by the action of the driver, if it hits the aircraft, any damage to the aircraft, etc., would get picked up by this aviation refueling liability policy. So any mistake on the part of the person responsible for fueling, in case there is a wrong kind of fuel which is filled, or the quality of the fuel is not up to the mark, some mistake. There was one instance where the quantity of fuel which was supplied was incorrect, and due to some, there are always checks and balances, but due to some faulty measurement at sensor in the aircraft, the pilot also didn't come to know what was the actual amount of fuel, and the plane ran out of fuel midair, which was then the Gimli glider case. So these kind of claims would also get picked up by the aviation fueling liability policy. Now, the last aviation product liability policy, it is very talked about. So it covers all bodily injury. So any software or hardware that any company produces, which is to be fitted in an aircraft, is insured for product liability. So there are a lot of cases where there have been damage, or the incident can be traced back to a faulty sensor or a faulty software. So it would be picked up by a product liability policy. There's a $1 billion claim in America. We all know about it. And this is how a product liability policy would operate. Okay, next slide, please. We talk about the ground handlers liability policy. So it provides third-party damage coverage to all agents, subcontractors while servicing an aircraft while it is on ground and parked at the airport's tarmac. There can be small losses like nose hit or another aircraft being hit into the second aircraft because the directions were not proper. So all of it would get picked up by ground handlers liability policy. The second policy, this is the second type of liability policy here, is the aviation caterers liability policy. It covers any third-party damage to, including aircrafts, for food served in the aircraft. So companies like TajSats, etc., can normally buy this policy, Sky Gourmet, TajSats, etc. So this would not only cover the damage by their employees or their vehicles, because sometimes, most of the times, there is a crane that lifts up the truck to supply the food into the aircraft. If people are not monitoring it carefully, it can damage the aircraft body as well. So all that would get covered. In addition, any bad food. So there is a liability claim with us, 1 crore liability claim with us for some bad prawns that were served in a first-class cabin. So all these kind of liability claims would also come under the aviation caterers liability policy. So not only coffee spills, etc., are regular things, but these kind of things can also come up. Then the last one we talk about is the manufacturers or repairs liability policy. It covers any body damage arising out of manufacturing, service, repairs done on the aircraft. There was a recent case in Bombay where during a test flight, and probably the aircraft was not serviced correctly. It was a rainy morning, and the aircraft actually lost altitude and it crashed in the Ghatkopar area. That would also get covered under the manufacturers or repairs liability policy. So due to employees, due to faulty workmanship, or due to the repairs not being up to the mark, that would get covered under the manufacturers and repairs liability policy. Okay, so with that, I think it was a crisp presentation. We have also now opened an office in GIFT City. So ICICI Lombard is, we started our operations on 1st of April this year, and we look forward to seeing you all there. Thank you.
Thank you so much, Deepak. It's been very systematically presented, and I'm sure that all the lessors, potential and others who are looking to see what their liabilities or what are the kinds of insurance covers they would need to factor in while they are holding on to the aircraft, or which are being transferred from one lessee to another. There are so many transactional aspects as well associated with it. So I'm sure everybody has taken deep note of what you have said. And so in this insurance sector segment, we have had the credit enhancement role of insurance, which was brought out by Geetaji. Then we've had all the various products which are currently available on not just for the lessee, but also for the lessor and the manufacturers, etc., to take on board. So I'm sure there are going to be questions buzzing for you. Without much ado, because we've been holding Mark Pierman Wright for some time. My apologies to Mark. He is the head of investors marketing of Airbus. He's in that capacity Mark is responsible for all customer marketing of Airbus aircraft to lessors and works on the broader investor and finance community, including aircraft appraisers and aviation consultants. He began his journey in Airbus in 1990, and so he really brings a huge wealth of experience to us in the customer marketing department before joining the Airbus leasing markets team. He has had a successful career as sales director and head of sales in leasing prior to rejoining marketing. He's been involved with the successful launch of numerous Airbus aircraft, including the A380, the A320, and the A330neo. By the way, Mark, I like your A350 more than I like your A380, and I have a model of the A350 in my room to prove that. Then Mark has also served 2 terms on the board of ISTAT and is currently on the ISTAT appraiser board of governors. So Mark is going to speak on a huge range of issues related to business development, regulatory compliances, and talent, including the issue of internal and staff management as well as outsourcing. So over to you, Mark.
Thank you very much. And thank you very much, Madam Agawande, for your generous introduction. I will talk about the business development and the business opportunities. And India is a very good example of the opportunities that leasing brings. We've seen that with the growth of Indian airlines that are 79% on operating lease. So I'll talk about how leasing can expand business opportunities. But if we've heard throughout the day a couple of messages that I've taken away, one is that the industry is cyclic, world economic cycles. So we live in a cyclic world. But at the same time, aircraft should, on average, remain in operation, commercial operation, for 20 to 25 years. So an aircraft will go through various cycles, business cycles. So I'd like to take an investor's view on aircraft life cycles and tie that into values. So tie that back into some of the previous presentations and make it from an investor's point of view, please. Just as an example, we have one of the longest running aircraft programs, certainly for Airbus, was the A320, which was launched in 1984. It entered service in 1988, 34 years ago. Indian Airlines actually placed a launch order in 1986 and took delivery of the first aircraft in 1989. So a very early operator and testimony to the success of the A320 family. Obviously, throughout that period, Airbus has continued to improve the aircraft. If you see on that little small aircraft there, you could note that the aerodynamic improvements that the winglets, the sharklets as we call them, at the end of the wing bring. So Airbus has improved the aircraft. The engine manufacturers have brought in more fuel efficient and more reliable and more maintenance friendly aircraft. Throughout that duration, there are opportunities for lessors, as well as there are some risks involved. Paul highlighted in his presentation that there are over 200 lessors in the world, aviation lessors. Some of them focus on aircraft at different parts of their life cycle. So we've talked mostly about new aircraft, but it is important to understand that there are specialists, and some of the lessors, some of the big lessors will be from the cradle at the birth of an aircraft to its grave and make the most of the aircraft throughout its life cycle. Towards the end of an aircraft's usage, aircraft getting to be sufficiently old to be converted from a passenger usage into freighter usage. This is what we call P2F, which is passenger to freighter conversion. And generally, the freighter business is a business with lower use of aircraft, so they're very price sensitive. So unless they can use the aircraft very highly, most of the freighter airlines aircraft will be used 15 to 20-year-old passenger aircraft that have then gone through a passenger conversion. So whilst that's the life and we're getting towards the end of delivering the last A320 with the original, what we call the current engine option, the CEO, which we expect to deliver this year, that aircraft will then stay in operation, we would expect, for a further 20 to 25 years. So there is a new generation of aircraft, which we've launched with the A320 new engine option. That's what NEO stands for, which was launched in 2010, entered service in 2015. And again, Indian Airlines have been at the forefront of the A320 family, and Indigo, amongst others, are a very major operator and launch customer. Now, throughout that life, that point, the longevity of the aircraft program is going to be driven by the commercial success, which has allowed it to have a long life. And there is a value element. So where, as an aircraft investor, you're stepping into an aircraft transaction, it is worth being aware of the investment, where the asset is in the overall aircraft's life cycle, from whether it's at the beginning of an aircraft, in the middle, or towards the end. Just as a snapshot, the A320 family, which has a world-leading 300 operators worldwide, with the NEO, we have over 15,000 sales. So that is one, and we've had a number of speakers talk about the importance of remarketing aircraft. For a lessor, it's essential to be able to remarket aircraft, and then to do so, the number of operators and where they are is very important. And aircraft such as the A320, it has been a benchmark of the biggest volume, which is the single aisle aircraft, for many, many years. It was the first and remains the primary fly-by-wire aircraft, and that helps its efficiency. And I recall one of the presentations by Boeing, it mentioned versatility, and that is something that we would absolutely agree with. And that is something that, again, the aircraft investors should be aware of, and that is something that has made the A320 family part of the benchmark for investors. We are hopefully looking towards the end of aviation and one of the world's worst crises with COVID. Nevertheless, this industry remains particularly entrepreneurial, and that is very, very positive. So I have here a chart with about 40 airline logos. They're not all Airbus, mostly Airbus, but also Boeing airlines. They're announcements made by airlines starting up since the beginning of last year. That shows the entrepreneurial confidence is strong. If there is one thing to point out, all of those aircraft are leased, and leasing is the most common way for airlines to start up and to grow. We've seen that in India, and you see that around the world. So that is something that, again, as an aircraft investor, where you shouldn't just be looking at the top credits. You might want to seek that if you're doing a sale and leaseback with a known first airline, but then at the end of that lease and you're remarketing it, you're also looking to other aircraft. There is an aircraft at the bottom of the chart called Lift in the center. That A320 is 31 years old. So Lift has started with a 30-year-old A320 in South Africa. So that's part of the remarketing that an investor or leasing organization has to be able to go out and find. So it's not just aircraft that are young, but they need to do be able to manage the asset, and you've had a presentation on that throughout the aircraft's life. As we get towards the end of an aircraft's life, between 15 and 20 years old, if there's sufficient number of aircraft on the market, if there's sufficient feedstock, then some of the aircraft become successful freighters. So passenger to freighter conversions. As I said, those markets are generally quite price sensitive. So they like the lower used aircraft prices. We've just seen that with the A320 and the A330. The aircraft are really just coming into the pricing bracket that makes them viable for freighter conversion to compete with their previous technology aircraft. And this, for the first time, is bringing the Airbus fly-by-wire technology that has made those aircraft so successful for passenger airlines. We're just bringing that into the freighter world as well. So new technology aircraft coming in, the used aircraft. And again, that's something for an aircraft investor. It's an opportunity to bear in mind, because it's not just an opportunity. And when you're starting to see demand like that, there is an impact and a positive impact, because a successful P2F program will set a floor in an aircraft value. So there is a positive impact for residual value in having a successful P2F program. So that's an element that aircraft investors should also be aware of. We had Amit, who is an ISTAT, senior ISTAT qualified appraiser, going through some of the appraisal issues. This chart here just indicates the number of sales transactions of used aircraft, so any aircraft over a year old. Even in 2020, when due to the crisis, there has been a lot lower number of aircraft sales. What we've seen airlines doing, they've increased their cash by selling their aircraft to lessors, and they've also been securitizing portfolios. The lessors have been securitizing portfolios. The airlines have been issuing WTC securitized. All these financial transactions require a validation on the value of an aircraft from an independent third party. And that is who we go to. They are the aircraft appraisers that we talk about. And Acumen has as an Indian originated appraisal and leasing firm, has a number of appraisers on that. So that gives you an idea of the volume. On the new aircraft size, it's roughly the same again. So we're talking about 3,000 aircraft transactions, new and used, on an annual basis that will certainly need appraisals for. ISTAT was mentioned. Amit is a senior certified appraiser. ISTAT hasn't been particularly active in India, and maybe now with this initiative, that is the time. ISTAT is a non-profit association. It is a network primarily for the benefit of aircraft investors and traders. The aircraft manufacturers and engine manufacturers are part of that, as we're part of that cycle. It also is the association for the largest number of commercial aircraft appraisers, and we qualify ISTAT appraisers. So I'm speaking on behalf of the Board of Governors, and there are codes of ethics and standards with regard to the terms and the way the valuations are carried. And that is something that you're going to want your aircraft valuation done on a standardized basis. And Amit spoke very clearly and went through both the types of valuations and the different types of residual values from a future base value to looking at a salvage or scrap value. So again, you need to go to your ISTAT appraiser and understand and have a discussion with him exactly what you're looking at and what sort of valuation is most appropriate. But we're here to talk about aircraft as investors. I've got a little chart here showing the market value. So that's the change in a transaction value over 25 years of an A320 or an MD-80 there in gray. It could have been a 737. It would be similar. And you'll see the curve, the peaks, sort of peaks and troughs of the curves which go through the business life cycle. So it's fairly stable during the 90s when there is there's relatively high inflation, certainly relative to today. So inflation is good for aircraft values. And there was a boom time and growth period for aviation. As you see in the middle of the chart, the values drop off. That's an impact of 9/11 and SARS and the downturn that was at that time at the beginning of the 20th century. So you can see the impact of aircraft being put on the market. So as an aircraft investor, you need to understand that there is a cycle to aircraft values. You could be in the game for the long term. If you're looking to selling in a distressed environment is likely to be painful, but it is an opportunity for many financiers and lessors to start to acquire aircraft, so they will make the most of the distressed environment to position themselves as we come out of the environment. So those sort of peaks and troughs are something to be well aware of, but the success of the A320 is certainly something, and again, driven by its success and its market base, is something that for an investor should give confidence, and as you can see here, gives the aircraft a better residual value or market value compared to less commercially successful other aircraft. If we look forward, one doesn't project forward typically the state of the market. So you set a benchmark stable environment, and that's a basis for a base aircraft value. And that is something that an appraiser will forecast. So here I have a forecast of an A320neo. It is that line is the average of 5 appraisers. As OEMs or lessors, you would typically take a basket of appraisers and take an average. You can just see the variation of that A320ceo over its 15 years of its life and how similar it is by the end of the life. But a 3.5% depreciation a year, which is what you see there, is about as good as it gets in terms of depreciation policy. And those assumptions include an annual inflation rate. So as we get on, just something to highlight, looking at the changes that have taken place between a number of appraisers before the crisis and to the end of last month, and how they've changed. So we have a basket of Airbus and Boeing new aircraft on the top part of the chart, and Airbus and Boeing, the most popular, most common used aircraft, and I've taken 10-year-old aircraft, and you can see a heat map for the impact of values due to COVID. The new aircraft base value, so it's the long-term stable view, hasn't changed. It shouldn't change because these aircraft are at the outset of their economic lives, at the outset of their life cycle. So the steady state shouldn't change. Clearly, the distressed market has had an impact on market value. So you've seen that the market value of these aircraft has dropped by on average 6%. And as the market grows out, that market value will change, and we look forward to it matching and even being higher than an aircraft's base value in the boom times. If you look at the used aircraft, and much more volatility. So your aircraft that are typically 10 years old. Again, these aircraft are successful members from Boeing and Airbus, but nevertheless, there are new aircraft have come in as replacements, so there is much more volatility. The base values have dropped about 10%, and the market values on average here 26%, and that's because of the state of the market. And that's due to, in the current crisis, there are a lot of aircraft stored by the airlines and the lessors at the moment. And as the market recovers, so that amount of the numbers of aircraft stored will decrease, and we would expect to see the market values recover. So during an aircraft life cycle, as residual value is clearly an important part of the number that you put into your financial model at the end of it to see will determine how profitable the transaction has been. The residual value should take into account some of this volatility and the position that an aircraft is in its product life cycle. So just as an multiplier, this is a chart that my colleague Paul Myers showed. And as you get into the secondary market, as aircraft are required to be maintained, certainly later on in life, there are opportunities, particularly with the successful Airbus aircraft, to convert them to freighters. And we're seeing a takeoff of Airbus freighters again. And again, at the very end of their lives, the parting out and the recycling of aircraft is an important element to consider. And all of these are, again, opportunities for a wider Indian aviation market. So to conclude, very good opportunities. The business development, business opportunities is developed with leasing as an enabler. There are large numbers of used aircraft transactions to which we require the appraiser community. Remarketing is best done where you have aircraft that are versatile and have large operator bases. And again, will drive an aircraft. Your depreciation is best at the beginning of an aircraft program. It will be steeper towards the end of an aircraft life cycle. And that's where aircraft life cycles and values are interdependent. And on that note, I will end my fairly short review. Thank you. Back to you, Madam Agarwal.
Thank you so much, Mark. This is, I don't know where to go and where to begin to conclude what you've said, but I have, for instance, really benefited from what you have said, and I was almost wafted into a world of a new entrepreneurial spirit, which would take up aircraft leasing from India and the takeaways from it. So I'm tempted to open my own leasing entity in GIFT City. So the point that you made, which was that there are different life cycles, or there is a mismatch between the market-based life cycles and the product-based life. And even within a product's life, you could have certain milestones or breaks, important breaks of remarketing, which need to be taken on board. I think for me, that was a very, very valuable aspect to take on board. And also, I saw from your thing the very interesting shift that we could see in the used aircraft market just in the year 2020, where you had shown an important chart a tabular statement, and you could see a certain pattern in all the earlier years. But the moment you come into a year where exogenous factors exogenous to a lessor or an airline or the entire aviation sector are concerned, you suddenly see a recalibration of how you are managing your assets. And so I would read that flexibility in your own portfolio management is really vital going forward from there. Plus, having a deep interest and continued monitoring of how the asset values are changing for the aircraft in your portfolio, and the need for having standardized valuations, as you mentioned, simply so that the marketability of your assets continues to be ensured. So I'm not going to go into a huge, big conclusion on this. I think I will let the listeners take away their products. I have taken a huge amount of notes, and I'm sure that we will share them and discuss various issues that arise from it. I know we are running late in time, and my apologies to my dear friend Mary Lou Bilavla, who's been very patiently waiting for this, and she's going to kill me for this, I'm sure. So Mary Lou Bilavla, so thank you, Mark. And Mary Lou Bilavla is a partner with Wadia Gandhi and Company. She is a senior partner, and it would be fair to say that she has set up the aviation department in the company since 1999 and has been the driver, the brain, the motivator in the growth of the aviation department in that company. She has been practicing aviation law in India since 1994 and has advised foreign lessors on the first leases of aircraft that entered into India with the private airline operators as well, and also on the first repossession actions that were initiated by foreign owners or lessors of aircraft held in India. So she's literally a pathbreaker, and kudos to her for jumping into fields which no man has gone before. So she has also actually assisted foreign lessors and owners and financiers in making representations, taking up issues with the government which are policy related or need a policy reform. She is she's ranked in band 1 continuously from the time Chambers and Partners Asia Pacific introduced aviation rankings for India, and is named in India Business Law Journal as one of India's top 100 lawyers in 2020. I can also add that we worked with her very closely on formulating domestic law, domestic regulations, and policy aspects. Obviously, it's a very difficult area to manage, and so we work to further the system. Over to you, Mary Lou.
Thanks, Vandana ji, and welcome everyone to this presentation. I've heard everyone being very gung-ho about how to finance, how to bring in aircraft, and unfortunately, I'm the one who has to speak on, how you have to take it out and how you can take it out and how the laws support you or don't support you in this regard. So we have seen a sea change actually in the way the law has moved from, the time the first leases were entered into with private operators, when the open air policy was announced in and around 1992. And we did have some airlines who went into insolvency and had issues in 96, 97, and it was a nightmare taking out aircraft at that time. And because our Indian legal system and courts have a severe backlog of cases, so it just takes a lot of time to get your matters heard and a final decision to be taken. In 2008, India, did accede to the Cape Town Convention, but the changes in law to bring about the enforcement of the convention really only started in 2015. So before that, in and around 2010 or 2011, again, we had a situation with one of the airlines having, difficulties, and it was extremely difficult to take the aircraft out. I understand that even today, some of those aircraft are here in India because, the earlier regime of laws would have applied, and therefore some of them may still be stuck in India. But in 2015, the first amendment was introduced in our aircraft rules, to actually acknowledge the rights given under the Cape Town Convention to the IDERA holder. And so I'm going to now, take you through how the Cape Town Convention, India's accession to it, and also the manner in which we have been implementing it has become a game changer. It's reduced the risk for owners and lessors and has considerably shortened the time within which they can take out their aircraft. Next slide, please. Okay, so the convention was signed in 2001 at Cape Town, and the purpose was to protect international interests in mobile equipment of high value. Aircraft fall within this category, and the convention covers it. So and since this is the agenda for today, I'm going to deal with the convention and, aircraft objects, which includes airframes, aircraft engines, and helicopters. The convention, in connection with the convention, the protocol was also signed. The protocol, next slide, please. Again, which deals specifically with aircraft objects, airframes, aircraft engines, and helicopters. The protocol and convention have to be read together. And if there is an inconsistency between the two, what the convention says is that the protocol will override insofar as it relates to aircraft objects. Next slide, please. Okay, what is important to understand about the convention and protocol is that it applies when the debtor is situated in a contracting state. So India is a contracting state. And what is not relevant is where the creditor is based. So in respect of transactions which you enter into with an Indian lessee, an Indian borrower, the convention and the protocol would apply to this transaction irrespective of where the creditor is. Next slide, please. One of the important parts of the convention or provisions is for setting up an international registry where interests of the creditor in respect of aircraft objects is registered. And while I'll take you through that in another slide, what is important there is because you register your interest, it serves as public notice of your existing interest in the aircraft object. Registered interests have a priority over non-registered interests, and therefore it is extremely important when you want to avail the benefit of the convention and where it does apply that you register your interest. Next slide, please. Okay, so like I said, I'll take you through some of the provisions of the convention and protocol. Unfortunately, I can't take you through all of them because I've been given a very small time slot, and lawyers by nature are verbose, and at the outset I have to cut it down. And also this is a topic which has a lot to be spoken about or discussed, but I'm going to try and keep it really short. So the important or let's say the ones which I'm highlighting today is one about registration of an international interest. And you can take search of the international registry to ascertain whether there is any other interest which has been registered in respect of that particular aircraft object before you enter into a transaction which relates to the object, and that is a public notice and protection for anyone who wants to create a subsequent interest in the asset. The other provisions which are very important deal with remedies in the case of default. So where the convention applies and the debtor is in a convention country, then under the convention there are specified remedies for recovery of possession of the object. Now, why that is very important? Because different jurisdictions may have different laws in connection with what your rights would be in the case of a default. But here the convention and the protocol itself sets out certain remedies which are available to you. Of course, I will come to the next part of it where contracting states may have to put in place domestic legislation to give effect to these provisions in the convention, particularly where local law is contrary to what is there in the convention, because the principles are that if under Indian law is that if the convention has conflicting provisions with domestic law, then domestic law will override. So coming back to some of the remedies, the lessee, the lessor or the creditor can apply to the court for speedy relief pending the determination of its claim, including to get possession, control and custody of the asset in the shortest possible time. Next slide, please. Deregistration and export is extremely important in the context of aircraft. All aircraft are registered with the the national registry where the aircraft usually is operating with the airline. We have had a lot of difficulty prior to these amendments which came in between 2015 and 2018 in deregistering and exporting aircraft. In fact, in 2015 we were involved in a case where India had of course signed up and acceded to the convention but had not yet put in place laws. But because we had acceded to the convention, the lessee and the lessor had executed the IDIRA. The lessee did not abide by it in the case of a default and refused to deregister. The DGCA did not deregister the aircraft despite the lessor approaching the DGCA. And in fact, the lessor went to court at that time to ask the court to require DGCA to deregister the aircraft. And it is around that time that the first amendment in 2015 came into the aircraft rules, which recognized the rights of the IDIRA holder. IDIRA is an irrevocable deregistration and export request authorization, which is issued by the debtor in favor of the creditor. So in that case, the airline had executed this document, but because India had not at that stage put in place any laws to enforce the convention, the airline did not comply with the request, nor did the DGCA. But the court in that case still honored the provisions of the convention and directed the DGCA to deregister the aircraft. So that was a very proactive approach by the court. And in the meanwhile, the law was amended to recognize the IDIRA and the rights of the IDIRA holder. After that, I'll get to the other rights before I come to what India has done. The other important provision in the convention and protocol is with regard to insolvency, because the laws of most jurisdictions, including India, do not allow a creditor or a lessor to take back their asset once insolvency has commenced. And the issue which then arises is your asset is lying with a company which has gone into insolvency. The insolvency process is a long process. You do not receive rents in the meanwhile. And importantly, also, the lessee may not be in a position to maintain the aircraft properly at that time. So the protocol provides for the right of the creditor to recover possession of the aircraft within a stipulated period. And the insolvency court is, as per the convention or the protocol, bound to comply with this strict period to return the aircraft. I come to the next, which is choice of law and also jurisdiction, which is not mentioned in the slide. The convention gives the parties the right to choose both the law which will govern their contractual rights under the convention, as also the court which will decide or determine their disputes, irrespective of whether either of the parties otherwise falls within the jurisdiction of that court or whether that court has anything to do with the transaction. Next slide, please. So I think what is important for us is to see, while the convention has all these protections, India has acceded to it. What has India done as of today to give effect to the convention and the protocol? Because that is the most important for us. It's important because, one, the risk factor comes down considerably for a lessor and a financer where the convention is being applied properly. It also therefore reduces the cost of financing for the airline. Like I said, India acceded to it, the convention, in 2008. The first amendment was brought in 2015. What is important to note is that when India made its declarations under the convention, India did not state that it will not apply to internal transactions, because that option is available under the convention to make a declaration that the convention will not apply to domestic transactions. But that was not done by India. Therefore, our view is that it would apply to internal transactions and to domestic transactions. And why is that important for us? Because today, if we are talking about transactions which will be entered into, from a lessor in IFSC or a creditor who's there with a debtor or lessee in India, then we would like that the convention would apply to such transactions so that the lessor or creditor could take the benefit of the convention and protocol for the purpose of recovering possession of their asset speedily. This is especially important because some of our Indian laws, like Securitization Act, in fact, do not permit the banks and financial institutions who fall within, the purview of that act to take physical possession of aircraft, whereas that's permitted for other assets, without intervention of court under certain circumstances when the debtor is in default beyond a certain limit. Okay, next slide, please. So I'm now going to deal with some of the declarations made by India under the convention, not all, again, because of the lack of time, which may be those which are more relevant for just now. And so India made the declarations and then was required, I would like to say, to put in place domestic laws to give effect to those declarations and the convention and protocol, simply because in certain cases our domestic laws are at variance with what is there in the convention and also the declaration which has been made by India. So to start with, the most important to my mind, and which has been very, very helpful for us recently in 2019 when the lenders and creditors had to recover possession, was the provisions dealing with the IDRA. As I said, it's the irrevocable deregistration and export request authorization. So in 2018, so first there was an amendment 2015, 2018 again, the government of India actually introduced a very important standard operating procedure, which they called it under the the civil aviation requirements, and also amended the aircraft rules. And that was important because in keeping with its obligation under the protocol and the declaration made by India, they stipulated time frames within which the government of India would honor the application of the IDRA holder to deregister and export the aircraft, and would assist in this regard. Next slide, please. So here what was important is that the SOP and the which the government issued said that they would deregister within 5 working days. Of course, it was subject to certain provisos, and these were also in keeping with the declarations made by India. So the provisos which were there were not contrary to the provisions of the convention and protocol and also the declarations, and those were that outstanding dues in respect of the aircraft would need to be paid. Safety laws would have to be complied with. Next slide, please. And that the cancellation of registration would not affect the right of government agencies to recover, to detain the aircraft to recover taxes or any amounts due in respect of the, to a service provider who had possession of the aircraft at that time and whose dues were not paid. What was a very important and helpful amendment there too in the SOP was and which also got reflected in the Airports Authority of India regulations, was that the outstanding dues in respect of the aircraft would be limited to 3 months immediately prior to the date of declared default. And declared default was the date of filing of the IDRA for enforcement with the DGCA. Now, previously, we were faced with situations where the aircraft had been detained for dues which went back for several years. In fact, the aircraft was allowed to operate without the authorities collecting the dues at that time. And then at the time when the aircraft had to be exported, the lessor was hit with all those outstanding dues. But here it got restricted to 3 months prior to the date of declared default. Of course, we did, even though these amendments were carried out, we did run into some hurdles with regard to other taxes for which the authorities were not able to quantify the, and to put it, very frankly, it was GST which could not be at that time, they could not ascertain the liability of the GST on the outstanding lease rentals. And therefore, what they were looking for was for the lessee to confirm what the outstandings were and for the lessee to give certain undertakings, which is not practical or feasible at the time, when you're actually filing proceedings against the lessee to take out your aircraft. The lessee is in an insolvency situation. So that's not the time they're going to be forthcoming to give you all or be in a position to give you all these details. But The government of India is working very hard to put in a process even for this, so we don't face those issues in future. But having said that, when these issues did crop up, we had approached, Vandana ji, and she was extremely helpful in trying to resolve this. And I must say that in 2019, which is a far cry from what happened earlier, from the date we actually filed for, deregistration of the aircraft to the date when we actually exported the aircraft, despite all these hurdles which I'm talking about, we managed to export the aircraft within about a month from the time we started the process, which is fabulous, and I'm told it is even good by the rest of the world standards. Okay, next slide, please. Okay, so India has also made a declaration that it would provide speedy relief in the case of a default, and that relief is in the form of possession, control, custody of the aircraft. Now, so far as this declaration is concerned, the laws have not yet been amended to give effect to this declaration. And therefore, today, if you have to approach a court of law for such a remedy, it's possible that this would not be achieved within these timeframes. Again, we have been in touch with the government of India, and they are working on laws to give effect to this declaration. Next slide, please. This I've touched on earlier too. So the declaration made by India, and this again this was a right given in the convention itself, where the contracting state could make a declaration that the priority of a registered international interest would still be subject to certain non-consensual rights, such as liens of airline employees for wages from the time the declared default, liens of the government authorities for taxes, for amounts due on the aircraft, liens of repairers where the aircraft continues to be in their physical possession, because here some workshops are trying to, or did try to take the view that it would apply even when it's not in their possession. But I beg to differ in that view, because it's very clear that the declaration made and also the convention would contemplate when a lien means it's in your physical possession, and this right cannot be exercised when it's not in your physical possession. So I'm hopeful that this too will get resolved by the government issuing appropriate clarifications in this regard. Next slide, please. This too was a declaration made by India when acceding to the convention, and it's in line with declarations made by other countries that it doesn't affect the right of the government of India or any entity of an intergovernmental organization to detain the aircraft for non-payment of amounts owed to the government of India. And this has been factored into the SOP, where authorities have to provide their outstanding dues, the list of dues, as soon as possible, as soon as DGCA puts it up on their website and issues them a notice that an application has been made to enforce the AGIRA and to export the aircraft. Even they are supposed to revert in a time-bound manner with their outstanding amounts. As I said, we have faced some issue with some authorities, but I'm hopeful that Vandana ji and the government of India will do their best to address these issues as soon as possible. Next slide, please. This is an important declaration made, for which we are really looking for an amendment to be made to Indian law as soon as possible, because as it stands today, if your airline goes into insolvency, and I mean if the insolvency petition is admitted, then as per section 14 of the Insolvency Act, there is a moratorium, and the lessor or the secured creditor cannot take their assets back. India had declared made the declaration that the creditor would be permitted to get possession of the asset no later than the earlier of 2 calendar months from the commencement of the insolvency or the date on which the creditor would otherwise have been entitled to the asset under the agreement. But this has not yet been carried into effect under Indian law. So as it stands, Indian law will still override. But again, the government of India is working very hard to put in place the required laws to give effect to this declaration. So like I said, it's important to note that from 2018 onwards, we have been moving in the forward direction. The SOP and the existing amendments to the law have been very, very helpful. More than that, the government authorities have been trying to assist us wherever there are, gaps in the law. But this informal sort of assistance does not always help, and you necessarily would need amendments to be carried out in the law. We are hopeful, going by the discussions we've been having, that this will all come into effect very soon. But I'm repeating that the recent experience in 2018, and that is of course before actual insolvency kicked in, was very good, where I'm told about 95 or maybe more, Vandana ji will be able to confirm that, aircraft were actually either exported or released by the lessor, and they were able to get back possession of their aircraft and deregister it in record timing. Thank you, and I'm happy to answer anything else which you want in the question and answer session.
Thank you, Mary Lou. I have never seen a lawyer make things so easy before. So thank you for reducing law, very important law, to common language so that our budding lessors from India can have a detailed assessment of how they must be aware of various aspects, not of Cape Town Convention and Protocol, and the relationship with our domestic law insofar as they will be leasing out their aircraft into India, but equally for bringing out that they would also need to be aware of the fact of their other offshore or overseas clients, leasing clients, whether they are situated in a contracting country, or whether even if they are not situated in a contracting country, their domestic law is providing the kind of provisions that can reassure repossession for the aircraft for them as and when needed. So in a timely manner, the way the Cape Town provides for all the contracting states. So I'm happy to note for all the lessors, budding lessors, as well as other overseas lessors, that, as Mary Lou said, that most of the exports happened within a month of the IDERA being invoked, or not in all cases IDERA was invoked in 2019, but there were mutual terminations of the lease agreement as well. In all cases, the export or the releasing happened within a period of a month. And we're talking about 99 aircraft being deregistered by the DGCA within a period of 5 days, no more than 5 days. So that is an enormous amount of confidence to overseas lessors as well as Indian budding lessors that even where an insolvency is concerned, after all, the 2019 airline seizing operation was a case of insolvency. And yet, despite the challenges that were there in matching the provisions of domestic law with those of the Cape Town Convention, we were able to resolve it in a manner that did not invite the wrath of the courts on us, and yet we facilitated in a manner that helped the lessors and the lessees. It helped the lessees, I say, because of what has been said earlier as well, that any regime, legal regime in India, which does not minimize the risk associated with the repossession, will be a cost to the lessee, every lessee going forward in India. That is, it could be, the best of lessees, which is not financially insolvent or has a very healthy sheet. Even then, some element of risk is priced in because of the system in place. So that's one big takeaway from what Mary Lou has put forth to us. So the second big takeaway to me was the fact that although that it is the foresight of the Indian negotiators who acceded to the Cape Town Convention, we did not even envisage an aircraft leasing system at that time, which would flow from India. But we did not take a derogation on or make a declaration that Cape Town Convention would not apply to internal transactions. So for instance, China has taken that position, but India at that time did not take such a position. And for the internal transactions as well, the multilaterally agreed provisions would apply, and this would have a valuable plus for Indian lessors as they engage in the resale market and so on and so forth, or undertake operations with the rest of the world, quite apart from doing so with India, with Indian airlines as well. So, there are important takeaways that come from this foresight. The issue of international registry and the denomination or placing of national interests, to me, is another important factor. And I would urge our lessors to also take into account that all the priority interests, all the interests can be registered for ensuring a priority handling at any stage of distress and so on. We do not yet have a domestic registry for those who do not wish to enter into the national registry for registration of their interests in the international platform. But I assure you that for the last 3 months, we've been working on it, and I'm sure that we will see good light at the end. We can see the light at the end of the tunnel, and I'm sure that others would also see it soon. We have also gone recognizing one important point is that while the Cape Town Convention looks at aircraft object and classifies aircraft, helicopters, or engines, in the domestic law that we have been putting in place through the GIFT City, you will observe that the October definition goes beyond this and covers all types of aircraft equipment that can be leased for leasing out purposes. It declares them as financial activity. And similarly, the regulations also then take in a wider definition. And the domestic law for giving effect to the Cape Town Convention provisions that India has accepted, hopefully will also, I mean, the way we are drafting it, it will also take that into account. So I can only say that as far as the legal regime is concerned, the government has been taking, again, a very proactive and a more wider perspective, a more futuristic perspective to how we implement this important requirements or issues of compliances to the international treaty, and all the lessors, I'm sure, would have taken good note of what has been said. Now, I would move, thank you, Mary Lou. I'm going to move into the last part, which is the way forward. We've overshot our time by half an hour. So my apologies to the audience and to the speakers as well. I know that there are, when there has been such a rich discussion of all the nuts and bolts that are required to be set up, required to set up leasing business as well as incorporation of leasing entities, we could not have kept to the time schedule. And you know, I would have loved to continue on and on and on with all the experts who have shared such valuable details of this business, which is it's not easy to put all that is required into the time frame that was given to them. And my compliments to all of them for having done so. But you know, the fact of the matter, to put it in a nutshell, remains that you know, India does have all the right ingredients, whether we see it from a consumer point of view or from a producer of services point of view, to put in place the aircraft leasing into practice. And that is coming out very strongly from the fact that already we have 12 applicants who are in different stages of establishment, and 2 of them, which is Acumen Aviation and Viman, have already registered themselves, got the approvals for registering as leasing entities. We heard, our sessions were mainly focused on the financing aspects. And again, we saw, you know, everything that impinges on finance, whether it's forecasts, market forecasts, whether it's valuations of assets over a lifetime of the asset itself, how such valuations will relate to the business development of a lessor, how these will relate to market developments which are global or which are more regional. Then we have gone from different aspects of tax structures and how the Indian tax structure is now more competitive than anywhere else in the world. And I'm not being you know, blind when I say this, or blind by my love for this business of making India a leasing hub. But the numbers speak from themselves. The interest shown by all the experts also reveals, plus the queries that we keep getting, plus the hundreds of people who registered, over 700 registered. And we have, throughout the day, I've been monitoring the total participation as well. And it's really, really phenomenal. And my compliments to all those who have seized this opportunity to learn as well from this masterclass that we have held. Then all the tax-related regulations, but also all the non-tax changes that have been made to make India a viable place for doing business. Then we looked at so many you know, we were exposed to a rich complement of financing structures by Patricia and by Mark and Paul and Geeta ji, by Ashwini, and just about everybody. I don't intend to exclude names, but just to say that we have gone through a whole gamut of possible financing structures, a whole gamut of issues to be taken into consideration so that the credit risk management can be done, the new insurance products that could be brought into play, so that going forward, the lessors from India have something unique to offer, and they can seize this particular opportunity, which is presented by various markets. Frankly, aircraft are available at slightly lower valuations. So my sense, as I said, was, why don't I also become a lessor going forward? But that's just in a lighter vein. But at the end of the day, I would like to just conclude by saying that yes, the legal regime arising from the Cape Town Convention and protocol is going to be put in place by government. We are, at the final stages of drafting the domestic law. It's a very futuristic law. The online national registry of aircraft engines and lease parts is to be set up again. We're pretty advanced on that. There are certain actions which are going on which will help the lessor, bring in the aircraft, for instance, physically to a non-IFSC location, but which is aligned to that in a customs bonded warehouse or an airport where there will be ease of operations from there. The exemption which is needed from physical import and storage within the IFSC SEZ for the larger products. So there are a couple of other small issues which we are still addressing. We are, on top of the situation. It's not as though these are a long-term perspective. These are, being taken up on virtually a daily basis. But having heard all of you today, I can really say that not only is the IFSC authority, which is a single, unified, unique regulator, committed to helping and to drawing up all the necessary regulation in concert with industry, all the relevant ministries as well, whether it is Ministry of Civil Aviation, Ministry of Finance in all its wings, Ministry of Corporate Affairs, Ministry of Commerce, which handles the SEZ and similar issues. So we have all been more than willing to listen and to learn from the experiences that all of you have shared and to move quickly forward. That's that much we can assure you. Of course, what is now needed is for the principals to figure out the right business models to set up shop very quickly in the GIFT City IFSCA. And I did hear one of them give a strong promise of the first transaction to be taken up the next month, by the end of the next month. So I shall be all agog to follow that through. And I assure you also that the government will ease whatever needs to be done with the minimum changes in the regulation and with the maximum of ease in transacting your business going forward. So I wish all of us the very best for the future. I know that it has been a very cooperative endeavor where from the world, all of you here, as well as others, have been working with us. And I cannot thank you enough for the time, the effort, the energy that has been, and the expertise that has been brought by all of you to make this new business possible in India. And I firmly believe, and I am sure that many of you would also share that belief with me, that it does make business sense to work from India in the GIFT City the way the whole thing has been structured. So the future of aviation leasing is in IFSC GIFT City. I thank you all for your kind attention and participation, and look forward to working with you more and more and more. So the chapter doesn't close here. We will be back in this mode or in other mode to carry forward this work further. Thank you. Thank you all. Thank you to Vicky. Thank you to Boeing, to Airbus, to NIIF, to GIFT City. And of course, I'm a compatriot with the IFSC authority. You know, we are the two governmental arms. So I do not say that they're last or the least. So they are as much important to this venture as anybody else could ever be. So thank you all very much.
Thank you.
Thank you, Vandana ji. God bless.
Thank you.
Thanks.
Thank you all.
Thank you.
Thank you, everyone. Thanks.